everybody. Hope you're doing well. Hopefully you can hear me. It does look like that's coming through and going through the master. So if you can hear me, let me know. I hope you're doing well today. We are going to kick off the Asian Pacific Traders Summit here in just about 8 minutes. Unfortunately, my starting soon right here isn't working so good. It usually is a countdown timer, but right now, well, we got about 8 minutes to go. So as you come in, make sure to say hello. Like and subscribe to the stream. It's good to have you. I hope you're doing well. Let us know where you're from too. I'm very, very curious. Right now we're in Salt Lake City, Utah, Taylorsville, Utah. It's about 7 p.m. at night. So welcome. Anyway, we'll be kicking off. We've got a great lineup today. We're going to be kicking off with Daryl Guppy. He's going to be talking about, in addition to some other things, the new ATR stops that are included in MetaStock. We've also got Sagar Nandi, Stuart McPhee, and in general, a really good lineup. So I'm going to turn back on the music. We're going to start in 7 minutes. See you in a minute.
To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right. Good morning, everyone. To most of you, at least. Maybe good evening. Or both sides. Yep, I can hear you. Hey, everyone on YouTube as well. Perfect. Thanks, Jeff. All right, thanks again, Jeff. And hello again, everybody. Good morning to most of you. Good evening to some of you as well. We're excited to have you here for today's APAC or Asia Pacific Trader Summit. We have a lot of great speakers that are joining us today to show many unique different trading strategies and just to talk about the market. I think we're in for a really great day of presentations. Before we jump too far into things, I do just quickly have to go through this legal disclaimer. This demonstration, it's designed to instruct you on using MetaStock and the accompanying software plugins, and it is not a recommendation to buy or sell, but should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Also, for the event, we are being sponsored by the CMT Association, so I just wanted to give a quick thank you to them and show some of their details up here on the screen. They help promote a lot of our events. They're a really great organization, and you can learn more about them at the website that you see down there at the bottom of your screen. Also, MetaStock is, of course, hosting the event today. So a lot of you are already familiar with MetaStock. If not, you're going to be seeing that, most of all the presenters, or I should say, actually all of the presenters today utilize MetaStock for their analysis. And we are running some promotions throughout the event that you can be on the lookout for. And one of those is being able to sign up for a trial where you can get 3 months for the price of one by visiting metastock.com/APAC-Summit 3-for-1. So just something to be aware of later on in the day. I'll go into a little bit more information on that. For our first presenter today, we're really excited to have Daryl Guppy on with us, and he's going to be showing some of his trading techniques and using his ATR that's recently been introduced into our latest version of MetaStock. He's been in the investment and trading industry for well over 25 years now, and he's quite the master at it, if I do say so myself. And with all of that said, Daryl, I'm going to go ahead and just hand things right off over to you.
Thank you very much. Let's do.
Great. Yeah, let me just
and see how we go. We're still waiting for that screen stop. You need to throw it to me.
Yep, just grabbing that right here. We'll make it so you are showing your screen. I'm making you the presenter now.
Okay.
Did you get that pop-up?
Here we go. Show my screen. Yep. That will give us that. I'll just shift this out of here. And, oops, what do we need? We need this. Okay, please confirm that you're seeing the full screen.
Yes, it looks like we can see it says using Traders ATR to select and manage the best trades. And we can see and hear you loud and clear. So I think we're all ready to go.
Excellent. Well, good morning or good afternoon or good evening or perhaps good night for everybody who's tuned in for this particular episode. What I'm going to look at today is a new indicator that's been included in MetaStock. It's an indicator that we developed some time ago and have been using for quite a while. So my presentation today is going to be a bit different to the way I normally work, but I'll try and make it as interesting as possible. So there's 11 issues that I want to cover today. Strategy, trade selection, and then why would we bother using what we call Traders ATR? And how is Traders ATR different from Wells Wilder's application of average true range? Then we'll look at how that's actually executed in MetaStock, how we use it, how we can optimize ATR to take the best advantages of developing trends and established trends. We use ATR often on an end of day basis to identify those trades, but we also apply it on an intraday basis, and that's particularly useful if you're trading foreign currency or commodities. We'll look at some ATR trend breakouts, some combination stops, the way that we can use ATR with combination with other indicators to verify both entry and exit conditions. And then, time permitting, I'll look at some current examples that we were looking at selected out of the market yesterday on markets close. But the first thing we need to work out is, where are we? This is a difficult market. This is a market that is causing more trouble for more traders than I've come across for a very, very long time. S&P 500. The key factor we're looking at is the development of this long-term head and shoulders pattern. That sets the environment that we're in. Now, my preference, for better or for worse, and at the moment it's probably worse, is I prefer to trade from the long side. And all of my examples today will be from the long side, although I'll throw a couple of short side examples in as well. So long side traders, in the current environment, we're still waiting for the market to fall towards its target level. And we're about to take the second leg of that fall at this stage. This is a classic head and shoulder pattern. A is the left-hand shoulder, B is the head, C is the right-hand shoulder. Measure the distance between the top of that pattern and the neckline, project it down to give a target. One little problem here, and that is that in broad index markets, that's the first target. And if you cast your mind back to 2008, I know that's a very bad experience, we don't want to be there, but we need to remember it. If you cast your mind back to 2008, that was also a head and shoulder pattern, and the target that was achieved was double the initial downside target. We're not saying that's likely to happen in this market, but it's something we need to be aware of. Our environment is bearish, and I'm trying to trade from the long side. So ATR fits into my particular style of trading. So what's that? Many years ago, before I started trading, amongst other things, I drove what's called road trains in Australia. Now, road trains are a single prime mover towing 3 trailers. There are a total of 62 wheels in this combination. It was very difficult to locate when you had a flat tire. You might have a flat tire in the front trailer or on the inside rear trailer. The longer the combination, the more difficult it is to identify where you're making a mistake, where you've got a problem. And that really summarizes my approach to trading. And that is, I prefer simple and straightforward solutions rather than complicated solutions. If I'm riding a bicycle with 2 wheels, then I know when I've got a flat tire and I know exactly where it is. If I'm using a trading approach or an indicator, I want an indicator that gives a clear, unequivocal signal. And that's where ATR comes in. But the key question is, where does it fit into the trading process? Now, this is the process I use. I start with a broad search. Now, they may be a collection of the search results from a moving average crossover, from a rate of change analysis, from a room, for any type of search that you want to do. It doesn't really matter what search technique you prefer to use, because we all have to go through the same process. And that is that the initial search will generally give a very broad or large stock pool. Our challenge is how we reduce that stock pool, how we filter it or funnel it until we've got just one or two or three or four stocks that give us the higher probability of success for the trading technique we want to apply. And again, it doesn't matter what trading technique you want to use, whether it's a breakout or joining an established trend, you're still always in this process of filtering stocks down to a final one or two candidates. Now, the methods that I use, just so we're clear, so we know where ATR fits into this structure, we use our initial search results based on a broad search, for instance, MA crossover, rate of change, etc. Then that pool of stocks, I apply a Guppy multiple moving average behavior analysis. I want to understand what the market's telling me about the potential for either trend change or trend continuation. Preferably, I want to confirm those candidates with a trend line breakout. Why? Remember the road train. If I've got a whole lot of separate bits and pieces, it's more difficult to work out the best time to make a decision. If a stock is not compatible with a simple trend line, then I put it to one side, because what I want is that clear and unequivocal signal that yes, this is a good entry opportunity, or yes, this is a good opportunity to join an established trend and trade for that trend continuation. Then, and this is the final step in stock selection, I'm looking for traders' ATR confirmation and entry management. I'm looking for that situation where I'm applying ATR to decide both whether the entry is justified, the price at which I should pay, and more importantly, where I should set the stop loss. So that's where the combination comes together. Now, my focus is not on GMA and all the rest of it, but I'm going to look at it very, very briefly for those who are not familiar with it. The Guppy multiple moving averages consists of two groups of moving averages, a long-term group, shown in red in this display here, and a short-term group, shown in blue. What we're looking for is not the point of crossover on the moving averages. That's the least important signal. This is a behavioral analysis of what's happening in the trend. So here we can see the markets preparing to jump, preparing to break out. The wide separation in the long-term group tells us that there's a high probability that this rally will be overwhelmed by sellers. Wide separation tells us investors are still committed sellers. Here, we see that the long-term group is beginning to compress, beginning to turn up. That's showing us a point of agreement amongst investors that this stock may be undervalued, and a point of agreement amongst the short-term traders that this stock is undervalued and it's likely to break out. Once we get this collection, this crossover of the two major groups of averages, short-term and long-term, then we're really ready to jump into a breakout and a trend continuation. If I'm looking for breakout stocks, this is the GMMA relationship, this window of opportunity that I want to see developing. The second step, of course, is confirmation with a trend line. And that relies on nothing more complicated than an eyeball, your eyeball. It doesn't matter what techniques you use, what technical scans, what mathematical models you use. In the final analysis, every decision comes down to you looking at a chart. What is mathematically correct is not necessarily the best possible trade. So I'm looking for this confirmation. GMMA gets me into the situation. It says, yes, there's a high probability of a breakout developing. Trendline analysis tells me, yes, this price has closed above this long-term downtrend line. Therefore, stocks are likely to leak. We're likely to see a rally breakout or the beginning of a long-term trend. And you can only identify that by eyeballing the stocks, by seeing what's happening. And if you can't place a valid trend line, then we ignore that stock. And we ignore it simply because it's not a clear, verifiable break. I want something that's indisputable, that's unequivocal about what's happening. No room for maneuver saying could be, maybe is, maybe not. This is definitely a stock ready to jump, which takes us to how we apply ATR in this environment here. So what's the problem? What's the problem we're trying to solve? What we're trying to do is to find a mechanism, an indicator, a process that identifies when price moves are out of the ordinary. Now, that doesn't necessarily mean larger than normal. It just means moving out of the ordinary range of price movements, because that might signal a change in the trend or the end of a trend. So it begs the question, how to determine if a price move is beyond reasonable or normal volatility? And the answer to that is Wells Wilder's average true range calculation. It's one of the best calculations that we've come across, and it's used all of the time. So the key question we're trying to answer, how do we know that we can ignore this trend break, but we have to take notice of this trend break? And that's not retrospectively, in real time. How do we know that we can ignore this trend break because this is likely to continue, but we have to take notice of this trend break here? That's the key question we're trying to answer with the application of traders ATR. Now, why do we use it as traders ATR? First of all, because I want to distinguish the approach we use and the layout we use from Wells Wilder's standard ATR display. The standard ATR display is shown in the upper chart here, and it simply plots the values of the ATR calculation. That's good. It's giving me a clue as to what volatility is there. However, from a trading perspective, it's not particularly useful. How do I use that? How do I apply that in a trading situation? And the answer is what we call traders ATR. And it's a ladder style of display. And that is, we only use higher values. And I'll explain that in a moment. But as you can see from this lower chart, when we modify the display of these ATR values, then it acts as a stop loss line and helps us to distinguish between significant price moves and insignificant price moves. It tells us that we can ignore this dip below a trend line, but we have to take notice of this dip below the trend line. So it's the nature of the way that we display the ATR that provides a whole lot of solutions and opens up a whole range of opportunities. So the ATR ladder, this red line that's moving upwards, the ATR ladder is based on the underlying ATR values. So here's the Wilder ATR value shown in red. Now we notice here that it moves up, then it dips down, it moves up, it dips down, it moves up, etc. So what we're going to do is we plot only the positive value changes. Now, the reverse applies in a downtrend, of course, but in a long uptrend, which is what we're talking about here, we're applying only the positive value changes. So we plot the value of ATR. If that value goes down, we simply move day by day until that ATR value moves up. Then we move the ladder upwards to that extent of value. If the value doesn't change on the next day, we move sideways. When the value changes positively, we move up. We move up, we move up. We have a ladder that follows the price activity using the positive changes in Wilder's ATR value. We ignore the negative value changes. It creates that ladder. So we get a combination where we can use traders' ATR to help us in entries, on breakouts, exits when trends end. So here we're using a short side ATR following a downtrend. Our first entry signal is when price closes above the ATR short value. We can use a second signal, which is when the long side ATR also closes above the short side ATR. That will get you in a little bit later to the trend change. The exit signal is when price closes below the ATR value. That's just a broad look. I want to look at a bit more detail in that as we move along. So how do we set it up in MetaStock? It's a new indicator in MetaStock. You'll find it in the indicator list. Now, because we're using it, our ATR indicator is at the top of the drop-down list of indicators that are available. Here's the key factors. Here's the dialog box. Now, the default settings are 14-day ATR and a multiplier of 1. The default setting for the Wells Wilder ATR display is 14 days. That's the default calculation period. We set the starting point for the calculation. This must be done manually. So in a downtrend, we've got a trend line break that's taken place. That's why that trend line break is so important, because from that trend line break, we can identify where the low was in that trend. Of course, we can also take just the lowest low on the current downtrend. We identify the day, the 15th of the 10th, in this case, of 2021. Now, do be careful, because this default is set at 2020. So you have to make sure you change it to the relevant date, 21, 22, as the case may be. The default is 14 days. The default multiplier is 1 value. Now, what do we mean by multiplier? What we mean is if the ATR value is 0.05, then 1 times value means our ATR offset is also 0.05. 2 times ATR value simply means we multiply the ATR value by 2, so the offset value is 10. If it was 3 times ATR, the offset value is 15. So what we're saying is that where we place this ATR line, it is offset by the value of the ATR. We can call the break either on the low or the close. Our preference is for the close. Calling the break, that means that when prices move or break below the ATR, then the ATR indicator just simply extends to the right-hand side. It no longer reacts to any price moves below that level. Now, we can set that break, that trigger, either on the low or the close. This is on the long side ATR. Our preference for both long and short is the closing price. You can also select, of course, the style. Our preference is red, we are using a heavier weight in these displays because that's easier for everybody to see. So setting the ATR requires you to complete that dialog box. Once it's done, you click apply. There we go. And you overlay with the existing scale. And I'm sorry, I left that particular screenshot off this particular screen. My apologies. Remember, it's overlay with, it comes up as the default in any case. So just select the default display and go with that. And you'll end up with this type of environment. So we're looking at using ATR as a stop line in short-term trends. It's fairly clear and simple. While price remains above the ATR, we're acting only on the close, then the trade remains open. That's even if there is a close below a trend line, for instance, which would normally think us about triggering an exit. But if it does not close below the ATR line, then the trade remains open. If it opens below the ATR line but closes above it, the trade remains open. So this acts as a volatility adjusted stop loss. Wilder's ATR captures the volatility range, the average true range. We take only the positive values and use that to plot the ATR line as a stop loss. We can also apply it for longer term trends. So what I've shown here on this chart is just the 2 times ATR value. This is useful for capturing and defining long-term investment trends. It's not so useful for short-term trades. Short-term trades, our preference is a 1 times ATR line. We're just using the original underlying value. Longer-term trends, 2 times ATR line. That keeps us out of those minor fluctuations and keeps us in the trend. Of course, the downside is that the exit signal will come a little later. And I'll explain in the next slide how we can combine these 2 signals. But the key factor here is that if we were using a 1 times ATR to manage this trend here, we would get a 1 times ATR exit signal here and here and here, even though the underlying long-term trend is clearly moving to the upside. So a 2 times ATR trend line is a more valid exit signal or a more valid way of managing the stop loss and exit in this type of trade. So the combinations of 1 time and 2 times ATR can be very important. And we'll look at that in a bit more detail in a moment. But first, here's how we use it in a short side trade. Our entry point can be taken during the downtrend. We don't try to identify necessarily the very beginning of the downtrend. There's a whole range of other techniques that we're going to apply for that. And we basically take the techniques that we use on long side trading for breakouts and apply them in reverse for short side trading for the breakouts. But here, I want to look at the situation where there is already an established downtrend. And we're worried about whether this point here is an end of that downtrend or an entry point into a continuation of that downtrend. We manage the entry using the ATR as a stop loss point. And that will follow this falling trend until we get a close above the trend, which gives us the end of trend signal, time to cover our shorts. Long or short, the application, the essential basic application of traders' ATR remains the same. But we can modify it, we can optimize it, and we can improve it. But this optimization can only take place if the trade that you've taken is already in profit. There are some other ways to optimize when you're doing a mid-trend entry. But in this case, we're looking at trades that you have already entered and you are an existing profit. Here's our entry point here. The move is up strongly. Do we take an exit at this point? And I'm sorry, the very thick line obscures the close below that level. Do we take an exit here? If we're using a 14-day ATR, then it gives us an exit signal. But we can see, using GMMA analysis and trend line analysis, that this is probably likely to be a false signal. We're deep in profit. We can afford to hesitate because the only thing that's at risk is our capital. Is our profit, not our capital. So we can afford to hesitate. If we adjust our calculation period from 14 days to 12 days, then we get a continuation of the ATR. We don't get an exit signal on this minor pullback. Are we playing around with this? Yes, we are. We are optimizing the ATR calculation period, 14 days to 12 days, to eliminate this false exit signal here and continue with the trade. Now, if we chose to enter here rather than here, then this adjusted ATR would clearly capture the developing trend. So we can optimize, first of all, by changing our period calculation from 14 days to 12 days or 10 days or 16 days. The dialog box allows you to make those changes. It's one of the key advantages of the MetaStock implementation of Traders ATR. The other way in which we can optimize the trade is by changing the calculation value of the ATR. Here, it's exactly the same chart. Here's our entry point. Here's our false exit signal using a 1x ATR calculation. If we change that ATR value to 1.5, 1.5 times the underlying ATR value, then we avoid the false exit signal, and this allows us to continue moving with this developing uptrend trade. The 1.5 calculation moves the ATR value further below the price activity. The optimization allows us to, in some cases, retrospectively apply the best ATR value. If we're looking at an entry in this area here, we haven't made one earlier, then obviously a 1x ATR isn't appropriate, even though we know from the historical development that this trend is continuing strongly. But if we adjust to 1.5 ATR, then we do capture this trend continuation. So again, using the default box, we can change our values, optimize our values by changing the number of periods in the ATR calculation or by changing the multiplier. And that can be in 1.002, 1.05, any multiplication, any multiple of the ATR can be used. So it provides us with a way to optimize the values. Sorry, I'm going back the wrong way there. Provides us with a way to optimize the values to take into account as price has developed. But remember, if you have an open position and you get that ATR exit signal, but when you look at it on the next day, you're seeing that this rebound's taken place, you wouldn't bother getting out. You then go and optimize your ATR values so that you're able to stay within the trend. But, and I cannot emphasize enough, you must be in a profit. You can't do it if you're putting capital at risk. Now we can combine caution in the current environment. For a long side trader, I want to be really cautious about how I enter long side breakouts. I'm going to surrender. I'm prepared to surrender a reasonable amount of my best entry opportunity in return for a higher confidence that the downtrend has ended and that the breakout is not a false breakout. So by combining a broader, longer ATR value and a shorter value, we get a solution that gives us a cautious entry. So defining the long-term downtrend, we use a 2 times ATR value. Now, I don't recommend using 3 times or 4 times or anything above 2 times ATR. We find that 2 times ATR is a very good default setting for capturing most long-term trends. Sometimes you might stretch it out to 2.5, but it's longer term than we like. We prefer 2 times ATR. So what we're doing with the 2 times ATR is that we are avoiding any false downtrend breakouts. It's a coarser understanding of the downtrend. So that means that it takes longer from the very bottom of the downtrend to identify the potential point of a breakout. But when we do get that breakout taking place, it's more reliable. We can be more confident that the breakout that's taken place here, above the 2 times ATR, has a higher probability of developing into a sustainable uptrend. How do we define the sustainable uptrend? We can define that using a 1 times ATR. So we apply a more sensitive ATR value to be able to track the emerging and developing uptrend, because if we're in this, if this is a breakout from a long-term downtrend, which is what we're looking for in the current market environment, then the risk of failure is high. We want to be able to move very, very quickly. I'm going to skip the next screen and go to this one, because this comes into aggressive and cautious ATR entry signals. The ATR crossover, the short ATR and the long ATR, the crossover of those values gives us a high probability entry situation into a breakout. But there are 2 types of entries we can take. The aggressive entry is where we enter on the first close above the short side ATR. The first close above that value gives us an entry signal for the next day. That will deliver some false entries. It will deliver some false signals. It's pretty good, particularly if we combine it with downtrend line breakouts and GMMA analysis, as we originally talked about. However, for those of you who are cautious, the idea is to wait until the long side ATR value moves above the value of the short side ATR line. In other words, instead of acting when a price close moves above the ATR line, we act when the crossover of the long and short ATR line takes place. Entry is taken on the next day. That's a more cautious entry point. Current market conditions, you may prefer to apply this type of entry signal rather than this aggressive one. In a bull market, where there are temporary pullbacks, this aggressive entry, as soon as price moves above the short ATR, is very effective. When we're emerging from a bear market, there is value in waiting for a cautious entry for the crossover of the long-term, of the long side and short side ATR values. We use ATR, traders ATR, for FX and commodity trading, for futures trading. The initial analysis takes place on an end of day chart. The execution takes place on a 5-minute chart or 3-minute or 10-minute, whatever your preferred time frame is. And we apply the ATR value there. Our preference for most currency pairs is a 0.5 ATR, not 1 times ATR, half an ATR. In this particular example, AUD USD, we've got our entry point from our daily analysis. We're entering here. We're using the 0.5 ATR as our stop. It takes us out as soon as there is an intraday move, not a close, an intraday move below that ATR line. In this case, it picks up 47 pips over 50 or 60 minutes. So the ATR, the trader's ATR, can be applied on an end of day chart, and that's what most of what we're doing here, but it can also be applied on an intraday chart to give us good trading solutions. How we apply it, aggressive or cautious, that's a judgment call. Once the trading opportunity is identified, how you choose to trade it, when you choose to enter, that's very much a personal decision. But the ATR gives us the ability to set a volatility-related stop loss. Which brings us to a combination exit. And there are two sets of combinations that we can use for the exit in longer term trends. It's not so valid on short-term rallies, but on longer term trends where we have a bit more room to maneuver, we're already sitting on an open profit. We'll use a combination of 1 times ATR and 2 times ATR. 2 times ATR captures the long-term trend. The 1 times ATR may be triggered as an exit signal at various times during this rising trend. If that's the case, we just recalculate again, reposition from the next low. The key factor, the key point is that as the trend moves towards its end, we will have a 1 times ATR value and a 2 times ATR value. And what we're doing is we're using the 1 times ATR value as an alert signal. As soon as there is a close below that, we are on alert to take action if there is a further close below the 2 times ATR. The 2 times ATR is capturing the long-term trend behavior. 1 times ATR, a little bit sensitive. So it may give, in longer-term trends, a false exit signal. A close below the 1 times ATR alerts us to the need to exit if there is a close below the 2 times ATR. It's a way of avoiding false exits in a long-term sustainable uptrend. Yes, we do surrender a certain amount of profit, more profit than if we acted on the 1 times ATR alert, but the amount of profit we surrender in terms of the total long-term trade is relatively small. So by combining these two volatility measures, it gives us an opportunity to take an alert, to avoid false exit signals, and to exit only when there's confirmation. Of course, we can combine that with different volatility measures. Now, as people know, that I've talked to before, my preference is to use a combination of indicators that measure the same activity but using different methods. When we talk about volatility, we can use an ATR line, shown here in blue. We can also use a countback line calculation. And I'm not going to go into how we do a countback line in any great detail because I'm assuming most people know that. If not, there are some references I can give you at the end of today. The important point is that the countback line is a self-adjusting volatility stop loss. The ATR line is an adjusting stop loss, but it's set on a predetermined time frame. So normally it uses a 14-day calculation. The countback line, the number of days included in that calculation, will be the number of significant days, a minimum of 3, but sometimes that might be 6 or 7 or 8 or 10 days before you get the countback line confirmation. So the result is that the positioning of a countback line stop loss and the ATR line stop loss are often slightly different. At various times in the trend, the CBL will be more sensitive than the ATR line, or the CBL will be coarser, less sensitive than the ATR line. We're still using this alert and trigger the same way as we're doing it with a 1x and 2x ATR. So the alert signal is a close below the most sensitive of these two volatility measures. In this case, I've shown it as the CBL line. The trigger is when we have an intraday move or close below the less sensitive volatility measure. In this example, it's the ATR line. But of course, that relationship can change. Sometimes the ATR line will be more sensitive and the CBL line will be less sensitive. But the principle remains the same. The alert comes from the most sensitive of those signals. The confirmation comes from the less sensitive of those signals. I'm not going to go through the way that we combine our countback line and trend lines and do those calculations. We'll leave that for a later discussion. Very quickly, here's a search we did yesterday. It was a rate of change search and it threw up a range of candidates. Very quickly, before we go to questions, I want to look at how we assess that. We start with GMMA analysis. This looks good on a Guppy model for moving average. Price has pulled back, the underlying trend is strong. Strong investor support shown by the wide separation in the long-term group. What happens when we apply an ATR? The ATR value, well, we can clearly see that this uptrend is in place. But if we use the default setting, we get some false exits. So a 10-period ATR we've optimized captures this trend movement. We can enter here and a close below that ATR value will take us out of the trade. So we've got a very tight stop running on that trade. So in this particular case, with this GMMA relationship, we can use the ATR modified effectively as a stop loss to manage this developing trade. This looks very similar. In fact, in some ways, it looks even better. Strong underlying trend, consistent separation in the long-term GMMA. Price comes back, uses it as support, bounces away, comes back, uses support, bounces away. So is this a good entry point? Can we manage it with an ATR value? And the answer is no. At the beginning of this uptrend, the ATR gave us a reliable way of managing the trade. Here's our exit. Okay, we applied ATR again. Here's an exit again. So it captured this short-term trade, but it's not as good as it was here. Here we've got an ATR line. How confident are we that this is likely to continue to give us the same sorts of results, the same accuracy, the same lack of false exit signals today as it did in the past? It's nowhere near as solid and reliable as this ATR line. So although these look the same in terms of GMMA analysis, when we apply ATR, we find that they are not giving us the same types of solutions. That's why it's so important to be able to eyeball the charts, to be able to eyeball the last of those candidates. We don't eyeball every chart. We only eyeball those at the very bottom of our filtering process. A third example, wonderful long-term uptrend. Good separation in the long-term GMMA showing strong, consistent investor support. Short-term GMA, not a lot of trading activity. They're just simply buying it. When it pulls back, the pullbacks are relatively minor. This one's a bit of an exception, but even still, the separation between the two groups of averages shows consistent, steady buying support. The way we enter this on a mid-trend basis is on these points of temporary weakness. Is this developing into a point of temporary weakness? And can we manage this with an ATR consistently? Because if we did it consistently in the past, no false exit signals, then we can do it in the future. We apply the ATR, and quite clearly, this gives us a consistent, reliable way of setting a stop that defines that rising value. So an entry around this level here, using this as an ATR stop loss, gives us a tight stop loss and a high probability that this trend will continue in a way that is compatible with this stop loss approach. And that's what we're looking for. So we start with very broad search results. We narrow them down using GMMA behavior analysis, confirm it with trend line breakouts. Then we bring it down to just a handful of stocks that we're looking at for potential trades coming up in the next week, the next day. And we're using our ATR values to confirm a trend breakout environment in a severe downtrend market as we are in the moment. We're using a 2 times ATR to define the downtrend and the point of breakout. And we're using a 1 times ATR to manage that breakout. We're using a more sensitive stop loss management tool. And we'll continue to use that as the trend line develops upwards. As the trend develops more strongly and we're in a profit, we may move back to applying a 2 times ATR to give us a broader management of that emerging trend. As it begins to exhibit end of trend behavior, that may be a decline in rate of change, it may be development of an end of trend chart pattern like a head and shoulders pattern, for instance, then we will move to a combination of 1 times and 2 times ATR to deliver an initial sensitive exit alert, followed by a broader or more coarse exit confirmation. The trader's ATR is an effective application of Wells Wider's ATR average true range analysis. Wells Wider captured effectively the volatility moves. However, taking those values and making them into an indicator that will give us genuine, reliable signals about changes in volatility that impact on changes in the trend. For that, we apply a trader's ATR. I look forward to your questions. This is where Bobby has to wake up and give me a question or two.
Wonderful. Oops, I think you covered everything really, really well. I actually learned a little bit more today too, after having spent quite a bit of time with it myself in recent months. So yeah, great presentation. We've had a couple of questions come in throughout, but it looks like they were fairly straightforward, and Jeff was able to answer most of them. Does anyone else have additional questions, either in GoToWebinar or YouTube, and I can pass them along? We had a lot of thank yous and people saying that you did a great presentation here.
Okay, while we're waiting for some questions to come in, what I'll do, I'll take this opportunity just to go back to the count back line and this combination of volatility exits. The ATR values are excellent. There's no question about it. Wells Wider was just brilliant in working out that average true range. But one of the drawbacks is that it works on a predefined calculation period, typically 14 days. What happens if price moves dramatically within that period? Well, because the calculation period is set, that movement is washed out of the calculation. Now, the countback line is a self-adjusting volatility measure because it uses the significant price moves. Significant, we'll use a downtrend. So what we're looking for is the lowest low in the current downtrend. We move to the top of that candle and across to the left to the next highest candle. Now we ignore any candles that are of equal height. We're looking for the next highest candle. We move to the top and across to the left again to the next highest candle, ignoring any candles that are lower. Now, it doesn't matter whether they're up days or down days. So here we have 3 significant days, not 3 days in the calculation. So the period of calculation in the countback line is not set. It's not predetermined. It's determined by the price behavior, the significant days. And
Correct.
that's where it differs from the ATR calculation. Just give me a second, I'll finish off. Then we project our line to the right-hand side. And what we're looking for is a close above that line, and our buy signal, our execution, is done on the next day, irrespective of whether it's an up day or a down day. Okay, Bobby.
Okay, yeah, so it looks like we actually had several questions come in, so I'll ask just a few of them here. People want to know where all they can access your indicator.
You simply go to the indicator list on MetaStock. We'll go very, very quickly back to the top up here.
Yep.
Oops, there we go. There's our indicator drop-down box, and GT, Traders ATR Long, is in that drop-down box. Now, when you use it, it will automatically go to the top of your list. And once you drag that onto your open chart, this dialog box will come up. You set your starting point for the calculation, the number of periods, multiply. I would suggest that when you first start using it, you use the defaults of 14 and 1. If you end up with a display that has a line running at the bottom of the chart, straight line, it simply means you forgot to change this date to 2022.
Okay, and so is that just available for MetaStock, I think is what they were asking.
Yes, it is available in MetaStock. It is available in MT4, MT5. It's available in Guppy Traders Essentials and 1 or 2 other charting packages. But we're not talking about those today, Bobby. We're only talking about MetaStock.
Yeah, I just wanted people to know if they did have other avenues. Also, this seems like a good question. Do you have a latest book that discusses these techniques?
Right, now I want to identify that this was not a paid question.
It is not.
Yes, we do have a book that covers this.
Asked.
Our new book, Stocks and Forex Trading, which I wrote in conjunction with Karen Wong, and Karen Wong is an experienced foreign currency trader, and she uses ATR and GMMA as an essential part of her approaches, and that's discussed in full in this book. So you can use the reference that we talked about today, use this video as a reference, and I've explained some things in a little bit more detail in some ways, but the basics and the applications and plenty of examples of ATR at work are in stocks and FX trading. We, of course, also cover it in our weekly newsletter, which we've been running for the last 26 years. We have a 72% success rate in choosing stocks as examples that work out successfully and profitably. We'd also run weekly FX notes for the last 8 years, an 88% success rate there. The 8-year average of those is 165 pips. And thank you for the opportunity to do this, Bobby. We do have a special offer associated with today's presentation, which includes a 1-month free access to the weekly newsletter. That's 16 to 22 pages, and a 1-month free access to our FX markets notes. Now, just email support with the header saying bonus offer. The focus with the trading newsletter is on Australian markets. However, the methods, the techniques, the trading approaches, the analysis is appropriate for all market conditions. And we update it also with analysis of US markets, Singapore markets, etc. That's the end of the advertising, Bobby.
Yeah, no, wonderful. Thanks for letting everyone know how they can learn more. I know we weren't able to get to everyone's question today, so I imagine you can also email the support at guppytraders.com or email us over here at MetaStock. You have sales@metastock.com or myself, bobby.hiller@metastock.com, and we can answer any of the questions that Daryl wasn't able to get to today. Yeah, and again, thank you, Daryl. I think I'm going to take back over here and just so we can get introductions into our next speaker.
Very good. Thank you.
Okay. Yeah, wonderful. Thank you again so much. All right. Share this and show my screen. Okay, everyone. Yeah, so that was a really good presentation. I learned quite a bit here. I've actually been using the ATR a bit myself, and I was even going to show some quick examples, but we'll actually jump over just back into the PowerPoint here because I don't want to jump into Robin Hanwei's time too much. He's going to be up next. Again, so that was Daryl, and he does have his ATR included in our latest version 18 of MetaStock. If you guys have an older version of MetaStock, if you either lease or subscribe to MetaStock, you would get the newer version, or you can simply upgrade your account to 18. We actually do have 18 on sale with our spring sale right now. And you would have that just included at no additional cost inside of MetaStock, along with hundreds of other indicators. Then he said, as Daryl said, he also has his book available. And there's a lot you can really do with that inside of MetaStock, using it for your trailing stops. You can use it for your entries, give yourself confirmations on trend breaks and stop loss points. So really glad he could kind of go over that and cover that today. And again, if you're wanting access as like a brand new user and you want to try out a trial of MetaStock, you can access that on our website at metastock.com/APAC-Summit 3-for-1, or we do have our sales team available right now. If you guys do have additional questions, or you just want to learn a little bit more about our different packages or things of that nature, just jump into our sales chat. I know Robert's in there waiting to talk to any of you. metastock.com/sales chat. And you'll be able to talk and ask any additional questions or get follow-up information there. So really good resource if you want to jump into there with more questions. Also, I do quickly want to mention we're doing a special promotion for today's event. I know we're kind of still early on and have a lot of speakers, but we are going to have some other presenters that have systems in MetaStock available too, like Stuart McPhee and Sagar Nandi, and they're going to have a bonus deal that we're doing here. It has Stuart McPhee's trade launch systems, his training package, a 3-month premium subscription to learn MetaStock, which is actually from Kevin Nelson, with like hundreds of videos showing how to utilize MetaStock and all of our different tools and features. And you'll also get 3 months of Superior Profits Q Global included as well, which you'll see today later on from Sagar Nandi. And the normal price for all of that is $16.91, but with today's promo deal, you guys would be able to pick that up for just $896. Again, we'll be talking about all of these things later on. I just kind of wanted to make people aware that the offer's out there while you're watching today. You can always jump on our website, metastock.com/APAC-deal to learn more there, or better yet, just jump into our chat room, metastock.com/sales chat, and we can talk to that. And then, of course, I have the information for the trial page up here too, if you guys want to just sign up for a trial of MetaStock without getting the whole package. With all of that said, I don't want to take too much of Robin's time. I do see that Robin's in here in GoToWebinar with us. How are you doing today, Robin? It looks like he might be muted, but today he's going to be going over how to read the Bigboy's fund flow and screen out potential rocket stocks. I've been working with Robin a lot in the last 6 months or so, and he's a really great guy. He has a lot of great information to share with everyone, and I'm actually really looking forward to seeing his presentation today. Robin, I'm going to go ahead and send an invitation for you to unmute your mic here.
Hello, Bobby. Good morning.
Hi there. Yes.
Good morning, everyone.
Good morning.
So can you hear me well, right? Okay. Thank you. Thank you.
Yep. You sound great. Yeah. So we're going to go ahead and let you talk about.
Yes. Talk about my view for the market as how I read the market, as well as one of my my indicator. Okay, develop on MetaStock as well. Bobby, can I share my screen or
yes, of course. Yeah. Let me go ahead and and send that over to you from my end over here. So I'm going to go ahead and make you the presenter.
Hello.
I can see you. You just popped up. Yeah, looking great.
Thanks. Okay, show my screen. Yes. Okay.
Yes. That
Nice.
should have just
So
popped up.
everyone can see my sharing on my screen already.
Yep. So I see your PowerPoint there.
Okay, great.
Yeah,
That
now it's full
PowerPoint
screen.
ready. Okay, so let me begin. So let me introduce myself first. My name is, in short, is Robin Han. In Chinese, meaning Robin Hood. Okay. So yeah, I was grown up in China, born in China. So English is my second language. So forgive me if it's not very professional. Okay, now I stay in Singapore. Today my topic will be how to read a big boy's fund flow and screen out potential rocket stocks with one indicator, which is, in short, the name is Ruby. Then this page have my Facebook page, my website as well. Okay, so of course we should have a disclaimer every time we present something. Okay, today's session is for education purpose only, not for any financial advice. And yeah, so we are talking about always looking at investment in stock market. So how to invest in stock market? Usually, according to common understanding, it should be very easy. This gentleman over years have already taught us it's very easy, right? Warren Buffett, the greatest investor of the world, he told us we just need to find a good company, right, which can earn a lot of money or growing, have good background, and buy and hold its shares. Yeah, very simple. You don't need to worry about your entry, worry about your target price, stop loss, right? Okay, since it's a good company, then we can wait for profit to come, right? This is how normal understanding of how to invest in, to make money in the stock market or any trading market. It's supposed to be fairly easy. It's just like this picture. This cake is a piece of cake. We should eat it. Yeah, it's full of laughing, happiness, right? However, if you have invested in stock market or any like forex, futures, you most of the investors, especially retail investors who don't have some special source of information, oh, come on, just like this year, many very great company, right? Like Tesla, like AMD, yeah, Apple, their shares, the share price dropped a lot. So most of investors, especially investors, keep losing money in the market. Although we all look for good companies, stocks. Why should it be like that? So wow, sample. Let's see how the market really goes sometime, which is very much different from our normal understanding with our expectations. Okay. Okay, so this company, this is the company's financial report. Later, you will see the name of the company, and you can by yourself to very easily to find its financial report. This is a yearly income statement. If we look at the chart, so every year the income increased a lot, very nicely, right? This is a quarterly financial statement. Also very nice. So let me for company. First, this company is a #1 e-commerce. Okay, #1 e-commerce firm in Southeast Asia. So I'm living in Singapore. So this company is famous. Later is a name I think all over the world. Many of the investors also interested in the company as well. Right. The second point, this is a new unicorn company. Hello. Yes, Bobby.
Actually, this might not be on your end, but
Anything wrong?
Appears that your screen might be frozen for us. Well, now I see that it came up on GoToWebinar. So maybe it's a YouTube issue or a connection issue. Well, it's showing up now, actually. I'll let you know. Your audio seems to have been cutting out a little bit, and the webcam as well. But we can go ahead and keep going. It's showing now, and I'll let you know if there's other issues. Oh, I'm not hearing you.
A bit what can I do now? I stop sharing or then share again? Better now?
Okay.
Now?
Yeah, I think there might be a latency issue. Yeah.
You can I? Yeah. Okay, I turn off my webcam. Stop sharing my webcam. So, is it a bit better?
Yes, actually, I do think that that's working a little better now. I see the company A slide show up, and I can hear you a little better now. Yep. Can you hear us okay?
Okay. Okay, let me start with this page again.
Great.
Yeah. This point number one is, this is a firm in Southeast Asia. So, number one, so better than every single other e-commerce firm for now, as volume and the download volume. Okay, it's a new unicorn company, so many of investors like it. Later, I will show the name, so everyone, I think most of the investor may at least have heard of it, even if you are in US or as well as today is Asian Pacific Summit. Then many of our investors should have heard of it. Then the income grows exponentially very well. So for the past 4 years, the every year growth of income is 120%. Okay, if you read other companies, this is a very nice number in terms of the income growth, right? So, and it's expanding now very fast. In the past 2 years, it started to landing to Brazil market. Then just within 2 years, now it's ranked number 1 in Brazil e-commerce app. Then, for Brazil, it has 200 million population, so it's a very big market. Although it's a bit smaller than China or largest market, but Brazil is very big market as well. So if we look at all these main points for the company, I think everyone will agree with me that this is a very great company actually. So if we look at the Warren Buffett method, we should think this is a good company and we want to invest for long term, right? Not today buy, tomorrow sell. No, it's not the correct way. So I think it will be, for most of the investors, it's worth investing if we look at the income statement for yearly and monthly. So, however, if we look at the chart now, you can see the name is C Limited, listed in NASDAQ, right? So the share price, okay, wow, we have a severe sell down. Okay, so price kind of collapse suddenly from 372 to 85. Now have a little bit rebound, but still at low range. So what happened to this company? This is such a good company, right? So maybe many investors will think the price suffer sell down just because this year we have tech sell down. The NASDAQ generally dropped a lot since early 2022. Is it because of the tech stock sell down, the market sell down, and the company C Limited suffer a lot? Let's compare the chart with NASDAQ, right? Below one is Nasdaq. The upper one is C limited chart. So we start from early November or end October last year. So at this period, as a start for two charts, right? After a few months, what happened, right? For Nasdaq, actually within the first 1-2 months, price is almost remain the same. However, C limited, the price already dropped a lot from 360 to around 200. So yeah, this is the comparison is very clear. Everyone can read the difference. Nasdaq remain on top for that period. However, C limited, the share price shrink 45% already. So apparently, share price sell down not because of the Nasdaq tech sell down. So why price suddenly collapsed? So yeah, later after the price dropped a lot, the keyword is after, right? The news came out. Tencent sell 3 billion stake in C, this company. So the news released on 1st January, which is later. So we summarize the story. Why C limited suddenly collapsed since November 2021? Yeah, because Tencent, the largest social media app for whole Chinese speaking community. Yeah, so Tencent he started selling stake 2 months later after the price of C price sell down, right? So when this news released, this is the bad news. Yes, price supposed to drop after the news release. However, even before the bad news release, price already dropped 45%. So sell down. This sell down before the bad news is because retailer sell down or Bigboy sell down, right? So yeah, to me, I think it's not something retailer can do. It's have to be because of Bigboys, the big fund flow. So are we, as retail investors, able to know the news 2 months earlier to join the selling of the big boys? Apparently, it's for 99% of retailer investor, it's impossible. So yeah, it's a big challenge for us. So what is the real thing in the market? Is a company good, bad, more important? Or I think we have some challenges. For example, news can be like this case. Later, we have a bad news. However, before the bad news got released, the price already started to sell down. Vice versa, if we have a good news, actually most of the time, before the good news released, the price often push up by big boys who already heard the good news long before us. So news can be purposely delayed. Then good earnings, which is very good for share price, but sometimes can be massaged. Massage means is, for example, you earn 10 billion, you can just try to make it not so good, maybe 7 billion or 8 billion by some of the accounting ways to make it less attractive. Then good company, share price can be overbought, later sell down also can be a reasonable expectation. Then loss-making company can be brought up, like GME is loss-making company. Sorry, I keep wrong. Is losing is wrong. Okay, so for GME, we all know the story. The company doesn't earn good profit. However, because many fund flow push up, then later the price go up a lot. So actually, for me, fund flow is always real, no matter the company is good or bad, growing or shrinking. So only the fund flow, it determines the share price for every moment, almost every second, right? For this moment, if fund is flowing, share price can go up. If for this moment, if fund is flowing out, share price will go down. So then who determines the fund flow? Retailers or big boys? Apparently should not be retailers. It's all because of big boys. However, then for retailers, we have a big challenge: how to know big boy fund flow. If we don't look at big boy fund flow, we just invest blindly. Even a good company, suddenly like the fundamentals consider very good. However, Tencent say they want to sell, the share price just dropped 45% before the news release.
Robin, I've lost your audio again. Robin, can you hear us okay? Oh, you guys, it looks like he might be having a technical difficulty. It looks like he went offline. Yeah, I think he said he had a poor connection, but we can give him just a real quick moment to see if he jumps back in. And while he's doing that, I'm going to go ahead and play a quick video for you guys so you can still be entertained while we wait for Robin to jump back in. So just bear with us here for just one moment. Thanks.
The first, how to determine the fund flow direction based on this indicator.
Okay, never mind. Looks like he's back.
Robin, it actually appeared to us that you went offline there for about 60 seconds.
60 seconds. Okay. From this page, okay?
Yes, I think that's okay there.
Okay. Oh, sorry for my poor internet. I happen to have a bit overseas today. Yeah. Okay. So
no problem.
Yeah. I resume my talk from this page. Sorry, for retailers, how to know big boy fund flow is very, very important. If we cannot read the big boy fund flow, then many times we think it's a good company, but later got bad news. Or vice versa. Sometimes we think it's bad company, we sell, but later got good news and price could go up. So I think to develop a strategy, we must, or indicator, we must very clearly know how to follow fund flow. There are a few steps for me. I think first, we must know how to determine a trading direction, whether we buy or sell, we long or short. Yeah, we need to know the general direction of the stock for the moment. Then when we find a direction, doesn't mean immediately we can buy or sell. For example, it's a good company, but not saying any moment a good stock, we just buy, anyhow buy, we can make money. We must wait for a good entry price and timing, more important. Then before we enter, we also need to determine our stop loss and target. And a very important point is know how to find all these potential stocks. That means zoom in stocks and find the strongest ones. So this is how I try to develop my indicator and the trading strategy. So based on this concept, I developed one indicator to reach big boy fund flow. The short name is Ruby. It's a short form for Robinhood Big Boy Index. So let me show how we can use this indicator to do trading step by step. First, how to determine fund flow direction. Okay, so basically the indicator is very simple. So have green bar or red bar, right? So if Ruby indicator is green, shows green bar, that means bullish. If shows red bar, that means bearish. Then later I will show picture, show real chart. So for green bars or red bars, we wait for two groups of same color Ruby bars, then which determine whether we should look for long or short. For example, if we see a green candle, green ruby for two candles, then it doesn't count. It must have two separate groups, then shows that the fund flow is strong enough for us to look for buying opportunity. So if the indicator is red, then we must wait for two different groups of Ruby indicator. Then we can start to consider sell short. If only one group of Ruby candles bars, then we do not buy or sell this stock first. We wait. So, for example, look at some stocks. This I'm doing some scanning for my US market. For example, for this stock, it's a random stock. I just find out from the scanning result. Let's look at this part, Robinhood Bigboy Index, the below part above the trading volume. We can see green ones, they combine into different groups, or red bars. So they are basically, they don't have different value. All are same value. We consider either 1 or -1. So if for this period, okay, the most recent Ruby indicator all shows green ones. However, they combine together as for one group only. We don't have the second green group. That means the buying fund flow is not strong enough. So later it changed to red ones. So we are looking to sell if we have second group. So we go wait here. For this dot, that means don't have a clear direction. So we still wait a second. Suddenly we'll see another red group. That means the fund flow is really flowing out. For us traders, we should look for good opportunities to sell. So we wait. Later. Okay, this become green again. So we don't short anymore. For one group of green, it's only because it's only one, doesn't count. So we are still looking for sell short. Okay, later, we see a second group of green Ruby. That means for this moment, we should change our view to bullish because we have two consecutive group of green Ruby indicator. So now we're still looking for opportunities to long. So this is one stock. Maybe we read for some popular stocks. Okay. This one is also because of this company DIDI. Okay. This also a scanning result from my scanner, right? Let's say for this one. For this period, we can see one group of red Ruby. However, before that, we see two different group of green Ruby. That means we still should look for opportunities to long. Okay. Then later when we see the second group of red Ruby, then after that, we will start to look out for sell or sell short from here. Start to look out for opportunities to sell short. Okay, so I show two case study to demonstrate how to determine the direction of fund flow. Okay, so two group of same color Ruby, it counts. For only one group, it doesn't count. Then second point is how to wait for a setup. So we can enter or to open long trade or short trade. So we wait for Ruby to become 0 or even to opposite color. For example, for now we can see green Ruby. This is a second group. So we wait the green Ruby to disappear, to become 0, or to red ruby. Then we start to wait for entry timing. So then we wait for the price. If, for example, is the fund flow is going in, then we look out for opportunities to buy. However, before we buy, we wait for the price to go against the fund flow. That means for a bullish scenario, we look for the price to sell down, to suffer a sell down first. So if fund flow in, wait for a pullback. If fund flow out, we wait for a rebound. Then after the price to go against the fund flow, we wait for the price to go back to the main direction. But it must be pullback or rebound deep enough. Okay, then we wait for candlesticks that become shorter. We don't want to buy or sell when the candlestick is very long. Why? Because when the candlestick is very long, usually we take very high risk between our entry price and stop loss price. Okay, so let me demonstrate another stock to show you how to wait for good timing. For example, this stock, AT&T. Oh, this very famous company. Okay, let's say okay, for this part, we can see that here we have many green ruby chart, green ruby bars. So for the first 4 is group 1. It's group 1. Then after that becomes 0. So the next one is green again. That means we have 2 different groups already, all showing green ruby. That means we should look out to buy. But before we buy, we must wait to see the share price to drop from the recent high. So for this, the past 5 candlesticks here, for the past 5 candlesticks, price really dropped, but just a bit. So it may not be a very good timing for us to buy yet. So later it becomes green again. We have no time to buy. But after the red ruby, green ruby become no ruby, that means we can look out to buy. The setup is ready. So we wait for the price to have an opposite go against the main direction. Means we need to look for a pullback. So we wait for a pullback. Wait to what time? Wait for the candlestick to become short, become relatively short. For example, this candle, January 27. This candle considered not very long. So if later the price break out the high of the candlestick, then we look out to buy. This is the entry price. Then stop loss price is in case after we buy, the price drop below the low of this candlestick, the reference candle, then we start to sell. So this one later we trade rebound. We made a bit money, not many, maybe not many, but we can make a big profit. So after entry, if price break out the opposite end of the candle, that means opposite end means when the price drop, we look out for to break out the high. If the price rebound, we look out for the price to break down the low. Okay, this is a point whereby we determine entry and stop loss. So later when we combine everything together, the picture will be much clearer. So step number 4, how to determine our target price is very, very easy. We just look for most recent high or low. If we we buy, of course, we look for a high for reference of target price. If we sell short a stock, of course, we will look for a low as reference for potential target. Of course, before we enter, we also need to consider risk-reward ratio. If the entry price is too close to the target price, then it's usually the risk-reward ratio is no good. Then we don't enter. Okay, so before I show how to use a scanner to find potential stocks, let me look at the way how we use the Ruby indicator to read a chart. Let's read some of very popular stocks. For example, Apple, right? AAPL. I think most of the investors should look at Apple share price sometime, at least occasionally, right? So let's combine all the 4 steps. Before the share price start to sell down, let's see what will happen to this stock. Okay, let's say from here, let's start to monitor from here. From here, the most recent one is a group of green rubies. So this is the group 1. We wait for another group of green rubies. We wait. It become red. That means, okay, if we want to buy, no, we hold our gun first, because the buying power is not so strong to have a strong fund flow. So we wait. The second group of ruby indicator is red. So now we wait for, okay, this first group of red ruby. Then after 2 days, we have another group of red ruby. So we have 2 groups of red ruby. It's good. Then we should look out to sell short. But before we sell short, share price must have some rebound, and we wait for the red ruby disappear first. So on that day, on this day, okay, red ruby disappear. We start to look for a strong, nice rebound, because we are looking for sell short. Before we short, we must look for a rebound. Or no rebound. We wait for a rebound. Okay, have some rebound maybe. Okay, can. So for now, I don't know what will happen after this candle. Okay, now the candle becomes short. Not very long, right? So we use this candle as a reference. Okay, if next candle price drop below the low of this candle, we enter for short. Okay, so we short already. Before market close, it break down the low. Okay, so this one we will make a loss. Okay, we'll make a loss. So we stop loss is what? Stop loss is when the price break above the recent high, we do stop loss. But after that, we see a group of green candles, right? However, before that, we see 2 groups of red ruby. So we are still in the state of sell short. We wait for a small candlestick. No small candle, not all very long. We pass. Oh, this one looks like rebound a lot. Only 1 group of ruby. Then on top, the candle is not very long. Okay, if later break down, okay, we can look out for short, right? But it's not a breakdown, it's gap down. Then gap down, more risky, we don't enter. Then after that, this candle is small. Okay, this candle is small. If during trading time breakdown, okay, we enter short, right? We enter short, gap down, we make some short-term quick money, right? Okay, later rebound, but never never reach the stop loss price, which is the recent high. Okay, which is the recent high. Okay, you can either wait or take some quick stop loss. For this period, the profit is not much, but only one group of green ruby will wait for another group. Okay, we have a second group of green ruby. This is a turning of the trend. For this time, we may encounter some whipsaw, right? So now, okay, green ruby again, the second group of green ruby. We wait for a pullback. Short candle, then we look to buy because we have two group of green ruby already, right? Okay, but don't give us an entry. Yeah, so from here I see price drop a lot already. Then we look for enter to long. Now we can see one red candle, one red green ruby, but because red ruby only have one group, so doesn't count. We look for the first two green ruby group. So we look for long, enter long, we buy. Okay. So for this one, enter not too much profit, come the same. So we either take out or take some stop loss first. So red ruby again. So we look for sell short here. Okay, sell short, rebound, short candle, we look for sell short. Okay, here go up again, come back again, not a very profitable trade. But later, when the candle come short again, we sell short, then price for short-term trade, price drop first, make some profit, more than one to one, later come back again. So we look for long again, look for two type of red green ruby groups. So after that, green, we look for long. Okay, here we have an entry. Okay, this candle we have entry breakout. Okay, this part entry is a loss making one. It's a loss, stop loss. But this part is still a long. Okay, the target price is here. Okay, we end breakout here, then it's rebound nicely. So this is a profit trade, right? Or here we have red ruby. We look for sell short. We look for sell short, two groups. Okay. Keep going up. Here, keep going up. This two candle is small one. You sell short. Break down. Rebound a bit. Didn't hit stop loss. Down. Keep going down. Then to here, you sell short at 176. Then price go down to here. You still hold the sell short position, right? Around there, have some rebound. You can take profit around 155. So this is an Apple. Another stock, maybe we can look for Tesla. Okay, later keep dropping. The profit can grow a lot bigger. Tesla, very hot. Okay. So here, okay, from here, we look back. We have one group of green ruby, second group of green ruby. Then we should look for long opportunity, right? Long. Then here we see the candle becomes small. Once breakout, we wait before price. From here, the price is at the high end. We don't buy. We wait for pullback. Wait for pullback. Wait, the candle becomes small. Small. This one is small. This one is small. So tomorrow, if breakout, we buy, but never breakout. Never breakout. What should we do? We move the candle to the next one. Also consider not long. So okay, we enter already. Rebound, rebound, rebound. So target price is here. It's roughly here. Okay, recent high. So for this candle, when the price go to 1.2K around that, we can consider. It's easily to tell that there is a strong resistance. So maybe you sell at 1.1 to 1.2, and it's a winning trade. Even you hold a big drop, then rebound again, you still can sell at 1.1. So after that to here, again, it pull back deep. Pull back deep. Then two group of green ruby. Then after pullback, the potential target is here, around here. So we can see the risk reward ratio is not bad. This candle is not so long, then potential profit is higher. So after the next candle breakout, we can buy. We can buy a bit, then go up not too much. We come back. We consider don't buy. Consider not a profit making one, but keep dropping. The first group of red ruby. Then we look out for an entry. So here this candle is small one. Okay, potential target here. Okay, didn't break. Then wait for a next candle. This is a small candle, very nice small candle. So after it breakout, we enter. Rebound, nice rebound. Okay, your share price start to turn weak. You can consider take some profit. So you enter around 923. Then later price go up to 1,001, even higher, right? Let's say just 1,001. So you'll make around 20% in this one single trade, right? So later become green again. So we look out for a pullback, to have small candlestick. So after breakout we look for long, not small, not very small, not very small. Okay. When bottom don't have a small candle, we wait, pull back again. Okay. Red again. So we look out to sell short. Before we sell short, we wait for a rebound. But candlestick must become very small first. It's not very small. This one is very small, right? This candle consider a small one. So easy. Okay, break down. We sell short already, huh? We sell short already here. Break down, sell down. Okay, rebound a bit, sell down again. So to here, we can the target is already more than 2 times of potential loss. You can take some profit to make some money. So later it rebound. Because the green group is only one. So we look for sell short again. This candle is a bit long. We don't trade. This is candle considered short. So if breakdown, we sell short. no breakdown, go up, so we don't short. Here, candle small again. Small again. If breakdown, we sell short. Okay, this part, a small stop loss. But after that, here, potential target is here. Okay, here if breakdown, we sell short, right? Because below we got three groups of red one groups of green ruby, one green not strong enough. So we look at the red ruby, so sell short, right? So here, once you sell short, price drop. You can either take partial profit or hold it drop. Okay, come to 800. So you sell short around 1,000 at 800. No, not 800. 1080 around that. Low, yeah, 1080. Then the price drop to 800. We take profit. It's around 300% potential profit. So this is a showcase of how to use this Ruby indicator to read some floor. Then we can use it to use this indicator to search for good stocks. So let's say market is bad, right? So we look for sell short. NASDAQ index, start exploration. Okay. NASDAQ got 5,000 plus stocks. It may take half a minute to 1 minute to search all the stocks. Okay, I think the GoToWebinar is taking some resource of the computer. It takes, apparently it's longer than usual, but still okay. We can see past 50% already. Okay, 75%. So it rejected around 94% of the stocks. That means out of the 5,050 NASDAQ stocks, 94% of the stock, we don't need to read it. We just look at all stocks in the result list. Although still have 290, is short the list a lot. Then we click Ruby for us to have low Ruby stocks on top, higher Ruby stocks in bottom. Then we select the most strong ones and open chart. Because higher Ruby indicator means the Bigboy fund flow is more stronger. Then we tend to find these kind of stocks, which may bring us better profit. So with this scanner, it is much easier for us to find those stocks have strong fund flow rather than to read one by one all the 5,000 stocks. Not to don't forget that New York Stock Exchange also have another 5,000. So for this stock, okay, we see, do we have two red group of green ruby? Okay, have red group. I have three groups, doesn't matter. We wait for rebound, but now no rebound pass. Okay, this stock no volume. This stock is down. It's down. However, recently no rebound. Right. Okay. This stock good. Let's read it. Apparently, it's going down. Fund flow is going out. We look at the template. Okay. So now we wait for if the stock can rebound a bit more. We have two group of red ruby, and the share price already rebound. So from here, we just need to wait for the red ruby become zero. This one become zero. Then if sell down, we can have a potential sell short trade, right? Okay, because of the time limit, I have another 5 minutes. Maybe I just show if you want more information for this indicator, then you can look for my website, my email address. Right now it's Q&A time. Sorry for the poor connection, but I hope if you have anything unclear, I can answer your question here. Hello, Bobby, can you hear me? Hello, Bobby?
Yep, I can hear you here. Just had to unmute myself.
Okay, thank you. So if you have any question representing all the audience for now?
Yeah, perfect. If anyone wants to go ahead and type in your questions, I can ask them to Robin. Let me pop out the box. We're also sharing your links on YouTube and everything as well, so people know how to contact you. Yes, of course. We have a few different people saying thank you for the presentation.
Yeah, thanks. It's my great opportunity to attending this event, be one of the speaker. Thanks to MetaStock. Thank you, Bobby. Yeah.
Oh, of course. You did a wonderful job, and I really enjoyed learning quite a bit more about your indicator and how all of that works. So very interesting demonstration. Yeah, lots of thank yous coming through. I have a question here for you. So are you primarily only using this on daily charts then?
Yes, because you can see before every entry, I will have to wait for two groups of red or green ruby indicator. For example, we wait for two groups. Actually, the one is already show us the long-term trend. Of course, if you are referring to intraday candlestick like 5 minutes chart, 15 minutes chart, because I'm using end of day of MetaStock, it only give me daily charts, right? So, and for stocks, most of the investors still look for daily chart trading. So yes, this indicator, because the restraint of end of day MetaStock, my program is on daily charts. Yes, hope this answers your question.
Yeah, definitely. I think that answers their question. Let's see if we have any others coming in here. So someone asks, if we wait for 2 consecutive groups of ruby, isn't it dependent on where we start to eyeball the chart? So
because we don't look at specific chart. You can see after I do the scanning, we see a lot of charts just now. Let me try to show the reports, right? Okay, the most important benefit of the scanner function for MetaStock, and the reason why I develop my scanner is because every day some stocks may move, some stocks may not have a chance, right? However, with scanner, we can always, for example, this one, we rejected 4,700 stocks with which doesn't have any potential to fulfill this requirement. So only left 290 have strong indication for downtrend. Then we only look at this small portion of stocks. Then we open, just like what I showed just now. We rank the Ruby indicator. So we start to open charts from strong one. We look at the strong stocks first. So if this stock doesn't fulfill my requirement, I just don't put it in my watch list. If we have a few stocks which they fulfill my requirement, for example, this one. Okay, this one doesn't fulfill, right? Because I have only one group of Ruby, then I don't need to waste my time on it. I don't care whether it's very popular stock or not popular. Maybe sometimes before everyone look at GME charts, no one look at it. It's not a popular stock. But if the scanner help me, for example, help me to find, oh, this stock, AVDL, then from tomorrow I can look out for a sell short opportunity, right?
Wonderful.
So no need to keep looking at every stock chart.
Okay. And another question here.
Very important benefit for MetaStock. Okay.
Yeah. Great. Yeah, the Explorer function is great, and your exploration does run fast.
Then this one rebound, we can look out for selling opportunity here, around here. So if you're sell short, then have this sell down is pretty big, and can bring you a good potential profit. Okay. Next question. Thank you. Next question.
Yep. The next question I have, do you offer a training course?
Yes, I offer a training course. You can, if you are interested, you can leave message to my email address, robinhantrading.com. But yeah, as I mentioned, I born in China, and from China, grow up in China. So my training course is in Chinese. Okay. So if you're from Asian Pacific, you speak Chinese, welcome to send your question to my email address. I will refer to you, answer a question, and maybe tell you the details of my training in Chinese. Yes.
Okay, great. And then it says, there's another question here that says, how much does the scanner cost? And I think he's well, if he's referring to just MetaStock, that starts at $59 a month. Perhaps if he's referring to your specific indicator, are you able to share a price on that?
Oh, my specific indicator. I think because indicator have a unique way of using it. Because from the chart you can see only one indicator, no other things. If you apply it with a few of my other indicators for fine-tune the entry, fine-tune the scanning results, the performance will be much better. But to use that sets of indicators, you really need a training from me. So my indicator is exclusive to my students. So if you can speak Chinese and interested, feel free to send a query to robinhanwei@gmail.com. It's a number three of this page.
Perfect. Okay. I think that wraps up most of the questions here. And thanks so much for coming on today, Robin. I know you're away from home, and so I'm glad you could still make this work. And I hope you enjoy the rest of your trip.
Thanks, Bobby. Thanks to MetaStock and everyone here listen to my presentation. Thank you. Have a great weekend. Have a great enjoy the session for this summit. Thank you.
Of course. Yeah. Bye for now.
Thank you. Bye, everyone. Bye.
All right, guys, I'm going to share my screen with you here in just one moment. Go ahead and make myself the presenter again. All right, now you should see my screen and likely me as well on the webcam. Just to give a little bit more of an introduction to myself, I'm Bobby Hiller. I've been working here at MetaStock for over 5 years, coming up actually very close to 6 years now. And currently my position here is I get to work with all of our international partners and handle all of our international business development. So I'm actually really grateful for this role, and it's really taught me a lot about investing and trading and about the markets. I was still very interested in all of those things before joining the company, but now I get to surround myself with all these other professional traders, such as Daryl and Robin, who have presented so far, and our upcoming speakers. I get to interact with all of them or people like them on a daily basis. So it's helped to teach me quite a bit. And primarily, well, pretty much all of my analysis nowadays I do inside of MetaStock. So, before I just jump too far into things, I do have to go through my disclaimer one more time. So I'll go ahead and hit this quickly and then jump into things for you guys. So this demonstration, it's designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So now that that's out of the way, let me move some stuff off my desk here so I can make sure I see my screen well. Today I'm going to talk about the MetaStock power tools. So we've already seen some of the functionality in MetaStock from Robin, as well as from Daryl, showing their systems they've designed in MetaStock. And I mean, we have dozens of other partners and professional traders that also have their tools and resources in MetaStock, and then hundreds more on top of that. I know it sounds like a lot, but don't worry, I'm going to help kind of cover all these things today. And just to tell you a little bit more about MetaStock, if you're not familiar, or just in case, if you are even an existing customer and you just want to learn more, MetaStock was founded in 1982. So it's been around, for basically 40 years now. And a lot of people didn't even have a computer back then, or maybe they didn't even know what a computer was, and we were making technical analysis software. So we really helped pioneer a lot of the technical analysis software. We were purchased by Thomson Reuters back in 1995, and we released our first real-time data feed based on the Reuters technology for MetaStock in 2005. And then we released MetaStock's Zenith in 2012. Back in 2013, so we're coming up on our 9-year mark, we divested from Thomson Reuters. And basically, we're still the same company. The average employee has actually been at MetaStock for over 10 years, believe it or not. So it's an incredible company to work for. Again, like I said before, I'm grateful for my position and everything here. And we all love it here, and we're well known for our support. And it's not only a good company to work for, but it's just a great platform. And of course, that might be biased considering I do work here, but I will let you know that we have also been rated the best technical analysis software for some of my slides aren't matching. I think it's about 29 years in a row now for MetaStock DC, and we're coming up on, bless you, Jeff, and we're coming up on 10 years on MetaStock real time, rated as #1 by the readers of Stocks and Commodities magazine. So it's not just me that thinks that. Oh, thanks, Jeff, for the light. All right, and then just to tell you a little bit more, aside from saying I'm going to show you MetaStock today, these are kind of the things that I'm hoping to be able to cover and teach you guys about. So I'm actually going to take this headset off. Makes it a little bit easier for me to focus here. But we're going actually, just kidding, I can hear my voice in the background, so I'm going to put these back on. How do I find securities to trade? And we're also going to cover when should I get into and out of a trade? What systems should I use? And how do I test my systems before I get into a trade? So, you know, those are all some really important questions, I would say. And I'm going to do my best to just cover some of the ways to do that in MetaStock. One of the great things about MetaStock is that, I mean, it works in so many different ways. There's so many ways to personalize it to work right for you, whether it be for trading stocks, futures, indices, options, you name it, as well as any time frame too. We handle daily charts, intraday charts. You can do custom settings. You can do tick bars. You can do X amount of ticks or X amount of minutes, whatever it may be that you trade or like to analyze. You can do that in MetaStock. And instead of just talking about it and going through PowerPoints, I'll go ahead and jump on into the software. So let me get that pulled up here. All right. So at the core of MetaStock, I would say, is its charts. And we have several different power tools here. I'll kind of just jump in here. So if you open up the Power Console, as it's called, you can see our primary tools here are the charting platform, which I'm going to show you guys a little bit on today, show you some of the unique things in there. We have a quote center to help you manage your different lists and keep on track of pricing and percent changes and things like that. It's really easy to manage the list from within there. It's not this screen actually that you see here, but we won't touch too much on that today. One of the other main tools we actually already got to see from Robin. He shared how to use, or he shared an exploration rather, where he was searching for his Bigboy fund indicator, and I'll show you guys how that works. We're also going to go into the system tester as well, but keep in mind MetaStock also has a forecaster and option scope too. So there's a lot of things that I won't be showing you today, but I'm hoping to answer those first initial questions because I think that's going to pertain to most of you. And then if you guys like what you see, or if you want to learn more, you know, you can jump into our chat room, metastock.com/sales chat. They can answer any additional questions there that I don't catch right now, or they can also help you sign up for a trial so that you can start utilizing these features for yourself. So I'm going to go ahead and click to charts here, and you'll notice it under instruments, I have 313,000 instruments available to me. And this is all MetaStock data. And I am on the MetaStock real-time version, so I do have the daily interval, as well as all the different intraday intervals and some of the most recent custom intervals that were utilized on this presentation computer as well, showing here. And with this being the APAC summit, I might as well go into our Asia list here to just open up a quick chart, show you guys kind of what sets MetaStock apart, and then we'll get into answering some of those questions for you. Let's go ahead and maybe even open up an ETF here from Australia. I'm kind of just guessing. Hopefully we get one at least with a decent amount of data. We're going to load in, let's say, maximum records. All right, so from the start, oh, errors on this chart actually. Let's open up a different chart. that one might not have data. Or this one, what's going on here? Let's pick up the US instrument just so that I know what I'm doing. I'm going to go ahead and open up Apple. I saw Robin using that one as well. All right, guys, I think I'm actually not connected to the internet here or on MetaStock. Let me go ahead and, oh, Jeff's talking, but I can't quite hear him. I'm going to close MetaStock and just reopen it really quick. I've had it open all day, and I think I might have signed in on my other laptop and messed it up. So I have my other laptop over here too, as I've been multitasking throughout the event. And yes, it does actually have MetaStock open here, so I think that's exactly what my problem was. Sorry about this, guys. The main the host isn't supposed to have issues with his, but I just had it open on another laptop here. Let's go ahead and close it down off of this one. And it looks like it's opened back up over here. And just play it safe. All right, there we go. Sorry about that, everyone. I had it open again, like I said, on my other laptop. Let's open this up. And I'm going to go ahead and just put a clean template on here. So you guys are probably seeing this chart and you're like, hey, that's nothing really special. And yeah, this is just a price chart here, pretty common. You're going to see this in most of your platforms. I just want to show you some of the things that sets MetaStock apart, makes it quite a bit better, and then show you how it can also help you to answer all of those questions, help you find your systems to trade, and let you know when to get in and out of those trades. So just by clicking on my bar chart here, you can see it opens up and it gives me a number of different options to change to. I often like working with candlesticks, and then I can choose what I want my up color to be, my down color to be, the up and down mode, whether that's based on close to close or open to close, and the weight of it. I really like to look at a that's bars still, at my candlesticks. And I can choose whether it's always filled or if it's filled when the close is less than the open. So whatever I may like, and I'm going to go ahead and apply that. And you're probably still thinking, okay, well, hey, that's still pretty normal. I can look at candlestick charts in a lot of other areas too. Well, we can start to take this a little bit further. I'm going to go ahead and open up my indicator list here, and you'll see that there's hundreds of different indicators in MetaStock, and maybe that's a little overwhelming for you, but that's okay. I'm going to tell you why that's not here within today's presentation. And also you can see all my most recently used or commonly used indicators are up here at the top. You'll see the GT, that stands for Guppy Traders, ATR long from Daryl Guppy. I like to use his indicators, so those are showing up on here. But I'm just going to show, let's just add something simple on here. Let's go ahead and put volume. I'm just going to drag and drop that, and you'll see now I have the volume on my chart too, which is also nice. You're maybe starting to see things that are a little better perhaps than some of the other platforms you might have. Like this is filled. I have red and green volume for my up and down. So I can choose whether this is red or green for my volume based on whether the price is up or down for the day. Or I can also have it, and that's the close is what it's based on. Or I can also say, hey, I want to know if volume is up or down based on the previous volume bar, and I can choose my different colors for that too. I can change it that way. So right off the bat, you're seeing that there's a lot of customization that's available for MetaStock. And I want to take this a step further too. Let's go ahead and look at like the MACD histogram. It's a very common indicator or even trading strategy that a lot of people will use. So that's why I like to kind of use it, because a lot of you may understand it. You'll see it automatically put that on a chart in its own window based on the histogram that I use. And again, this is something that's very customizable. I can go into the colors here and I can choose how I want this to be displayed. I can have the histogram. Maybe I want to set that to a filled line for the differential in my MACD. And I can also change all the colors on this. I can also go in and change the opacity too, for how much I want that to be showing up inside of the fill. So another really cool thing there. But still, I'd say these are all really common things that you might find in a lot of places. And now where I think things really start to kind of step apart with our platform is we have what's called an expert advisor inside of MetaStock too. So maybe you aren't entirely familiar with that MACD program or indicator that I just dropped down. What I'm going to do is I right-clicked. There's several different ways to get into this, but this is one of them. I'm going into my expert advisors here, and I'm going to click attach. And now what I'm going to do is apply. Oh, I got to slow down. The MACD, or the MACD, as some like to call it by MetaStock, moving average convergence divergence, is what that stands for. And I just applied that to my chart. And now you'll see something pretty unique that just happened here. And what it did is it put this expert on here where it now gives me buy and sell signals on my chart from where we have a crossover of the MACD. And as you can see, we have the buy here and the sell here. It's also giving me a bullish and bearish ribbon as well. So maybe I don't like having to learn how all these different indicators work or how to view them. Our expert advisor really simplifies things by just putting different types of signals onto your chart, such as these buy and sells. I'm going to actually go ahead and exit out of that MACD and turn on the commentary here as well. And this is going to tell me even more. So what I've done is I just clicked on the chart over here to go to a bar that has this buy signal. And now if I come over into this commentary, it's going to tell me about it. So first off, it says the MACD, it can provide buy and sell indicators in 3 different ways. Signal line crossovers, overbought and oversold conditions, as well as divergences. So it can be used in several different ways. One of the most common is when you have those signal crossovers, and that's where a lot of these buy signals are popping up. It says that currently on this bar here, the MACD is bullish since it's trading above its signal line, and it did that 0 days ago. So this is where you received that buy signal, and it gives you even more information here too. And it also says the price has been unchanged and has a range from a high of 149,680 to a low of 145,260. It is not in an overbought or oversold range, and there have been no divergent signals within the last 5 periods. So for not only brand new traders or beginners, I should say, but even for more advanced traders, having this extra commentary tool can be a really powerful feature inside of MetaStock that can help teach you quite a bit. And I do want to give you guys one more example as well. So what I'm going to do is come in, and actually this time, instead of using an expert advisor, I'm going to change it up just a little bit. I'm going to apply a template. Let's go ahead and jump in here. But there are also templates available. The one I'm thinking of, actually, I'll just do the expert advisor. I think that'll make it easier because I can't remember the exact name of the one I'm looking for. So I'm going to just put on a candle for candlesticks, because as I said, I like to personally look at candlesticks quite a bit. So I've gone ahead and turned that on, and it was popping up some alerts. These expert advisors can also pop up alerts. It's telling me stuff that's going on, like we're on a falling window candle right here. And you'll see this one's a little different. Instead of those like buy and sell signals, this one's altered to work more for this candlestick program that we have, and it's identifying all of these different candlesticks, such as engulfing bear, engulfing bull, a falling window, on the neckline, etc. And I'll show you guys a little bit more. Let's go into the properties of this expert advisor, and it's going to tell me all the different symbols here, and I can even turn these off or on and prioritize them as well. Maybe there's a certain candlestick that's showing multiple different patterns and you want one to show above the other. You can arrange that in here, and then or turn off ones that you don't like to look at, etc. Let's not save changes, but again, you'll get commentary on these. So maybe you can't remember all the hundreds of different candle patterns out there, or I mean, we don't have hundreds in this specific expert advisor, but we have quite a few. This will give you all the information on them. So if you're looking at a big black candle, this is bearish. This price has closed significantly lower than they opened, and then it gives you more information about it, and it can also give you information on how to trade it. Another great thing about this, like later today when we have some of our other presenters, such as Stuart McPhee and Sagar Nandi, like they have their expert trading systems that they've added inside of MetaStock that are part of our bundled offer that we're offering today. And in order to help you learn those trading strategies, you can turn on the commentary for those systems too. And we get that commentary from those partners. So they share in it. And also we help to define it as well, to kind of keep a solid level of information that you're always going to find in this commentary. And you can get so much more out of having something like this available to you versus just looking at the different lines and indicators on your chart. So those are a couple of things, that I really think help MetaStock to stand out. And to go back to another one of the questions from earlier, I guess I should say, that I said we'd be answering, is maybe you're like, okay, well, what do I do with those hundreds of indicators or systems, even if you have commentary on them? That's a lot. That's a lot of stuff to go through. And well, don't worry. That's what some of our other power tools are here for. And that's what I'm going to jump into. And oftentimes when I do this presentation, I might go in and show, excuse me, our Explorer tool, because what the Explorer what the Explorer does is this lets you search the market. So let's turn this off here. Actually, just select all. So there's, on this machine at least, you can actually get quite a bit more, or default, I believe, is just a little bit less. But there's over 464 different explorations or systems that I can scan in here for, and I can select those systems and do it across the market, which I will be showing you an example of that later. I know Robin already showed you how to scan with his system, and it took about a minute to search 5,000 securities on his indicator. What I want to do today is just show a slightly different workflow, because that's the one I normally do, and some people might be more interested in this. Instead, an option you can have is to come down into our system tester, which has a similar functionality here. You'll see that there are defaulted into this machine, there's 145 different system tests. And what a system test does is it will take a trading strategy. Let's go for example, like the MACD expert system. This system, it back tests for buys and sells with the MACD, searching for when it goes, if I hover over it, actually, oops, let's go ahead and double click on it. This searches for when it goes above or below its signal line, which is a 9-period exponential moving average of the MACD. It will also use an oversold or overbought condition for entry or exit if the crossover doesn't exist. So this is telling me exactly what this system test does. And also letting me know, hey, this can also vary depending on how much data I load. So this is a huge list of different trading systems, and a lot of our strategies have these, not all of them, because for some systems, like such as Robin's, how he was showing you, he doesn't provide just his one indicator, he offers it in his course, because there's a lot more involved with that system and other things that you need to learn, and sometimes it's not so easy to get that all programmed into a system test. So not every strategy has a system test, but a lot of them do. And what you can do with these, I'm going to go ahead and select a handful. So we'll say, hey, I'm trying to learn what trading strategy do I want to use so that I know which one I want to apply to my charts and look at. You can come in here, and if you wanted to, you could select all of them. For the purpose of today's presentation, and so that I don't keep you guys for too long, because I mean that ends up running quite a bit of data, I'm just going to run through and select a handful of these, quite a bit actually, where I'm just turning them on so we can test them and show you guys, okay, I want to learn which one of these strategies works the best on what it is that I like to trade. So we're going to come back down into here now, our instrument list. I'm not sure what this has selected, so we'll deselect them for now, just in case. And we'll come down into the equities Asia. I know we have people tuning in from all over. This applies really to any market. This allows you to select exactly what it is that you do trade. So maybe you trade the Australian ETFs, so you can select all of those. Or you can, maybe you trade, you already know what you want to trade. You only like to trade the top 10 from some newsletter that you get or something. You can select just those 10 securities out of here, or your own custom list, anything like that. I've selected, so I'm just going to select a few here. We'll go with a couple out of these. We'll check out the Bombay stock. of those. Just kind of randomizing because I want you guys to know this does work in any market. So we're just selecting a few things here. Should probably select a few more actually. All right, what I'm going to do is I'm going to say these are the things that I want to trade. Maybe I already know that, or the securities. These 10 I've selected. What this is, I'm using 1,250 records. So that's about 5 years worth of data because you're looking at about 250 bars, trading days in a year, roughly. So that's what I have selected. Also, you can say whether you only trade long trades or maybe you do short trades. Maybe you do both. I'm going to go ahead and turn on both. And then you can select the use exchange date and time. So you can use the current exchange date and time, and then choose your interval as well. I'm going to do just a daily scan. And now this actually can be customized even more. So I'm going to click into my trade options here, and you can set this up to your account specifics. So what I'm going to do is click into the account and say, I have $10,000 that I'm trading in my trading account. And I can say whether I always buy X number of units or use a certain transaction cost, or the percent of available equity. Just for the purpose of this demonstration, I'm going to set that at 25%. I'm willing to trade 25% of available equity at a time. And then I can go in, and if you have broker settings, I know a lot of people trade for free nowadays, but if you have margins or commission costs on your trades, anything like that, you can enter that into here. And then under trade execution, it lets you set, do you want to open the buy with your buy price? Say you always like to buy at the close. You wait until the last few minutes of the day and you buy right around the close. You can set it to that way and choose your sell and other options in here as well, or check the realistic market prices. And basically what that means, if the market closes today and gives an entry signal, I'm not actually going to be getting into that trade until the next morning. So if I have realistic market prices checked, that's how it's going to utilize that for today's presentation. I'm going to go ahead and say that one. And then, do you know what? I actually feel like I could include a few more of these. I don't think it would take too long. So I'm going to click on a couple more and hit start system test. And this actually can run for a little bit here, but I think it's going to be pretty fast with my selection. Okay, that was actually really fast. I probably could have demonstrated quite a few more. You saw within a few seconds, it took 24 trading strategies, used 5 years worth of data to let me know how they performed on these 10 very random selected securities. You all saw me just clicking. So who knows what we're going to see. And some of these might not trade well, and that's okay. This is just providing us with information. And so this is good information if it tells me what trading system that I don't want to use on these strategies. So just keep that in mind. These are very random. I'm not sure if the trading strategies I selected are even supposed to be specifically for a daily time frame or used on 5 years of data. But that's seeing red, that's still good data. It lets me know, hey, that strategy didn't work well, but some of these did perform really well. I'm going to go ahead and click into one that had some of the top profit. And now you'll see what it lists here. Oh, so we'll go ahead and open this up. And it looks like this might actually be a little skewed because one performed so well. Some of those might not have a lot of data on them. Apologies about that. But this does let you run the system test to see how they performed. And I can go into the different systems here and see each of the securities, how they look. It looks like some of these securities maybe didn't take a lot of trades. Let's go back again. Let's look at this cycle progression one here. And let's see how it performed. So it looks like the ones that it was trading on, because it's telling me with this trading strategy, it wouldn't have even taken trades on a lot of these. But on these two, it did take trades, and it tells me the percentage gain over that period. It tells me how many trades that it took. It tells me how many of those were profitable and how many of those were losers. So if we look at this one here, for example, it's saying that it took 44 trades over those 5 years, and 31 of those were profitable, and 13% of those were losses. So, I mean, that's actually pretty good. I can click into here, and I can get even more information on this. And again, this was taking relatively small trades, but I have additional information here. So what this tells me was my profit and how it performed, how much I had. So the performance was 7.74%. It made $774 over that period. But let's now look at this. The buy and hold profit on that security was negative $96. So over 5 years, this security went down. Okay, but this trading strategy was still able to profit on it. And that could be, you know, the reason behind why we saw red on a lot of those system tests that, or on a lot of the tests, is because some of these securities might have gone negative throughout that period. But of course, there still can be some that are winners. They match the personality of that security. Maybe other people are trading it in a similar way, which just kind of strengthens that even better. So this is a really good way of being able to find the trading system that you want to use if you already know what securities you want to watch, or securities that you want to trade. It's one way of doing that. Another way that I like to do this, and because that was so fast, I want to show you guys another example. So a lot of the ones I clicked on, you'll see a lot of these start with a PS. What the PS stands for on most of these is performance systems. And that actually used to be our, oh, were you cutting in, Jeff? Looks like Robin's mic unmuted there for a second. So I've gone ahead and muted him again. No problem. All right, so let me do another scan just because that was really quick. And I know some of these scans are actually really well. So these performance systems, it's a large list of, these were proven to be successful strategies that profited and tested on securities, not using penny stocks or anything of that nature. So high volume, normal priced securities, and all of these performed well over a certain period. So just to show another way or scan of this, perhaps I really want to trade Apple. Oops, what have I done here? Oh, I was searching by name. I'm going to go ahead and click symbol. Oh, sorry, I'm typing that in the wrong place. So I'm going to select Apple up here for my instrument. And I say, hey, this is a certain security that I want to trade, Apple. I know that it's been, you know, a very major company in all sorts of different markets. I did use the NASDAQ symbol here just because that's the one that I have memorized, but this would work for any symbol, any of these over 300,000. And okay, now I'm going to do a similar thing to what I did before. I don't think this should take too long, but maybe a little longer because this is testing quite a few strategies against Apple. So we're going to go ahead and get that started. And luckily, the broadcast isn't slowing me down because we'll see that that was actually done instantly. Oh, it looks like, let me actually go in and change my trade options here. Oh, sorry. I was mistaken before, everyone. I said that I was using 1,250 records, but I actually had exchange date and time selected. So I was only showing 1 year of data previously. I'm going to switch this over to that 5 years of data. That actually explains why I wasn't getting as many trades or as much information as I thought out of that last scan. So let's properly select the use last 1250 records. You can select whether you want to have exchange date or time. And I'm going to start that system test again. And oops, I don't think it read my symbol. Oh, plus 50 records. All right, let's see how this looks. There it goes. So I'm going to give this just a moment because this time it actually is going off of 5 years of data and these 81 selected securities. And now I'm going to pull this up. So this one looks a little bit different because I only tested it against one security. So now we're looking at a list of all the different systems that I tested. And then all the data up here is on Apple. And now, sorry, let's sort by this. This tells me something. Okay, out of all those trading strategies, it looks about half of these performed well. And keep in mind, I have this selected to do both long and short and on daily. And I didn't necessarily match that up to how all of these systems might be traded. Maybe some of these are only for a long trading strategy. So just things to keep in mind. But again, it's okay to see red here. That's data. That's telling me important things like, hey, I probably don't want to utilize any of these red trading strategies if I'm trading it on Apple. But hey, look at these ones. Quite a few here. It's not really an outlier or anything, but quite a few of them had really good performance. And you can see the percentage gain over 5 years for some of these. And it also, again, it's going to tell me how many of these were profitable, how many of them were losers, how many trades did it take. So you can also match this to your trading style. Say, you don't like to trade very often, maybe depending on how many securities you're trading, but you might only want to be trading a security once a month or a few times a month or a week or whatever it may be. So maybe a trading strategy like this one, the PS volatility breakout that traded 423 times, although it was still successful and had made money over those 5 years, that's just way too much to trade. And then there's some like this one here. It only took 3 trades, and with those 3 trades, it gave a 45% gain. But maybe that's even too little for you. You like to move a little bit more, whatever it may be. Again, this is just data to help you understand what strategies do work well and to help you match them to the one that you think you would want to trade the most. And again, you can double click on these to then get even more information. If I enter into here, it tells me the profit of that, the performance indices. One thing that I really like to look at is at the equity tab here. So if I open up this equity tab, it shows me what my equity did over time. And this is something that I would like to see, I would say. So some of these, it might just be up and down and up and down and up and down. And then right at the very end, it has a big up. And so it said, hey, you made a 40% gain, but that was just because maybe a trade that you took in the last few months that did really good, but really it's all over the place. This is pretty good because it pretty consistently goes up. I will actually say in the last year or so, it's kind of been sideways. So maybe I would actually want to look for something that has continued to increase, but this period here to about here where it's just consistently moving up, it's like, hey, during these few years here, this trading strategy was really well paired to Apple. And so that's another thing to look at here and another thing to take into consideration. And that is a really good way of answering one of the questions I said I wanted to answer for you guys today, which is how do I know what trading system to trade? If you know the securities that you want to trade already, check out our system tester. You can play around with the different settings. You can choose so many different systems. You can even create your own. Make a new system test. We have formula primers on our website and several training videos that will help teach you how you can make your own. And so you can mess around with that as well. And then also it's just gonna, help break out a lot of those or it's going to help remove a lot of the strategies that won't work. So maybe you really liked a certain strategy, but it doesn't perform well in your market, just for whatever reason that may be. And that'll help teach you that. And now, though, let me jump back into my report here. Oops. Let's see sorry, I'm forgetting today's date. For me, it is the 10th. But, it's going to be the last report. Silly me. So maybe after I've done that, though, to just change things up a little bit, I decided, hey, I want to use that PS fractal trading system too. So that's the one that had the best performance on Apple. And so what I can actually do is, there's several things that I can do. But for one, we can go into a chart here. Oh, let's go ahead and open up Apple with the same 5 years of data that was ran on previously. And I'm actually not sure if this one has a specific expert performance. Fractal Trading System 2. So that's one of the expert advisors in here that I was showing you guys earlier. And I can hit OK here. Oh, I realized that Apple actually didn't load. I wonder if my other computer is trying to sign me into MetaStock again. Let's see. Make sure I typed my symbol in correctly. Oh, I did not type it in correctly. That would be the reason. I entered the wrong symbol. Okay. And I have this default set to a different system that I was showing previously. You can change your default or even just set this to open up with the trading systems that you want. I didn't have this one applied because I'm kind of just doing everything on the go with you guys today, because I find that to make things can make things a little bit more interesting, or sometimes it causes you to have technical issues. But I think things are actually going pretty well. So here we go. This is the Performance System 2, Fractal Trading System 2, the expert advisor for it. And then it gives me commentary on how to trade that system 2. I can go in and learn about it here. There's also like a manual that comes with our performance system that you can utilize. And I can move around and I can see that there's different exits on here and things of that nature. So now I'm able to go look at a chart of it and I can follow it and see when I'm trading it. Or there's another thing you can do, and this is what I was talking about earlier with the Explorer. To say perhaps that fractal trading system, you know that you want to use it. That is your favorite trading strategy. And again, that was just an example of something that worked well on Apple, but say that is your favorite strategy. And then the reverse of this, saying, how do I know what to trade? If you already know the trading system that you want to use, now I can go and look at this from another direction. So I'm going to go into my Explorer this time, and let's go ahead and put PS into the Explorer and F. So I know that I like to use this fractal trading system signal. And maybe this isn't the best example because I'm not 100% familiar with this one, but I think it'll still work for demonstration purposes today, as long as you all understand that. So I have that one selected here and say, I know, let's go ahead and open up my my public online data list. And you know what? Yeah, we can even say, I like to trade the Bombay Stock Exchange. Maybe you're watching from India today, and that's the market that you like to trade. And you're like, hey, I want to see what's giving me a signal on the fractal trading system today on the Bombay Stock Exchange. We're going to load the same 1,250 records. That's going to guarantee that it's matched up to that same system test I used, just in case it matters for this one. We'll have the filter turned on, and I'm going to run a start exploration. And now what this is doing is it's scanning the 5,169 securities, in the Bombay Stock Exchange to see what is giving a signal today. To see what is giving a signal today for the PS Fractal Trading System. And that's going to save me so much time. So I don't actually have to go through these 5,000 charts with my Fractal Trading System 2 expert applied to each and every one of those charts, because that's going to take a really long time. And this platform here, it's designed to help save you time. Normally these also run a lot quicker than when we're online doing a demonstration like this. It seems to use up quite a bit more resources. And also it depends on the trading system itself, because some of these trading strategies have to look at, maybe they have 30, 40 indicators built in to give you a buy signal or a sell signal or whatever it may be. And then you're using that on 5 years of data. So it's loading those moving averages over those 5 years and everything like that. So depending on the different strategy that you're using, the times for this can vary, but I can tell you one thing, it's way, way faster than you would be able to click through these 5,169 charts yourself. And again, I just wanted to do this for demonstration purposes. We did see on some of the explorations, they do run really fast. Like Robbins was done very quickly, and this one's still going pretty fast. And you'll see it's actually rejecting 97.7%. This is the same thing we got to see earlier today around that rejection rate. So that's saving you the time from looking at those thousands of different securities to pull up this trading system. And then once it loads, it's going to give me a big list of results too. But I do actually want to point something out too, because a lot of the time I get caught up in saying that the Explorer is used for buy and sell signals, but it can actually be used for a lot more than just giving you your buy and sell signals. So there's other things that it can do too, because it can basically search and report on any type of mathematical data. And so let's actually see if I can find a good example here. So like maybe I want to know the 5-day high volume price. So this is the average, the average daily number of shares traded over the last 5 days times the average closing price over the last 5 days. So that's not necessarily a buy signal or a sell signal, but it's important data that I might want to look at. A lot of people use it for screening too. Like you might have a universe of stocks you want to look at, like something very common that a lot of us I know will do is maybe we only want to trade something that has an average of 200,000 volume per day. And maybe we don't want to trade anything that's under $5. And we also don't want to trade anything over $100. So I could very easily create, you can actually find some videos I know that Jeff has done showing you exactly how to create this type of exploration and say, okay, I want to scan for those specific things. And I know that I want to trade the Bombay Stock Exchange. So I run that exploration across those 5,000 securities on the Bombay Stock Exchange. And I'm just making these numbers up, but say it reduces that down to 3,000 securities that fit that volume amount and that price range. It would, then that's going to give me a lower list, and I could save that as my own custom list. And then I can run my explorations or my system tests just across that list that meets the criteria that I've broken things down into. So there's a lot of different ways of using this. You can also get a lot more information, a lot of information out of one single exploration too. Like a lot of the different trading strategies or explorations, they'll pull up and you get columns with rows of different data saying, hey, this is the current price. This is how much it's gone up the last few days. And whatever other criteria might be in there. And it's also really easy, again, to create your own explorations to get your own data. Maybe you have a very unique set of numbers that you like to pull or know about securities, and you can easily create an exploration, or more than likely find one that's already built in here and use it for yourself. Plus, I know later today, Sagar is going to be going over, maybe I don't remember the exact name of the exploration. Here we go. His Q, or superior profit systems. And when he does that today, he'll probably show this to you himself. But you can see he has many of different explorations and criteria, and there's a lot of information. If I hover over these, it tells you what they mean. So a lot of these things, it can pull so much more data than just buy and sell signals or just numbers too. But you're going to find we have explorations for his trading strategies. We also have explorations for Stuart McPhee, trade launch systems, his altitude, ignition trading system, his reversal signals, his longs. And a lot of these are built to set up like, hey, only for shorts or only for longs, etc. So you can use all the information from these explorers to help you do your analysis a lot faster throughout the day. So even if you maybe already have a set criteria that you're trading off of using a different platform, well, hey, maybe we can take your 2 hours of looking at the market per day and reduce that down into 15 minutes. That's about how long I normally spend when I'm looking at the market or updating my trades. It's just about 15 minutes towards the end of the trading day. I can jump in here. I can run a couple of explorations to see if anything alerts me to a potential buy within my custom list or a sell for something that I'm already in. And then once I've ran those explorations, I can very easily open up my charts and then look at things in there. And if I need a refresher on how a trading system that I'm using works, I can turn on the commentary to get a little bit more information. But for me, I can still work, you know, my full-time job that I love here at MetaStock and be able to get on and do my own personal monitoring and marketing watching of the markets in just a few quick short minutes. And so that's what these tools are here for. So even if you already have strategies that you like and you already know how you want to trade them, maybe you can create your own explorations in MetaStock to help make that a lot faster for you. Or maybe you create it as your own system test so that you can identify things more easily. And then you can even add optimizations into those system tests too, so that they have like different exits or things of that nature, and benefit from them that way as well. So that is the explorer and kind of the system tester here in a nutshell. And sometimes, you know, people like to do really unique things. I've had people choose every system test in here and scan them against every US security there is. And, you know, that type of system test might take a really long time to run, but it's something that you wouldn't have to run very often. Maybe you set it and forget it and then come back when it's completed later on to learn, hey, these are the best strategies for all these US stocks or things of that nature. This scan is taking a lot longer than most do. This actually might be pulling quite a bit of data for the PS fractal trading system. But again, once this is done, or if I'm going to be able to move on and look at just the charts that I want for that trading system so much faster than if I had to go through all of them myself. Let's see. Oh, and I'm actually realizing now that I'm running out of time. So this scan's almost complete, but it's just going to pop up and give me a list of my results and rejects, and then you can get more information in the results. I actually kind of explained all that really well, and we got to see Robin do his demonstrations. So I'm going to jump back into my PowerPoint here to make sure I don't take up too much time. Let's go right here while my MetaStock finishes that in the background, no problem. So probably some questions like, hey, how much does MetaStock cost? I know someone earlier was asking how much for the Explorer tool. Well, hey, all of these power tools, the system tester, the Explorer, the charting, and everything else you saw in there, that's all included with your MetaStock subscription. And you can get our daily charts version, which works with all your daily and above timeframes. For starting at just $59 a month. And then the MetaStock real time, that one costs $265 a month, but you get so much more with that. Not only do you get MetaStock, you also get our Zenith real-time market data and news tool, which is going to give you like news and fundamentals and things of that nature. We actually haven't even touched on that at all today, but over $1 billion went into the creation of that. And that's the reason for the price point there. But professionals and institutions that use a very similar version, the Icon version, they can pay thousands of dollars a month and you get it for a fraction of the cost there. If that's something that you're interested in and getting a trial of MetaStock for today's promotion, we are giving you 3 months access for the price of one, and you can go to metastock.com/sales chat, and Robert is in there ready to answer any and all of your questions right now. And he can help get you set up on a trial, or maybe answer any other questions, or help get you the right package for you. As you saw, we do cover all of the world basically with over 300 securities worldwide. You can sign up for different regions so that you're getting just what you need. And then all of our users get a benefit from our MetaStock free unlimited support. We also give you white glove setup and installation service. We can help you from start to finish to get the entire platform installed. And then we can even schedule you for a free one-on-one session where we do have one of our support representatives do kind of like a full hands-on demonstration. They help customize things to your liking and show you how the platform works, and at no cost to you. So that's fantastic. And yeah, again, to get that, you can go to metastock.com/sales chat. You can also sign up at metastock.com/APAC-Summit 3-for-1. If you're maybe watching this after hours and our chat room isn't open, you're welcome to sign up there. And you would get all of this included, or as you're going to see with our next presenter, Stuart, and then a little later from Sagar, we're actually doing a great bundled offer today where you're going to be able to pick up their trading systems, which they're going to do a great job of showing off later today. You'll get 3 months access to the Superior Profits add-on, normally worth over $300. Same with Kevin Nelson's 3 months of premium MetaStock training, where you get hundreds of video recordings and access to live weekly classes, as well as not only Stuart McPhee's trade launch systems, but also his advanced training course that they put a ton of time into, and where you'd be able to learn all the ins and outs. You can get all of that for a bundled deal where you're saving almost 50%. Normally about $1,700. It's going to come in at just $896. And maybe you want to stick around to learn more about those strategies, or maybe you want to just jump into the chat room right now and ask Robert about them, or get on that deal. I just wanted to make sure you guys know that it's available in case I don't have much time to talk about it later. So definitely check that out. If you haven't, you can go to metastock.com/APAC/deal or -deal, as you see here, or again, just into our sales chat room to ask Robert some questions. Again, I want to thank CMT Association for sponsoring today's event. I know that I've gone over by a minute already, so I'm going to skip through these slides so that we can get our next speaker on, Stuart McPhee. He's been a partner of ours for quite a while, and he does a really good job of showcasing his different trading strategies. I've watched a number of his different presentations and gotten to speak with him a few times. I think everyone is really going to enjoy what he has to put on today. Let me see if he is in the room with us. Just one moment. Oh, I do see him there. Hi, Stuart. How are you doing today?
I'm well, thanks, Bobby. How are you?
Hey, doing pretty good here. Yeah, so far things have been running smoothly, and I'm really thankful that you could come on and make it to present for us today. I think our audience is really going to enjoy what you have to share and show to them. And I think with all of that said, I'm going to go ahead and just pass the presentation over to you here and let you take things over. So make presenter. Yes, so I think you should receive a pop-up. Perfect. So I am seeing
all coming through okay?
Yep, that's coming through okay. I see the top 10 trading habits of professional traders, and I see you. You're coming in clear. I hear you. And you look great. So yeah, I think you're ready to take over. I'll give you the reins.
Okay, thanks, Bobby. Well, thank you. Thanks for passing over the reins. Very good afternoon to you if you're in Australia or in Singapore or somewhere else in Asia. Maybe a very late evening for some in other parts of the world, or a very early morning if in Europe. But thank you very much to MetaStock for the invitation, the opportunity to spend the next hour or so with you. I'm going to just run through the top 10 trading habits of professional traders, but I think there's a little bit of something I'd like to add to this just for context, and that is I have had the opportunity over now more than 20 years, which sounds like a long time, to have coached traders one-on-one, spent a lot of time with individuals, people like yourselves who are going along the journey and trying to become a better trader, facing the obstacles and the challenges and the frustration and the stress along that journey, And I've also in the last, 15 years or so had the opportunity to travel all around the world, whether it be Asia, North America, Europe, and certainly throughout Australia, talking to individual traders, whether it be in a large group, small group, or again, individually. And what that's allowed me to do to really align myself with my own trading journey back many years ago is it's given me a very good insight into what it takes to be a very good trader. And whilst I've been along the journey myself, I've heard of many, many different stories from other people and who have had experiences that I haven't had. And I've learned from them and I've helped them through those situations, but it's also helped me better understand, again, the journey that traders undertake to try to become a consistently profitable trader over an extended period of time. So yes, I have MetaStock open. It's sitting here in the background, waiting to show you a few things. It's going to be a little bit more PowerPoint driven today. But what I'll just start with before I actually get into my presentation is if I was in a room now with all of you, we're all sitting in the same location and I was standing in the front of the room and all of you are sitting in the audience, I would say something along the lines of, have a think about your trading journey to this point. Have a think about your trading experience. Have a think about your profitability or how much you've lost. And have a think about your level of satisfaction with your trading. Have a think about your level of satisfaction and rate your satisfaction level on a scale of 0 to 10. 10 is the ultimate. You could not be more satisfied with how your trading is going, and 0 is obviously the extreme opposite. And I don't expect anyone to have a 0 nor anyone to have a 10. But I ask people to rate their satisfaction levels with their trading and how it's going and how is your journey going and how successful have you been. And what I do is I get everyone to think of a number. And then I'll go around the room in one form or another, and I'll get a feel for what those responses are. And, most people are around the 5 or 6. There may be an occasional 7 or 8. I've never seen a 10, nor have I seen a 0, but I've seen plenty below 5. And I think to myself, well, there's a clear gap here between, satisfaction level and expectation. And the expectation should be the 10. At the very least, it should be 9. That's what our expectation should be. But most people, well, no one's at 9 or a 10. They're all 8 at best, and the rest are 7, 6, 5, 4, and in some cases even lower. So there's a clear gap between that level of satisfaction and the expectation. And what is that gap? What's causing that gap? And what I have found over the years is in a lot of people's cases, it's not a knowledge gap. Right? It's not a knowledge gap. It's not a misunderstanding of technical analysis, or I didn't know that's how you set a stop, or I didn't understand how to use MT4 or how to use MetaStock, or it's very rarely a knowledge gap. And more often than not, it's an execution gap. It's an inability to execute. And in summary, what I found is a lot of people sort of know what they should be doing. What they fail to do is do it. They actually fail to execute. And again, it's not through a lack of knowledge. It's through a lack of discipline. It's through a lack of confidence in what they're doing, and certainly a lack of conviction in what they are doing. So I guess my message before I even begin today is all the other things you may have learnt in the sessions today and all the webinars, and someone taught you this indicator, and I saw in the chat there someone asking about average true range, which I think is a really good indicator, a great little tool to measure volatility, and someone else may have shown you something. But at the end of the day, you need to put stuff into action. And it's all very well and good in building up this knowledge, but at some point you must act, and you must put into action, and you must manage risk well, and you must be disciplined, and you must gain an edge in your trading strategy, and you must have a trading process and a trading plan and implement it and actually do this and do it for real and do it to the best of your ability. So that's my little lecture before we even get going, that the key message for me is the taking action. And so what am I talking about in this presentation today? I'm talking about habits. And you all know what that word means. But it means things we do, and things we do even without thought, instinctively. And we can develop habits. We can certainly develop bad habits, but what we need to do is develop the best habits to give us the best opportunity of making money, because that's why we're doing this, right? That's why we're trading, is to make money. So let's get into my presentation today. Again, thank you to MetaStock for the invitation. It's great to be here. And sorry, I should just not give that lip service. And what I will do is just quickly go through my beliefs on trading strategies. And then we're going to go through what I believe are the top 10 trading habits of professional traders. I'm here to help. You all are reasonably familiar now, I think, with the GoToMeeting or GoToWebinar platform. You have access to a chat window. I have that open right here in front of me. If there's any questions at any time, please do not hesitate to ask. I'll be more than happy to help. Well, I think it's important before I start talking to you about, hey, here's my top 10 trading habits, you need to think, who is this guy talking to me now? All right, I've heard someone else talk this morning. I heard someone else, who's this Stuart person talking to me? Well, I think it's really important that to put into context all the things that I'm going to share with you in the remainder of this session. I think it's important that you get a feel for what I believe with trading, because I think we all have different beliefs. They might be very similar in a lot of ways, but we also have very different beliefs about what makes a good trader. So what I wanted to specifically talk about is my beliefs on strategies when it comes to trading. And I just have 2 or 3 slides here to talk about those, again, to provide some context so you get a better understanding of who I am and the way I view markets, to put into context, as I said, the remainder of the presentation today. And again, I do have MetaStock open, and I certainly intend to go in there and just show you a few little things to support the trading habits that I'll be talking about. Well, the first item is to be prepared to zoom out to gain perspective. So what I will do is actually go straight to MetaStock, and we'll just open up a chart here of something. I'll just go to the top. So I'm in the ASX here, the Australian Securities Exchange. I'll just go and have a look at BHP as one example to open up the chart. Actually, that does have one of my, I heard talking about my plugin before. Here's actually the reversals plugin, or part of that plugin, which I obviously was looking at not so long ago, which is why it's actually appeared there. So what I'll do is I'll just go back to default template, and just give me a second here while I sort myself out. I want to load maximum data. There we go. So what I mean by zooming out to gain perspective is looking at a chart is it's very easy to be caught up with what's going on the right-hand edge of the screen. And we can be very focused on that, because that's, I know, where we make our decision from. I know we can't trade in previous. We have to be looking here to try to work out what's going to happen next. But it's very easy to get too focusing on what's happening and not to lose sight of the bigger picture. And what I talk about zooming out is I always zoom out to gain perspective, always. So here I have now 30 years of trading history for this particular stock, and it gives me just a better feel of where the current price is in relationship to where it has been. Again, I know I cannot trade in the past, I know that. But what I'm able to do now is I can see very quickly it's trading near all-time highs. I can see that. And as I zoom in a little bit further, I can see it achieve those all-time highs back here almost 12 months ago, fallen away very strongly, and it's coming up towards that all-time high now. Well, see, all of a sudden now, just looking at this, I look at 48.50 thereabouts, and I look at that as a potential key level, as an example. That's the all-time high. That's likely to provide some resistance. It's tested that level twice, done it again, fallen away very sharply, come close to doing it again and fallen away sharply, and done it again and fallen away. That tells me something. That tells me something about that level. And the issue is, if I zoom in too closely, I lose sight of that. I just have no perspective. And I could talk about this a lot longer, I won't, but that's just that first point, is I think it's important to zoom out to gain perspective. I notice I've said zoom out. I should say zoom out to gain perspective. I also believe in trading with the most obvious direction. I believe in a trend, following trends. I actually just did an education course for a broker here in Melbourne. I actually did some staff training for them. And one of the things that I did was I just showed them, and here's some of my trading systems here. I went through the ignition trading system, got out a report, and I went through some of these stocks here. And sorry, I should show you the list. I went through some of these stocks here, and this is all for short trades. And one of the ways I was able to distinguish between the good of those opportunities and the not so good was simply, was there an obvious direction? In some cases, whilst it met my criterion, the current trend was reasonably flat, even though technically or mathematically it actually met the criterion. And I saw the other half in that list, which were very, very clear, obvious trends. I'll just quickly, I've run another scan since then. So what I can just quickly do is do that ignition scan again. This is for the short, so I'll do it not on a daily, not on a monthly chart, but a daily chart. And of course, using local data, this doesn't take data. Doesn't take long at all to do that. And there's the same sort of 16 stocks. So what that allows me to do now is to go to the chart, deselect all these, and come down and start to look through each of these in turn. So, and what I can do now is very easily, looking at this black line, determine which ones are relatively flat, for example, that one, as opposed to that one, which is showing signs of a clear, obvious direction. And so why I believe in trading with the most obvious direction as a trend follower is I've never said trading is easy, but I think it becomes less difficult if you trade with trend. That's what I believe. Don't trade every signal nor strategy. I think it's really important to focus on one strategy, become the master of that one, forget about trying to trade 10 different strategies. And even though, back here with, doing that scan before and coming up with, 16 stocks out of 500, which meet my criterion for an ignition short just in the last 24 hours, you wouldn't trade every single one of those. You just wouldn't. And what I tell people is you need to find the best. You need to find the highest quality, highest probability, lowest risk trades within those group of opportunities that have presented themselves to you through the Explorer. That's the key. And to trade, not trade every signal or strategy, but I want you to, trade quality of opportunities rather than quantity of opportunities, quality over quantity every day of the week. Don't trade every signal, don't trade every strategy. And in line with that, I want you to become the global expert of your trading strategy. Nobody should know your strategy better than you. You should become the global expert. Few more beliefs. I believe in higher timeframes, produce better signals. We know in MetaStock, coming back to my chart here, we know, if we have real-time data, for example, that we can vary, the periodicity of the chart that we're looking at all the way down to tick, 1 minute, 5 minutes and so forth, all the way through to perhaps more common day weekly charts. We can go through an entire menu. Other execution platforms actually provide you more than that, but this is quite a few, different periodicities. And what I don't believe in people doing is looking for trading opportunities in every single one of those chart periodicities, because the way you trade a 1 minute chart, which I think is actually quite silly myself, but the way you trade a 1 minute chart is very different to the way you would trade a daily chart. So for one person to try to trade from a whole range of different timeframes or trading styles, to me, is just one of the most silly things I hear about when people talk about trading. That's just my personal opinion. So what I do tend to believe is that the longer timeframes, the more daily, weekly, 4-hourly charts, just produce better trading signals, more accurate, higher probability signals than, say, a 1 minute chart, which leads me on to avoiding intraday charts. I just think there's too much noise. There's too much sporadic activity. There's almost just no logical flow in a 1 minute chart. What's happening in this 60-second period compared to the next 60-second period, it's just no logical flow. And what I find is looking at daily charts just provides a much more logical picture, story of what, a currency pair is doing, an index is doing, a stock is doing. There's just so much more logic and flow, and technical analysis, I believe, becomes far more effective when you slow down that time frame. That's my personal opinion. And finally, my beliefs on strategies, I believe in letting trades run their course. You are, no offense to anybody, you are the weakest link when it comes to your trading. I'm sorry to say, you are the weakest link. And it's very easy for us to be tempted to interfere with our trades. Leave your trades alone. Let them run their course. Let your trading plan do its job. I strongly believe in that. Don't second guess yourself. Don't change your rules on the fly. Don't have a position open and go, you know what, I'm pretty certain that's going to happen tomorrow. I'm going to change my exit. I'm going to get out. Very, very rarely can you be very certain about what's going to happen tomorrow. Nobody knows what's going to happen tomorrow. And it's only in extreme cases where we are reasonably sure that the index is going to drop, 500 points, or it's going to drop 7%, or this is going to happen. And they are rare occurrences. Most times you have absolutely no idea what's going to happen tomorrow. Don't second guess yourself. Don't change your rules accordingly on the fly as you're going. Silly stuff. There can be an illusion of control when you stare at charts. It can be a little bit addictive. In other words, don't do that. Leave your trades alone. Don't look at them. We have execution platforms now where you can structure the entire trade. You get in, you set a take profit level, you set a trailing exit, you set a stop loss. You can do all of that as you enter the trade. You can actually set and forget. You can set the trade going and never look at it again. The technology is there. We just need to have the confidence and the conviction in our trading plan to be able to do that. But if we can do that, I think it's tremendously advantageous, incredibly advantageous, because it avoids all these things. It avoids us getting involved, not letting trades run their course. We will second guess ourselves. We will change our trades on the fly, emotionally, just, irrationally. We don't have to, right? Technology's there. And good trades take time to pay off. One of the things I will show you just on that point there is what I'll just quickly do. Again, I heard just Bobby talking earlier about, the Explorer and the amount of information you can gather from this tool. And I must say, yes, I've been using MetaStock for a long time. And yes, this is a MetaStock event. But I would have to say the Explorer within MetaStock has had just an incredibly profound impact on my ability to trade. The ability to gather information, to sort through information. There you go, there's my little plug. But to have this working for you is very handy. So what I'll just do is I'm just going to do, you can see I've got plenty of things here set up, and there's more further down the list. Lots of scans that I've set up over time and I use. And this one is a large gainer. So I'm just going to run through the top 500, again with local data. This doesn't take long. I know online data on demand takes longer. But what we've found here now is all these stocks, and there's 21 out of the top 500, all of these stocks in the last 12 months have gained more than 100%. More than 100%. And despite what the market is doing, and certainly the Australian market, and this is certainly typical of many broad brush indices and equity markets around the world, it's been pretty flat the last 12 months. There's been very few exceptions to that. But there's 21 stocks that have achieved a more than 100% gain. What I'll do is just show you some of those, right? So there's the first one. We're going to flick through these. These have all achieved more than 100% gain. Some of them are 200, 300% gain in the last 12 months. But what you'll notice through all of these, I'll just stop on this one as an example, none of these jumped up 100% in 2 days. None of them. They were all just gradual, moved up, moved back a little bit, moved up higher, and then back a little bit and continued on. So this stock here, 12 months ago was back near 45 cents and now it's near $2, right? So that's one of those that's achieved 200-300% gain, but it hasn't done it overnight. Okay, it had a bit of a jump here, but that's not out of the ordinary. It's just been a gradual climb. So my point being is good trades take time to pay off. At the end of the year, you'll look back and go, what have been my best trades this year? And the top 3, they were not overnight success stories, right? They took time to pay off. And here's the key message out of all this before I get into my top 10 trading habits. Here's the key message. For that to pay off, you need to be, remember, you're the weakest link. You need to be prepared to see that trade out. You need to let them run their course. You need to leave that trade alone. Don't second guess yourself. Don't change your rules. Don't stare at the chart. Let your trading plan do its job. Have the patience, have the discipline, have the exit strategy ready to go to take advantage of a stock that you get into and pays off as well as that. And before I finish on this, I've been often asked when I've just demonstrated that situation, I've often been asked, how do you find stocks that move 200-300% in 12 months? And the answer is very simple. You don't. You can't. When you buy something, you have no idea where it's about to go. The key question is, if I am lucky enough to get into a stock that is moving as well as that, how do I develop an exit strategy? How do I develop the patience? How do I have the discipline to see that trade through to the end? So when it has gained 300%, I still own it. That's the key question, not how do I find it? Okay, let's get on with this. These are my top 10 trading habits of successful traders. Take these as you see fit. Agree with me, disagree with me, that's perfectly your right and your call. This is just through my experience. As I said, I've been trading now for a long time, but more importantly, I spend a lot of time talking with traders that are better than me, traders that are on the, not so good as me and are still struggling and trying to get it together. Use data in Australia we would say, data to drive your decision making. We'll talk about each of these in turn. Stick to your time frame. Definitely keep it simple. Follow a process and be consistent in that process. Maintain a positive mental attitude. They cut their losses. They don't over trade. They do not listen to others. They keep positions small, and ultimately they follow their trading plan. There you go. That's my presentation. Done. There's the top 10 trading habits of successful traders. But that's unfair to you. What I should do now is, of course, and go through and explain all of these now. So with technical analysis, I believe technical analysis is an approach. It's not the only approach. It is far from perfect. It can be very complicated and mathematical, but I believe it should be kept simple. All we're trying to do with any form of analysis, including technical analysis, is to increase the chance, increase the probability of having a profitable trade. That's all we're trying to do. And what we can do, and this is the beauty of the Explorer, is the consistency. And what we're able to do is come back to the Explorer, ditch the large gainer scan that I just showed you before. I'm able to come into the Explorer, select the trading system that I want to go and scan through. And for example, it might be my ignition, just looking for short trades. I scan through the top 200 stocks, let's say, and again, using local data, this literally takes seconds, and we'll have a handful of stocks at the end that have met that criterion, which is how many? It is quite a few. It's 25. I think I've done that correctly. Daily. Oh, I've done the all orders as well. Hang on a sec. I don't want all those. Just do that again. Sorry, shouldn't take as long. There we go. So it should be fewer than 16. So there it is, 9. So 9 stocks out of the top 200 have met the criterion for that trading system in the last 24 hours. That's the beauty of the Explorer, is what I'm doing is I'm, setting up a set of rules, set of criterion, which I believe provides me an edge. It increases the probability of having a profitable trade, and the Explorer allows me to be consistent in that approach. And this is the key to developing a trading strategy. You need to find an edge. You need to gain and develop and find an edge, put that edge into your MetaStock, into your Explorer, scan for that edge, and then manage other things well, like the managing of the risk, the position sizing, getting out at the right time. And good things might happen through that consistency, using data to drive your decision. So all we're looking at is, with technical analysis, we're looking at price action. We're trying to get a feel of what market participants are doing. We're assuming patterns repeat themselves. This is what technical analysis is all about. We know that patterns repeat themselves in the market. We know that patterns are caused by people buying and selling, demand and supply, diminishing demand, increasing supply, increasing demand, diminishing supply, whatever they might be doing. We know that those form as patterns, and we're able to observe those patterns. We know over many, many years of research, we're able to gain an insight into what those patterns mean, what they're likely to result in, what price is likely to do afterwards. Well, that can give us an edge, and we can incorporate that edge into our MetaStock and have MetaStock scanning for that edge. And I certainly think technical analysis has its applications over the short term. But that's all we're trying to do, is using data to drive our decision making. And that's the beauty of this tool here. That's the beauty of this tool here, is that I don't know what it's about to present to me. I just know I'm going to do a market scan. Within 10 seconds, 20 seconds, it'll go, here you are, Stuart. Here's all the stocks that have met the criterion. And I think the key with this, when you go to the reports, is the rejects list. Not that I go and look through that rejects list, I don't, but it just shows you that most stocks didn't meet your criterion. So here we are again, we're using price information, we're using data to drive our decision making. The largest companies in the world use information, use analytics, they use data to drive their decision making in all facets of their business. They use data. It allows us to be objective, it allows us to be unemotional, it allows us to be very clinical about the way we make decisions. Traders, I think, can do the same. So far as data is concerned, here are key performance numbers that we need to monitor and track as traders. You need to know the percentage of winning trades you have, your winning strike rate. You need to know your losing strike rate, the percentage of losing trades. You need to know that when you do have a profit, what's the average? And you need to know when you have a loss, what's the average? These are our key performance numbers. You need to monitor these. I first learned about this a long time ago when I read Trade Your Way to Financial Freedom by Dr. Van Tharp, when he talked about expectancy. He talked about marbles, white and black. He talked about snowmen and throwing snow at a snowman. So this is where I learned about the really, really important role that this plays, tracking our performance by understanding these numbers. Okay, good traders stick to their time frame. I've sort of spoken about this a little bit, the fact that I don't want you running the menu of periodicity. Just because your MetaStock real-time allows you to, change the periodicity here and change it to 1 minute or 5 minute. Even your execution platform through your broker, maybe use MT4, maybe use a in-house platform that broker has developed. They're probably going to have more periodicity options in their menu. And I think the worst thing you can do is just look at all of them. Well, I cannot find anything on the daily chart. I'm going to go and look at an hourly chart, 30 minute, 15, 10, 5, 1 minute, 1 second. I'm sure I'll find some trading opportunities down there. But you don't trade that way. You trade off daily charts. What the 1 minute chart is showing you is of little significance, little relevance to your trading. That's why I talk about, you must stick to your time frame. It is possible to zoom in too much, you lose perspective. Okay, so don't lose perspective. I always work on a typically 200 to 250 periods, regardless of the periodicity. I'm sure there's a setting here somewhere. It used to be the load options. I think it's in here somewhere still, where you can control. Someone will help me out here. You can also, that's the Explorer. You can specify here to display X number of records. And I don't know what the default is when you set up MetaStock, but I always have it set at 250. So that means if I'm looking at a daily chart, I always am, bang, there's 12 months worth of trading history. Doesn't mean it doesn't load up the rest. It's just what that displays to you. So I can zoom out quickly. I have a quick look, zoom out, zoom back in again, rather than just displaying 5. If you're using an hourly chart, that's roughly 2 weeks, for example. So it's all relevant. All relative to your trading style, your time frame of what that 250 means. But I always set that at 250. I also always load up the maximum number of records as well. Here's a little tool that I help people to identify what is the best time frame for them. And what I try to tell people is have a think about what your ideal trading looks like. We're all a bit different when it comes to trading. What does your really good trading look like? If you were to picture yourself in 12 months and go, wow, look at me, I'm trading really well, I'm making really good consistent money, things are just working so well for me with my trading. What does your trading look like? What is your average profitable trade duration? Using the column on the right-hand edge of this screen here, you could put yourself into what does your average profitable trade duration look like? Is it minutes to hours, hours to days, days to weeks, and so forth? We can all put ourselves in one of those categories. And when you do, you can come back to the middle, and I'm going to assign you a trading style, maybe very short-term, medium-term, or the like. I can tell you now for my stocks trading, and this is where the altitude system really helps me, is medium-term. My average profitable trades are months. When it comes to my currency trading, it's short-term because my profitable trades are week and a half, maybe 2 weeks. That's short-term. Once we've assigned ourselves that category of trading, I can then say, well, here's a suitable periodicity of chart periodicity to best reflect or suit that particular trading style. So for example, my medium term for my stocks using altitude, I'm going to use or should use a daily or a weekly chart. Now I can tell you I use a daily chart, but what I can also tell you is a 1 minute chart is of little relevance to me. What's happening in the next minute or that minute or the next and the next? I'm looking at months here to make my decision. Why do I care what happens in the next minute or two? Unless something out of the ordinary happens, but just normal trading, I really don't care. I need to move on as my time starts to disappear from me. I've talked about simplicity for a long time. You know, I have my book Trading in a Nutshell now in its 4th edition. I do not have a copy here with me to show you. Believe me, it does exist. Whenever I sell one of those at an expo, at a trade show, at a live presentation, and I sign that book, I always sign it with "Keep it simple," and then I sign my name. Keep it simple. As human beings, we have a tendency to complicate things. And as human beings, it's actually hard for us to be simple. So it's very difficult for us to simplify things, but it's very easy for us to complicate things. That's human nature. And with trading, it's very easy for us to think, well, actually, trading is not as easy as I thought it was going to be. I need to really complicate my trading approach. My solution really needs to be quite complex. And so it's counterintuitive to think that a simple approach could actually have any chance of being successful. And yeah, it can, and it does. And I really do encourage people for simplicity. It is counterintuitive. I mean, all the time tested principles are straightforward. Following the trend is a relatively simple concept. Cutting a losing trade is a relatively straightforward concept. If I say buy a stock at $10, and if it gets down to 9, you need to sell it, you could explain that to a 5-year-old child. Like, it's a pretty straightforward concept. So the time-tested principles are straightforward. How we do it, yeah, sure, we can complicate things a little bit, but we don't need to. Look at clean charts. You've already seen it, all the charts that I look at here. I mean, they're relatively clean. They're not covered in indicators and line studies and everything else. I mean, sometimes I'll throw in my expert advisor for altitude. I'm sure it's here somewhere. You know, sometimes I'll do that, and therefore I will have the commentary on, and we'll read about stuff, and you know all about this and how MetaStock can do all this, and has all my buy signals and all that sort of stuff through there. But I do tend to look, and if I just come back to the standard sort of white background, which I do tend to like, I do like pretty straightforward, simple looking charts. That's just me, a minimalistic approach. This is a image I've used for a long time. I got it out of MetaStock maybe 15 years ago for a presentation. I use it now just for tradition. You know, I did a personal coaching session once. This one wasn't the exact chart, but I said, okay, let's spend the first 10 minutes. You tell me how you trade. And they said, right, let's look at some charts. And I've looked at this chart and was just completely swamped with things. And I'm trying to go, where's the price? Like, what am I looking at? Well, this is how I trade. And off they go to try to possibly explain how they trade. And I think this is just, you know, as Greg Morris, a friend to MetaStock, once told me, he said, you know, this is not trading, this is playing with software when you just throw a whole bunch of stuff onto a chart. One of my favorite quotes when it comes to simple from Curtis Faith out of a book, The Way of the Turtle, about the turtle traders. Trading is simple, but it's not easy. And simplicity and ease are very different things. They sound the same, but they're not. Trading is simple, but it's not easy. I believe in following a process, following a logical step-by-step sequence. I believe in the first thing you should do is go and check your open trades. Just check how they're going. That's where you're at risk. You're not at risk with your money in your account safe. you're at risk with open trades. So go and monitor and just check they're okay and adjust stops in accordance with your trading plan if you need to. Then you begin the process of scanning your universe. The scanning your universe, of course, one of the great tools with that, I think I might have told you this, is the Explorer within MetaStock. And that is the ability for me to go, right, let's go and check this. I'll scan through the top 500, make sure it's a daily chart. And this is looking for a lot of criterion, mind you, and doing this live right before your very eyes. And again, using local data, this can be quite quick. Bang, done. So I have 12 stocks out of 500 that have met my criterion this week for my altitude long scan. That's it. So step number 2 in the logical step-by-step sequence of my trading process, it can be that straightforward. It can be that quick. I mean, imagine, I think Bobby alluded to this earlier, imagine having to manually go through 500 charts to try to possibly identify all those stocks that have met my criterion. That would take a weekend multiplied many times over. It would just take way too long. So the ability to do that amount of number crunching is invaluable. So from that, we move on to step 3, and that's select trade. So even the Explorer can help us with this, because as you would know, we have and can input, I think it used to be 6, now it's 12 columns of information in the Explorer report. And I can, of course, alphabetically initially, but I can rearrange them based on different criterion. So the 3-month bracket that I use for altitude is important to me. So I might rearrange them in order of the highest number in this bracket down to the lowest. And the lowest number there should not be less than 75, because that's one of the criterion in altitude. So there won't be any under 75 there. Volatility percentage might be important to me. So I rearrange them based on that. And I probably don't want anything too low in volatility percentage. Volume strength is important to me. There won't be anything there under 90, because that's another one of my criterion. And the higher the number, the better. So what I'm now doing is, I said before, you can't trade everything. You can't trade every single signal that presents themselves. So what you need to do is select the trades. And if I have 12 stocks there to go through, and I go through the first one and go, oh, this is good. This looks okay. This meets my criterion. Don't stop there. Don't go, oh, well, that was lucky. The first stock I found was in fact okay. Let's go ahead. Well, what about the remaining 11? That could be the worst of the group that's just been presented to you. So look through them all, scan your universe, look through all the potential trading opportunities, select the very best, highest probability, low risk. That's what you're after, not the opposite. Most people go for high risk, low probability. We want high probability, low risk, and select the trades we're going to take, determine your stop, position size accordingly, place the trades on the platform, and go and do something else. This is what good traders do. They follow a process. Each of these bits or pieces, they know what they're doing. If you do not know what you're doing, this will take forever, because you don't know how to scan, you don't know how to select your trades. Even if you randomly find something, you don't know how to set a stop, and you certainly don't know how to trade, size your trade. So you need to have the answers to each of those steps. But once you do, and you have that conviction, you have that confidence, you have the discipline, this makes us a better trader. It makes us more efficient, more streamlined. This is what good traders do. That's what I'm trying to really impress upon you. This is what good traders do. We follow a routine, we follow a system, we follow, a process. Having a process to me is really, really important. This is what I talk about with consistency, following a process, doing the same thing over and over again. I like to use this image of a roulette table, because we know that, anecdotally, casinos do really well. Casinos don't lose money, they make money. And that's because for each of their games, and we'll use this as an example, they have found an edge. They've gained an edge, they've found an edge. That edge, gives them that advantage. They then apply that edge every single time the little white ball is thrown onto the rotating wheel to pop out a number. They have that edge applied. They apply that edge with absolute consistency. Now, the edge on this table is a 0 for those mathematically inclined, but that's their edge. And it just gives them that ever so slight edge with the amount of trades, with the amount of rolls of the white ball they do. That is enough for them to just, do very, very well. And I think as traders, we can take something away from that. I think there is a lesson there for us. we need to gain an edge. We need to develop our set of rules, put them into the Explorer and MetaStock, gain that edge, scan for that edge, apply that edge with great consistency, and good things might happen. I really like this quote: the desire to maximize the number of winning trades or minimize the number of losing trades works against you. The success rate, that winning strike rate, percentage of winning trades, is the least important performance statistic and may even be inversely related to performance. This is a guy that, related to the, connected to the turtle trader story, interviewed in one of the original, I think, Market Wizards book, who said, don't focus on that high percentage of winning trades. Don't worry about it. It's all about that reward to risk. It's all about when you get it right, it goes really well. Your trail exits, you have good reward to risk relationship, all that part of risk management. That's consistency. That's doing things well. Having a positive mental attitude, as I need to move on here, and I'll try to stick less than a minute on this slide because I don't want to feel like I'm lecturing you on this particular topic. Having the right attitude is obviously important in anything in life. I don't know how trading is any different. Aiming for something is really important with your trading. Today, in Australia at least, is the 11th of June, 2022. What do you want your trading to look like on the 11th of June, 2023? What do you want it to look like? Aim for something. What do you want it to look like on the 11th of June, 2025, in 3 years' time? Aim for something. Develop discipline. If you know you lack it, work on it. It's not impossible. I'm not saying you'll become robotic, but it's something you can most likely improve as a person, and that is your discipline. There's ways you can do it. I talk about that in plenty of other training sessions and the like. There are ways you can improve discipline, but it's important you do that. It's important you develop the patience, the perseverance, all those other character attributes. It's important you keep on top of your emotions. I mentioned this right at my outset. Take action. You're listening to me and you're nodding and you go, oh, that makes sense. Okay, I agree with that. But you need to do something about it. The people who have spoken to you before I came along today might have talked about a particular technique they're using or trying, a tool, an indicator. Okay, but do something about that. Take action with that. Don't just keep nodding. Right? You need to do something with it and implement it. If it doesn't work, okay, you review, throw it out. But at least you now know if it works or if it doesn't work. TV off, turn off the streaming service, log off, stop wasting time. Really, really good trading is going to take a lot of your effort. Don't think it's going to be easy. It is just simply not easy. The reason I say books is because books offer tremendous value for money. My book is $30 Australian, and I know there's a lot more than $30 worth of value in my book, as an example. There are plenty of others that fit that category as well. Great quote. I love this. Great men. I found that the first victory they won was over themselves. Self-discipline was really, really important. Okay. The truth of the matter is you always know the right thing to do. The hard part is doing it. General Norman Schwarzkopf was talking about military operations, leadership, but this to me has always been applicable to trading. I talked before about execution gap, doing what's required of you. The truth of the matter is you always know the right thing to do. In trading, you typically know the right thing to do. The difficulty is doing it. Remember that quote? Trading is simple, but it's not easy. It's simple because we often know what we need to do. It's not easy because it's actually quite difficult to do the right thing and to have that discipline to do that. Okay, moving on. The very best traders cut losing trades. I think it's your number one trading habit you need to develop. It is definitely easier said than done. Losses can simply devastate you. They can shatter your confidence. They can obliterate your trading account. Any semblance of confidence you've been able to build up over time, gone. And if I'm in a live presentation, I'll often say, 50 people in the room, and I'll say, who here, put your hand up if you've had a really, really big losing trade. And of course, everybody's hands go up. And if someone has never traded before, their hand won't go up. But anybody who has traded, all their hands go up. I say, exactly. We've all done it. The real key is to ensure we do everything that doesn't happen again. We need to eliminate that. The way you do that is to cut your losing trades. There's so many different ways you can do it. You just need to have a good, robust, simple, straightforward way of cutting or losing trades. We know that within MetaStock, we know within MetaStock there's ways in which you can set trailing exits. You know, I've just randomly picked this stock here, but that's the 10th of December last year. And of course, the scaling is probably off a little bit, which it is. So just give me a second. I'll just make that a bit thicker for you. I'll also adjust the scaling. There we go. So what this allows me to do is, let's say I did enter right-hand edge of screen on that little gap up there. What I've now got is a very simple tool, very easy for me to follow. That's my trailing exit that I've used for a long, long time. And when I talk about, you know, trading principles, doing the right thing, can have relatively straightforward concepts, I could explain this to a child and say, as long as these green and red things remain above the red line and close above, I probably have to explain that a little bit more, you know, close above that red line, NFA, right? No further action. I stay in the trade. Now, it does actually probably get triggered here once or twice, but you get the feel, you get the understanding of what a trailing exit can do. But what you can also get the feel for is how you can have a very simple technique set up within software, within your MetaStock or other, to in fact just make it really easy for you to do that. It's a really important thing you do to exit trades, and to have it made easy for you like that, again, is very advantageous. I love this quote from the original Market Wizards book by Jack Schwager. Ed Secoda says there's only 3 elements of good trading, only 3, and those 3 are there on the screen. If you can follow those 3 rules, you may have a chance. There's only 3 elements of good trading, and that's them listed there from a guy who's traded and had a lot of trading experience. I love this one as well. Learn to take losses. The most important thing in making money has nothing to do with your profitable trades. Nothing to do with your profitable trades. The most important thing in making money has everything to do with your losing trades. You should adjust your focus accordingly. And you know what? You've probably heard that 500 times. But you need to, again, put that into action. You need to implement that. You need to ensure you do it properly, as good traders do. I love this. Don't focus on making money. But hang on a second, Paul. That's why I'm trading. That's why I got into trading, is to make money. Well, yes, of course, that's why you get into trading. So it's intuitive. You would think about focusing on making money. And he's saying, forget that. You need to focus on protecting the money you have. Again, it just completely shifts your focus. It completely shifts your attitude to, rather than attack and being aggressive, to being very defensive and protecting what you have. That's what really good traders have. I'm sorry, I'm running out of time here to talk about this in great depth. All this does, very quickly, purely hypothetical results, is the black squares indicate the bits across the middle here. I'll just get my pen out for you somewhere here, pen. So these indicate the profit for the first 4 trades. There's the first 4 trade, and trade 5 is a loss. Trade 5, 6, 7, 8, 9 are again profits. Trade 10 is a loss. This is simply our account balance. And even though we have 80%, I'll write that in there, 80% strike rate, 80% strike rate over those 10 trades, we are lucky to have half the money that we started with, right? So again, it just makes us realize, don't focus on percentage of winning trades. Don't focus on how often we get it right or wrong. Focus on what happens when you get it right and get it wrong. That's what you need to do. Don't overtrade. I mentioned this earlier. Demand quality over quantity. Every now and again, I get the feeling brokers don't like me talking to their clients because I tell them this, and brokers want you to trade, right? And I say, you know, demand quality of trades rather than quantity. Let your trading plan do its job. When I did that scan before of 500 stocks, 490 of them said no because they didn't meet my criteria. So that's my trading plan saying no to 490 stocks. It's doing that for a reason. It's counterintuitive to think about not overtrading. Don't force the action. I think the way traders think of this is, I'm here to make money. The more trades I can put on, the more opportunity I am giving myself to make money. Well, I've got to put on lots of trades. It's counterintuitive to think, no, we need to trade less. I believe less is more. I believe trading less is better for you. Don't listen to others. Be confident, have conviction of your own edge, your own trading strategy, your own trading plan. No one knows what's going to happen in the future. Get that edge. Give yourself the highest probability of having a profitable trade. Manage risk. Don't worry about what anybody else says. No one else knows what's going to happen. Have confidence. I can tell you it's a great feeling when you do not care about what anybody else thinks about the market. Now, when you're a beginner trader and beginning this journey, you care a lot about what other people think. I know, because I was in that position myself. You don't need, just move towards a position where you don't care. Keep your position small. Probably alluded to this a little bit. You need to do everything you can to protect your capital. You need to have a position sizing model. You know, in my expert advisor, in my altitude system, there is a position sizing calculator in there. Understand probability. Just be defensive. That's what I guess I'm trying to get at here. Be defensive. And finally, you know, within your trading plan, you must develop a plan. That plan must suit your personality, be right for you. Then you implement that with the right mindset, the right attitude, the confidence, the discipline, the patience. You have the 3 M's working well for you. You know about the methodology. You have the strategy to enter trades. You manage risk well. You set your stops. You understand reward to risk. You position size accordingly. You set your stops in the right place. You have take profit levels. You trail your profits well. You do all these things really, really well. And then, of course, the glue that keeps it all together is the mind. Okay, ultimately, the most important part of how well you follow all those other components that I just spoke about. Please do not overstate or don't underestimate the importance of having a plan. How people can think they can trade consistently well and profitably without a plan, I have no idea what they base it on. I'm lost for words that they can think about that. What do good traders do? They execute plans. They are disciplined professionals. We treat our trading like a business. I take it very seriously. I'm very serious about my trading. I'm very methodical. I'm very rules-based. I love rules. I know how they help me. And it's clearly taken me a lot of time and effort to get into that position where I have that confidence and I have the discipline to implement my trading plan well. And finally, you know, with your trading plan, it just needs to answer those 3 questions. How do I get into a trade? How much money do I commit? How do I get out? In importance, of course, we know it's the other way around. So that's it. As I approach the end of the hour, I haven't seen too many questions come through, but I'm more than happy to spend some time, if there is time, to answer or respond to any of those questions, and certainly mindful that I'm sure there's somebody waiting in the wings to follow me up and talk to you after I have finished. So that's it. Just, you know, started off with my beliefs on strategies and then just some really good habits. We all have habits. They're things we do without thinking. We have some good habits. We have some bad. But when it comes to trading, I think we need to develop good habits. And when they become habits, it's not an effort for us to do it. It's not difficult for us to carry out that task because, you know, we've developed a habit. And habit means we do it without thinking. And that can really help us when it comes to trading. Because if you overthink, maybe bad things will happen. So that's my presentation for today. I should really wrap it up and say again, thank you to MetaStock for the invitation and the opportunity to speak to all of you today. It's been my pleasure to be here. Please don't hesitate to contact me. Just search my name. You'll find me. You'll find my site. Send me a message if you wish. Please let me know if you do send me a message that you were in this presentation today, just for my own context, and I'll be more than happy to help you with any questions you may have. And I think with that, I should really head back to the guys at MetaStock. Thanks again, guys, and I'll hand it back to you for the rest of your session.
Wonderful. Thank you so much, Stuart. Really good presentation. I love how you go through everything so thoroughly about those different trading habits. It's always a pleasure to have you on. Hope to have you on again here in the near future.
Thanks, Bobby. Thank you.
Of course. Yeah. All right. And I actually want to go ahead and show you guys a little bit more about the system we put together with Stuart here at MetaStock. So I'm going to go ahead and share my screen. I know he went over a lot of his different trading habits, and then even showed some of his system inside of MetaStock. And I just wanted to touch on all of that just a little bit more and tell you about the system that we have with him, his trade launch systems. And we also put together this huge training course with him as well, where you get to go so much more in depth and actually learn the intricacies of this entire trading system as well. And we've put it all together as part of a really good promotion for today's event too. So with the trade launch systems from Stuart McPhee that we have right inside of MetaStock, you would get his altitude trading system, the ignition trading system, as well as numerous indicators. You saw him show several of those today. He has his trailing stops, there's reversals and sentiment. Altitude is kind of like his more medium-term system for normally about 3 months with wide stops using his ATR and trend following. And the trend following system, you have ignition, which is the more shorter term, days to weeks with tighter stops, the reversal system, as well as the slingshot. So you'll get all of those included in the trade launch system for MetaStock. It comes with explorations on the altitude, ignition, and reversal systems and reversal signals, as well as the expert advisors that you guys kind of saw me showing earlier, but these are all dedicated to Stuart's systems that he's created with us. You get additional indicators with it as well. And one of my favorite parts about this, because we don't offer this with very many of our add-ons, like they all come with your standard manual, but we put together 5 live classes where Stuart goes into first off, the trading process and developing a strategy. He gets more in depth into that. And then he has an entire course on just the technical analysis aspect of all of it, utilizing this add-on. He goes even deeper into risk management. I know he shared a lot of his risk management techniques and things today, but he dives into that far more in depth and more into showing you how to actually trade with that, and covers his trading mindset quite a bit more and putting all those pieces together too. So you've got to see a little bit of all of these things today, but that's all far more in depth inside of this training course we have with him. And normally just his add-on alone is going to run you about $600. And then the training course too, with having the 5 different classes, is right around that price too. The retail price is $1,298. If you wanted to order just his pack, as kind of a standalone, get all 5 training classes and plus the entire trade launch system add-on. And this is a one-time purchase, so you own it for life. As part of our special with the APAC deal, we are offering that for just $5.99 today. So really good offer. I mean, the amount of information that he shares in the course and how well put together this add-on is, it definitely makes it worth it. I mean, you can very easily make your money back in just a trade or two, depending on your account size, but likely, even higher returns considering. And we have that available right now, or if you have other questions regarding it, you can just jump into our sales chat, metastock.com/sales chat, and Robert would be happy to answer any other questions. He can help you to order it and get it all put together. We also have it available on metastock.com/APAC-deal. So you can go there. Or what I would probably recommend to you is get our full APAC Summit Traders Pack that we have available. Not only would you get everything that we just talked about, but you can also add on a 3-month premium subscription with Learn MetaStock, as well as a 3-month subscription to the very wonderful Superior Profits Q Global system, which we're going to have Sagar Nandi going over here in just a moment. And I can't tell you, this is such a great trading system from him as well as from Stuart, and to be able to get both of those, plus we're throwing in the 3 months of Learn MetaStock and our Unleash the Power of MetaStock workbook and videos on top of that too. You're looking at just $896 for the full package if you order with the APAC deal promotion. And again, that's metastock.com/sales chat to ask any questions or learn a little bit more, or if just interested in Stuart's system or just a trial of MetaStock too, I mean, those options are available to you too, or if you just have further more personalized questions that we can't answer during the webinar, then jump in there and we're happy to answer your questions. Or again, metastock.com/APAC-deal to just order on the website. And I've kind of mentioned this before too, we have just the trial available. If you just want a trial of MetaStock, there's a link for signing up for that and learning. You know, it's going to help you scan the markets, test your trading strategies, forecast. You can get real-time alerts, commentaries, and signals if you have the appropriate packages. And just jump into our sales chat, and we're happy to answer your questions or kind of go over any of that. Keep in mind, MetaStock's been rated as the #1 analysis platform for 29 straight years, according to the Stocks and Commodities Reader's Choice, Stocks and Commodities Magazine subscribers. And you can see some of the pricing and things up there. Also, I do quickly want to thank the CMT Association for sponsoring today's event as well. I've gone ahead and shared a slide where you can learn a little bit more about them and visit their website. Big thank you to them for sponsoring this event for us. And now that we've kind of gotten through that, we have Sagar Nandi up next, and he has a system with us inside of MetaStock as well. He has a few different systems actually, and it is entirely impressive. I think you're gonna really enjoy what he's able to show today. And Sagar is always great. He was able to jump in and help take over for the event on such short notice with us, and we're really glad to have him here. Sagar, how are you doing today?
Hi, Bobby. I'm doing fine. Thank you. How are you?
Hey, I'm doing fine also. Yeah, coming on 11 p.m. over here for us, but we're still holding on strong, me and Jeff in the control room. And I know it's quite a bit earlier there for you. And, you know, I think I'm just going to go ahead and let you take things over. I know you know how to do it all, and you always do such a great presentation. So thanks for being on for us today.
It's my pleasure.
Yeah. Give me just one moment to pass this over to you. Okay, and yes, I want to share. And there you go, you should have a pop-up.
Are you able to see my screen and hear me clearly?
Yeah, so I hear you loud and clear, and then we see the complete workflows for finding truly high probability trades.
Wonderful.
All the forces are aligned. Yeah,
wonderful.
Great.
Thanks, Bobby. Thanks, MetaStock, for organizing this session. And thanks to all of you for joining me today to go through a number of complete workflows for finding truly high probability trades where all the forces are aligned. Bobby just mentioned that MetaStock is the #1 platform, it seems, forever, and I'll show you how this system has made a fantastic use of them. I am Sagar Nandi, retired IT professional, swing trading stocks, actively in the USA market as well as some global markets. I designed and developed the Q systems and techniques that I'm going to show. I can be contacted using my email ID, tradingprofitably@gmail.com, and I regularly share live stock and market analysis on my website, superiorprofit.co. It's also sagarnandi.com, same website. YouTube channel Trading Profitably, and Twitter handle Superior Profit. All of these are open to the public. There is no fee associated. You are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems for my trading decisions. They run on the powerful and my favorite MetaStock platform. Q has many components. Q Global is for technical analysis, charting, and scanning. Q Diary for trading journal maintaining. Q Index for index analysis. Q Vital for stock fundamental and peer analysis. Q Edge for sector industry rotation analysis, and Q Season for Q seasonality analysis. I also use Q Global Market Breadth to do market internal health check, a powerful tool to decide my market bias. You may see that all of these systems can be used not only in the USA market, but in all global markets as well. And they are all 100% real time. That was the last slide. Let's continue with the live system. I mentioned that we'll go through several workflows, complete workflows. Multiple workflows are possible. One is top-down. In top-down, we first establish a market bias. How do we do that? We may look at the market indices. We may look at the market ETFs or futures. That is an external view to see how the market indices are doing. Then we look at Q Global Market Breadth, do an internal health check to see internally is the market as strong or as weak as the external view is telling. Once we do that, we may look at Q Edge, not for sector industry rotation yet, but to check the sector industry stock advanced decline breadth. That's also a breadth or internal insight on the market. And lastly, we may look at Q Finder to assess the technical breadth, not individual stocks trading signal or setup, but aggregate technical breadth of the market. Using the market indices, market breadth, sector industry stock breadth, and technical breadth, we establish a market bias. Market bias does not have to be same as the market direction. For example, recently, about 10 days ago, my market bias was bullish, but market was in a downtrend. Why it was bullish for swing trading, short-term trading, was that market was oversold and I could identify several reversal kind of long setups in the market. And I closed the trades on Wednesday. That was perfect timing, isn't it? Now, did I actually close them on Wednesday? I mentioned live stock and market analysis on my website. On my Twitter page, Superior Profit, if you see the last tweet that I posted, that was on June 8th afternoon session. All these times are in Eastern Standard Time, New York time. And I mentioned on Wednesday midday that I was buying for last 2 weeks. Closed many positions today for two reasons. IWM, QQQ, SPY came to trendline support and reversed. I was aware of that possibility and was ready to exit. And also the fourth market ETF, DIA, broke below trendline support. And I tend to always share the live charts. IWM reversed from trendline resistance. Same was true for QQQ and SPY. And DIA broke this trendline resistance. So I could buy for 2 weeks and exit at the perfect timing using trend lines. Now let's go back to the top-down analysis. So I established market bias accurately, and we'll try to establish current market bias as well. Once the bias is decided, if it is bullish, then in top-down analysis, we go to sector industry rotation analysis and find the strongest sectors and industries. If the market bias is bearish, we look at the weakest sectors and industries. Continuing with top-down, from those sector industries, we go to Q Vital to look at the strongest or weakest stocks in terms of fundamentals. Once we find those stocks, lastly, we use Q Global and Q Finder to see if not only there is trade signal, but actual trade setup. That is how we start with market, go to sector industry, fundamental and technical, in top-down analysis to align all the dimensions in favor of our trade. If we did bottom-up analysis, we could start with Q Finder, look at the overall technical breadth. If the overall technical breadth is bearish, like it is now probably, we'll look at that. If it is bearish, we could look for bearish trade setups. Once we find bearish trade setups, we may look at those stocks' fundamentals. For bearish trades, we want weak fundamental stocks, and further go up to sector industry rotation analysis in QH to confirm that the stocks are in weak sector industries. Once again, though the direction is opposite from bottom to up, we end up with trades where all the forces are aligned. You could also do fundamental first analysis, starting with Q Vital first, or you could do custom analysis also. Subject to time, I will try to demonstrate as many of these workflows as possible using live systems. No presentation. Let's continue with the live systems. Let's try to establish market bias. It's useful to have a look at the global markets. As I mentioned, Q systems and of course MetaStock can be used not only for the USA market but for global markets. Let's start with a look at the key major markets. Major markets. Australian market using all ordinaries. Is it uptrending, downtrending, or sideways? That's what we are trying to establish, and also our preferred trading direction. In the weekly chart, left hand side is weekly, right hand side is daily. In the weekly chart, it is moving sideways. In daily, it has come to trendline support. What is my preferred trading direction? I will like to actually buy in case I see that all ordinaries is bouncing up from both daily and weekly trendline support. Will I buy now? No, I will wait for a confirmed bounce trade setup. And this is a live example of where my market bias is different from the trading direction. Or market direction, sorry. My trading bias is different from market direction. Market direction for all ordinaries is sideways, but my preferred trading direction is long. Will I buy now? No, I'll wait for a confirmed trade setup. What kind of trade setup? Bouncing up from trendline support. That is a bounce long setup, one of the Q trade setups that can be scanned for. What about Japan's Topix index? This is opposite to all ordinaries. Here, instead of being at support, it is at trendline resistance. In weekly, in daily, it is overbought because it is above the upper boundary. It is at watermark resistance. It has displayed bearish indecision at the top, followed by a bear release. It is at a resistance. In daily, weekly, it tilted down from the resistance. So on Friday at the close, I would be happy to look at weak fundamental stocks in weak industries in Japanese market and try to short them. So far, mixed picture from the global markets. Let's look at China market, CSI 300. This is bullish. Weekly color is bullish. Daily color is bullish. Daily has this tick that is a bullish momentum signal after moving sideways for 3 days. It is continuing to go up. On Friday, it went up with very high volume. As you can see, there is no label on any of the indicators. They are color coded. Once you learn what these indicators mean, you can read the chart as easily as I am able to do. So this is bullish. We have very mixed picture so far in the global markets. Let's look at India's Nifty 50. This is inside a range in daily as well as inside a range in weekly, and it is somewhere in the middle of the range, neither at the upper edge nor at the lower edge. That is what I consider a no trading area. So India market is sideways and I have no preferred trading direction. I will stand aside. And let's look at one last global market, FTSE index, UK market. This is also inside a range in weekly, daily both. It's at trendline support, therefore similar to Australian market. If it bounces up next week, I will be happy to look for strong fundamental stocks giving long trade setups in strong industries. So we have some global markets at trendline support, some at resistance, some like India in between. How to assess the global market as a whole? Q Systems has a global custom index. We can look at that to see how the global market is doing as a whole. Let's look at it using weekly, daily, and as you can notice, I have set up all the useful layouts, templates, analysis in this top menu bar. What did I do? Okay, at the top menu bar here. So I can click the top menu bar and look at the stocks or indices or custom indices using different templates very easily. So this is global index as a whole. What it is doing, it is also moving sideways inside trendline resistance support in weekly. In daily has trendline resistance and watermark pivot support in no trading area in the middle of the zone. So let's say global market is indecisive as a whole, mixed picture. What we can also see from this line sharply going up, that is relative performance relative to USA market, S&P 500, that though global market is coming down also, it is hugely outperforming the USA market. So we have established that the global market is moving sideways, not bearish. Now let's look at the USA market. Let's look at the market ETFs first. You could look at futures or indices, and I'm going to again use the standard weekly, daily layout. SPY, weekly color bearish, daily color bearish, had a huge gap down on Friday and it continued to go down, closed right at the low of the day. Volume accelerated for, in fact, 3 days, and on Friday, volume was extremely high, shown by this dot on the volume bar. Now, remember, I tweeted that I was exiting on this day, Wednesday, and I was buying starting from here for 2 weeks. Perfect timing, and this is the exact analysis that I performed at this point, that I am doing today. Currently, it is sharply falling. It's like a falling rock, not going to catch it. It's very bearish in weekly, daily, both. Is it oversold a lot? Not yet. This indicator, when they turn magenta, both of them, jump thrust, that shows that it is severely oversold. It is not there yet. We have one dot, but not magenta yet. We need both the dots to be magenta to be in severely oversold condition, from where we could expect a bounce, just like I expected earlier. But we are not there yet. Bearish, but not oversold enough. NASDAQ ETF, QQQ. Very similar picture. Bearish weekly, bearish daily, falling like a rock, not oversold enough. DIA, same pattern, bearish, falling like a rock, not oversold enough. And lastly, IWM, Russell 2000 small cap stocks ETF. Here we find something interesting. Yes, it is also falling. However, unlike the other market ETFs, it is still in an uptrend with higher low, higher high. And like in Australia market, it is right at trend line support. Yes, weekly is bearish, I can see that. But bounce setup is a setup that relies on these pre-existing automatically drawn smart trend lines, price to drop heavily there with high volume and then bounce up. So in USA market is weak, but IWM is still in an uptrend, the only market ETF to do so. And it is right at trend line support in daily. If it goes up, I could look for buy setups in small cap stocks. So that is one piece of insight I got while looking at the market ETFs. Overall, it is bearish. Now let's look at the market internals. We looked at the external view, and now I'm going to look at the internal view. And of course, the Q systems is very rich, powerful. There are many features. I'm not going to be able to explain every feature. I'll highlight the things that are catching my eyes. And later on, if you are interested, you may go through the masterclass sessions that I recorded for 10 to 15 hours. But let's look at the live systems now. What is this? This is the internal view of the USA market breadth total view that is calculated looking at many different things. It looks at NASDAQ as a whole, NYSE, 2 composites, and then it looks at 4 major indices, Russell 2000, S&P 500, NASDAQ 100, Dow Jones Industrials, looks at the market from many different angles and assesses market internals like advanced decline, up-down volume, new high, new low percentage of stocks above 50-day moving average, 3-month new high low. It shows the candle chart, which is also a custom index created from all these 6 items. Then it shows whether we have heavy selling or heavy buying. Red is always bearish or selling, green is always bullish or buying. And these 2 lines show growth versus value and small cap versus large cap. Lot of insight. Now let's read the chart. First thing that catches the eye is this number 6. That is a distribution count of 6, meaning there was broad and deep selling in 6 markets. What are the 6 markets? All of them. One day before, on Thursday, there was already heavy selling in 4 of the 6 markets shown by this distribution count of 4. And the candle color is something that was not designed by me. The Q systems is designed by me, but some of the coloring or indicators were from other stalwarts. So this magenta color shows bears are in control. It's a signal called Phoenix, thanks to Mr. Ian Woodward. May him rest in peace. I have never met him, but I love his methodology, especially in terms of market breadth analysis, and I incorporated that. So we see that we had from Thursday itself bearish control and heavy distribution count. Now, if you look back, you will see a number of danger signals coming here. That's also a signal not designed by me, but I implemented. Didn't I say that I made a great use of this extremely powerful MetaStock platform? This is a unique not easy to implement signal called Hindenburg. Whenever the Hindenburg comes, especially multiple in a row, at which point it turns from neutral color to bearish color, we are always cautious. And Hindenburg, the signal always comes at market top. It's defined as a signal that comes when professionals are buying, amateurs are buying and professionals are selling. It came here also. November, April. So those also helped me to time when to start to take shorts, exit longs. That was then, and now I see that market is very bearish. Is there sign of oversold condition? Not yet. This line, 3-month new high low, it has reached the oversold level, but I will need it to tick up. The candle colors are now magenta. I will need to have a cyan color. That's an Eureka signal, thanks to Ian Woodward again. And I will need to see some accumulation count more than 1. 1 is neutral, anything more than 1 is bullish. I will need to see this custom index move up with at least accumulation count. The accumulation counts are fast market breadth indicator. So it is oversold, but not enough, may fall more. If we look at advanced decline, it is making lower lows, up down volume making lower lows, new high, new low percentage tilting down, percentage of stocks above 50-day moving average. It was going up in these few days with higher high, higher lows, and then it sharply fell down. It has again hit the 20% level. That means only not even 20, less than 20% stocks are above 50-day moving average aggregate inside. That is oversold, but I will need to see that line, yellow line, tilt up to start buying. So I will look for a tilting up of the yellow line. I look for the custom index to go up. I look for at least some accumulation count to start buying. Market is very weak from the internal view also. What about mega caps? Let's look at a custom index. All these are part of Q Global Market Breadth. This is mega cap index for USA market. Let's look at it using weekly, daily. Weekly yellow, daily coming down, lower high, lower low. The ribbon is showing it had a trend following short setup on Thursday. That has already given a significant profit by Friday's close. So mega cap is also weak. Mega cap does not have any trend line support. It is not oversold enough yet to expect a bounce up. So if there is at all any place where I may look for a buying opportunity, that will be small cap. If IWM tilts up next week, and then again I will look for 360 degrees trades where all forces are aligned. So market so far is looking weak. There is no sign of bullishness. Now I mentioned that other than external view using ETFs, internal view using market breadth, I also look at market breadth from few other angles. One is using Q edge, but here I am not using sector industry rotation analysis. I am looking at this very powerful sector advanced decline, industry advanced decline, stock advanced decline, breadth inside, starting from 1 month all the way to 1 day. And during market hours, this column shows real-time insight. That's how on Wednesday, using this and few other Q indicators, I could close a lot of my long positions Wednesday using the real-time insight. Now market is closed, so left column is same as the second column. Let's look at 1 month to 1 day. We can say 1 month is long-term view, that is mixed. We just look at the colors, as you can see. It's mixed, neither bullish nor bearish. Medium term, 10-day and 5-day is bearish. and short term 2-day and 1-day. Sector, industry, stock, advanced decline growth, bearish. I mentioned if IWM tilts up, I will start buying. And at that time, I expect the real-time breadth to turn green at the leftmost column. That has not happened. I'll keep an eye on that. So far, everything is bearish. It is looking oversold. This picture is also looking very oversold. Look at the percentages. Sector down, industry down percentage, stock down percentage. Very, very bearish, oversold. Is it oversold enough? On the external view, I told it was not oversold enough because jump thrust was not at a lower extreme. And now let's look at another powerful analysis, bucket analysis. What is this? This is looking at all the stocks, S&P 1500 stocks, a balanced list of stocks with small cap, mid cap, large cap, assessing the stocks with respect to where they are in their respective Bollinger Bands. Equidistant buckets. Less than 1 means these stocks are below lower Bollinger Band, greater than 1 above upper Bollinger Band. Right now, 17.8% of stocks are below lower Bollinger Band. 1 day ago, it was 2.4%. So a lot of stocks fell below lower Bollinger Band on Friday. This is a jump of more than 16% in 1 day. Actually, drop of more than 16% below lower Bollinger Band. Is it oversold enough? The bucket analysis says that when this percentage hits 30-40%, then we expect a bounce up, but it is not there yet. It is only 17.8%. Long way to go before it hits 30-40%, but that long way may be covered in 1 or 2 days only. It has, however, dropped too much too fast. Drop of more than 15% in 1 day. So that is severely oversold, but we don't expect a bounce yet. I'll be happier to see it hit 30-40% and then start to look for buy setups. If we look at the market from bucket analysis, another angle, percentage of stocks above mid Bollinger Band, that is 81%. Is actually below, only 19% above mid Bollinger Band. If we consider mid Bollinger Band as neutral area, then this is also very bearish. 1 day earlier, it was 55%. That is a huge drop below mid Bollinger Band in 1 day. So again, it dropped too much too fast. We may see signs of exhaustion, and so far, I am willing to look for signs of exhaustion bounce setups in small cap stocks. One last market bias deciding insight I get is from technical breadth. Finally, we make money by buying stocks only if they go up. So technical signals and setups are important for swing trading and for all kinds of trading also. Now, this is showing technical breadth using the weekly interval, balance between bears and bulls. Very bearish. All signals, strength signals, trend continuation signals, reversal signals, very bearish. To the extent it could be called oversold. However, I also look at the unique headwind reversal signal in the weekly interval. When it is hitting more than 1%, like it is now, I can expect more downturn ahead. So it is very oversold, but I am expecting market to go down more. I will not quickly jump into taking long trades. This is the weekly interval. And let's look at Friday's picture. All signals very bearish. Strength very bearish. Continuation bearish. Reversal is more bullish than bearish. However, in absolute terms, reversals are very small compared to gap, that is strength signal. So I am not yet ready to look for buy setups. That is how I establish market bias. If I was not talking, it would have taken few minutes. So my market bias is bearish based on all this external, internal, and breadth inside. And I may look for exhaustion, but that has not come yet. Now let's see how we can use the market bias to do top-down analysis. Let's start with Q edge now. Market bias is bearish. Let's look at the sectors. And what I'm going to look at now, and you may notice how smoothly I'm navigating between different programs and different parts of the same program. This is sector rotation analysis using live data during market hours. The live data will fill up the real-time column as well. Now market is closed. So it shows the sector rotation scorecard from 12-month to 1-month period. And because we take trades in current date more frequently in recent periods, 10-day, 5-day, 2-day, 1-day, during market hours, real time. Those are scorecard in terms of strength. Pace columns show acceleration, deceleration. So we can buy either based on strength or acceleration. And we can also see the percentage gain or loss in the sectors. Usually I just use the scorecard. Let's sort the data. My market bias is bearish. So which sectors I am going to focus on? The ones that are the weakest. The bottom 20% of sectors, they are shaded background, are industrials, consumer discretionary. They are the weakest, and incidentally, it happened that they are also the most decelerating. A perfect combination of weakness and deceleration to look for bearish trades. But sectors are very broad. Instead of directly going into stocks, let's drill down, top-down analysis, drilling down from sectors to industries. I'm looking at only those two sectors, all the industries in those two sectors, the weakest sectors, and now I'm going to highlight the bottom 20% of industries. From the shaded background, I know these are the bottom 20%. So weakest sectors, weakest industries in a bearish market bias. Now I'm going to drill down into the underlying stocks. These are all the stocks in S&P 1500 in those industries, in those sectors. In this case, I drill down to S&P 1500. You could also drill down to your own trading universe. Like I use liquid stocks in the USA market. You could drill down to that as well. For now, let's look at the S&P 1500 stocks. There are many smart action buttons that I'm using when navigating between these programs. Because I'm looking for bearish trades, I'm going to look for either diamond bearish fundamentals, 3-star or 1-star. Minimum I will go for is 1-star bearish candidate. Let's click that. That gives me stocks that are either overvalued or has very negative earnings growth. So I'm left with, you can see the statistics here, 35 stocks. All of them are down, 100% are down on Friday. Now, I have done so far what? I established a market bias, bearish. I looked at the weakest sectors, went to the weakest industries in those sectors. Then I looked for weak fundamental stocks, either in terms of valuation or in terms of growth using color-coded scorecard. Now, I am not going to open the charts yet. Remember, I showed technical breadth using Q Finder. That also shows me the actual trade signals and setups. So I may simply go there to see out of these weak stocks, is there any bearish signal or setup? Yes, there are 19 stocks, and you can see signals and setup summary information. Let's click the setup. So I am left with only 7 stocks that have some kind of Q trade setup. What are the Q trade setups? It can be breakout short, pullback short, flow trend following short. So today on Friday, we have this kind of possible bearish setups. Now, if you notice the market breadth inside, when I was technical breadth, not market breadth, not technical breadth, you noticed, or I noticed, that percentage of stocks having breakdown, bearish setup, was very high. Whenever this percentage is above 10%, that is very high. Almost 17% stocks gave breakout trade setup, and of course gap downs extremely high. 82% of stocks gave gap down open. But let's see the trade setups. Breakout is a trade setup, flow is a trade setup, pullback is a trade setup, and there are other reversal trade setups. Let's look at breakouts because I see many stocks are breaking down. Go back to those stocks. Let's look at the breakdown stocks. 3 of them. Now I'm going to open them using MetaStock. Using Q charts, I'm looking now at their technical charts to confirm that is there a low risk short entry. They are all breaking down. Honeywell. The first one is Honeywell. I'm trying to get my drawing tool with white color, but it's not changing the color. Okay. Try again. No problem. No problem. I cannot draw with black on black. Okay, but you can see it broke below some trend line support. However, another trend line support is nearby. Where will it go? It will go to my watch list, short watch list. So there is a distinction between short watch list and short candidate. This will go to my short watch list. I look at it using weekly daily. Let's move to the next stock first. This is better, Whirlpool, WHR. You can see the ticker symbol from the top. WHR has a clear breakdown below trend line support. I'll come back to it. Next is GE, General Electric. It broke down. Remember, I'm only looking at breakdown short setups. There is one breakdown, but another trend line support is nearby. I'm not going to trade this for short side, close GE. So I'm left with 2 stocks. Let's look at them using weekly daily. Honeywell and Whirlpool. Honeywell first. I mentioned, as you can see, it broke below one trend line support in case of daily and also in case of weekly. However, there is another trend line support in weekly, daily, both. So it will go to my short watch list. Next week, if it breaks down below the daily weekly trend line support, I'll have a low risk short opportunity where stop could be somewhere below, not below, somewhere above this gap down candles high. Somewhere above this gap down candles high. It will go to short watch list. And let's look at the other stock, Whirlpool, WHR. This has open space below, no support nearby. It could be shorted on Friday itself with stop just above Friday's candles high. Exactly where the stop is to be placed, we could decide that using Q protection signal. There are many other chart templates, so we could decide different aspects of trade management using the other templates. So we carried out a top-down analysis. We established a market bias, bearish, looked at weak sectors, weak industries, weak fundamental stocks, and we looked for bearish trade setups. We came up with 1. I may also share with you few other shorting candidates that I found when doing the analysis earlier. One is TSCO, Tractor Supply. This is coming down from the 2 direction lines. The stock is in a downtrend. Pull up to resistance, then tilt down, and the candle color turned bearish. So that's an optimal shorting position using the pullback short setup. I'll share one more stock, that is in the watch list category for shorting 5 below, FIVE. This has a trend following flow short setup in the daily chart. It also came to trend line resistance tilted down from there. It has a low risk shorting opportunity. Stop will be just above the trend line resistance. Now you could look at these stocks, fundamentals and industry strength to confirm if they are 360-degree straight. So fundamentally, we need a stock to be weak. Industry, we need it to be weak. Technically, 5 is weak. Let's look at its fundamentals. We can carry out any stock in any market, their fundamental and peer analysis using QVital. I'm entering the ticker code 5. It is going to retrieve data from Zenith multiple times. One, it is retrieving some basic information about the stock scorecard. It has filled that up. Now it retrieved the peer stocks, 34 stocks, and lastly, it is retrieving data about those 34 stocks. Let's read it. Valuation overvalued, earnings growth negative. You can see here earnings growth is not only negative, it is sharply coming down. Revenue growth, quarterly revenue growth, quarterly earnings growth, year on year, both of them are sharply coming down. Funds are not buying. In itself, the industry is very weak on Friday. 91% of peer stocks of 5 in specialty stores, department stores, they were down. So in itself, the industry was weak. Fundamentals are weak, both in terms of valuation growth. What about relative scorecard of the industry? We can look that up from which program? QH. That's the sector industry rotation analysis. This is the industry scorecard for specialty stores. One of the bottom 20% industries, and we came back to the most decelerating industry. Isn't it nice to find shorting opportunities in the industry that is decelerating the most? So once again, I gave you an example of a stock 5, looked at its technicals. It had a possible short setup, and then we confirmed that fundamentally it is weak and industry is also very weak. Again, ending up with 360-degree trades with all the forces aligned. So those are two workflows. When you use top-down, you use the systems. If somebody gives you a stock or you read about a stock from somewhere, you analyze the stock using the different Q systems. Now let's use another approach. Let's use bottom-up analysis. In bottom-up analysis, we start with Q Finder. That is the technical breadth, and technical breadth daily interval is very bearish. And we see, you see, I am conducting the opposite workflow now, but we'll probably arrive at some of the same stocks, maybe some different stocks also. So I see technical breadth is very bearish, and there are large number of breakout short setups. So let's go to bearish signals. Let's flag the breakouts. 203 breakouts. I don't want to look at all of them. What I want to do, I want to use some powerful momentum signals. I want to look at stocks that were moving inside a squeeze, meaning they were moving inside narrow range and now breaking out. And I want some momentum in terms of Mobo breakdown and Kahuna. Very powerful signals. When you take them together, I am left with 17 stocks. What are these stocks? They are all breakdown candidates that were moving inside narrow range, inside the squeeze, and they are breaking down with high bearish momentum. And you can see the percentage change of the stocks. I am not going to focus on the stocks that went down by 10, 12, 15% because the stop will be very wide. Let's instead look at the stocks. Let's look at stocks that up to 6%, 6.4, 6.5, up to 7. Let's see if we have, okay, it's telling me to close MetaStock charts before I start this analysis again. Let's close MetaStock charts. So I'm opening all these charts using bottom-up analysis. I found stocks that are breaking down. Then I looked at stocks that are breaking down from a squeeze with strong bearish momentum. And I'm looking at some of the stocks. Let's see if we find a low risk short setup. If we find, then I'm going to further look up their fundamentals and industry strength. I will look for weakness in this case because these are breakdown candidates. I did open a large number of stocks in one go. Give it a few seconds. Okay, SWK. This is giving a very clear short setup. It was moving inside a narrow range, and you see how I use QFinder to find a very specific pattern. It was moving inside a narrow range here, and now it is breaking down. So we have a possible short setup in SWK, Stanley Black & Decker. Okay, let us skip it. I'll come back to its fundamentals. Next one, VCYT. It did break down below the trendline support, but it is still moving inside the range. So I am going to skip this. Next one, MHK. This is also giving a very clear breakdown setup with bearish momentum. It was moving inside the squeeze and now broke below trendline support. So I'm going to keep MHK. I look at its industry and fundamentals. Next, Aqua. It broke below one trendline support, but has another trendline support nearby. I'm going to skip it. AVXL. Still inside a narrow range, broke down, but the breakdown is not decisive enough. I'm going to skip it. EB, it broke down, but I preferred the other two stocks. Let's skip this. TTMI broke below two trendline supports, but another support is nearby. I'm going to skip it. Mr. Cooper, COOP, broke below one trendline support, another support is nearby. Skip this. Ping, PING, breakdown but not decisive enough. Skip this. Otis, OTIS, has another trendline support nearby. Skip this. So I'm left with MAS and MAS. Let's look at MAS. MAS has a very narrow range move and then a decisive breakdown with bearish flow. I'll keep MAS also. Next is Monster Beverage, MNST. Breakdown below one trendline support, another support is nearby. Skip this. Coca-Cola Europe, I'm going to skip it also, has a yellow direction line support nearby. So I am left with three stocks. In bottom-up analysis, looking for breakdowns with bearish momentum that were moving in very narrow range that allows us to have narrow stop and potentially high reward, giving a high reward risk ratio. So they are SWK, MHK, and MAS. Now it's time to look at their weekly and daily. MAS, weekly bearish color, bearish shape, daily clear breakdown, no nearby support. So MAS has a very nice breakdown setup. Next stock, SWK. Let's look at it using weekly daily again. Bearish candle color in weekly. Sorry, neutral color, but very bearish shape in weekly. And daily has a clear breakdown. So SWK also has a breakdown short setup. It was moving inside narrow range earlier. And lastly, we are left with MHK. Look at it using weekly daily. Bearish weekly, bearish daily. So let's look at these three stocks fundamentals. MAS. MAS valuation is medium. You can see here. Earnings growth, small positive, but it is improving from minus 10.7% to 6.7%. You can see here funds are buying. So I'm allowed to buy in terms of fundamentals. However, now my market bias is bearish. This is falling down. I'm allowed to short as well because valuation is medium. Earnings growth not very high. So this is a stock where fundamentals are medium. If you see the industry in itself very weak, 93% stocks went down. Building materials, building products industry, its relative score we can look up from QH. Bottom 20% in terms of both acceleration and score. So we are allowed to short. Fundamentals medium, but industry weak, technicals weak. Let's look at one more stock and then I will show you some bullish possible setup even in this market. SWM, here it is undervalued. This had a technical breakout setup, but fundamentals are strong. So I'm not going to try to short SWM. Let's look at the last one then, MHK. These three stocks had breakdown setup from squeeze with bearish momentum, but SWK had strong fundamentals and MHK also has strong fundamental. So I'm left with MAS. So in bottom-up analysis, I found some short setup. In top-down, I found some short setup and I gave you some stocks like 5. Now I mentioned, I don't have time to do fundamental first workflow, but I did look at some stocks that are at weekly trendline support. In Q, there are multiple scans. One of them is stocks at trendline support. One of them is at trendline resistance. I ran this scan at trendline support and I ran it using weekly interval. I went through the stocks. See what I'm doing. Market is very bearish. I'm looking for stocks at long-term weekly trendline support and see if I am able to find some stocks that I may consider buying. And I found this stock, AEM. Let's look at that using weekly daily. It's looking great, isn't it? In weekly, it is bouncing up from trendline support, bullish candle. In daily, bouncing up from trendline support, bullish candle, and it has given a flow trend following long setup in daily. Even in this weak market, we could find a stock, very strong stock, and it is a gold miner, AEM. How is it fundamentals? Let's complete quickly the 360 degrees analysis and you will see something interesting. If you are following these systems regularly, you know how the gold miners are, for example, and you would know already that relatively AEM is one of the stronger gold miners. In terms of actual score, you can see here valuation is medium. Earnings growth is negative, but improving. That's a reason to buy. Improving earnings growth is also a reason to buy. Analysts are bullish. And I mentioned you will see something interesting. See, in a very weak market, 100% of peer stocks of AEM, gold miners, are up on Friday. So it's a very bullish industry in itself. How is its industry score from QH? Let's look that up. It is the strongest industry. 148 score out of 148 industries. I just look at the color. It's very strong. And if you wanted to look at whether the industry is up, this is actually up on Friday by 3.4%. So we actually found a possible buy setup in an industry that tends to move opposite to the market sometimes at least, and we can see that now in action. Gold miners industry is up, strongest performing industry, and we found a bullish setup in a gold miner. Stop will be just below the trendline support. Now, in this manner, you can carry out many workflows. You could carry out seasonality first workflow as well, or your own custom analysis, just like I did, looking at stocks at long-term trendline support. I'm at 1 hour point. I will not take more time. Thanks to all of you once again for joining. Thanks to MetaStock for organizing. I'll pass control to Bobby, and you may contact me anytime using the email ID you can see on the presentation. Thanks a lot.
All right, thanks, Sagar. Yeah, great presentation. I'll go ahead and take back over here. And let's go ahead and share my screen. And we'll share my face too, why not? Here, let's turn on some light so you guys can see me a little better. All right, yeah, thank you, Sagar. You have a really great add-on. You know, I really like the workflow that you have there, and you know, just how unique you've kind of taken things with your trading system too. So wonderful presentation. Let's see, am I sharing the correct screen here? Yep, okay. So just really quick, I did want to touch on the trading system that we actually have available from Sagar. We have part of his Q Global system as an add-on readily available inside of MetaStock. It's the complete, unambiguous, and easy to use is what that stands for. So it comes with 19 indicators, 19 explorations, 9 templates, 7 experts. I mean, it works with everything. You can use this with stocks, futures, options, Forex, you name it. It'll also work across all time frames. Normally, you're looking at $99 a month or $950 a year in order to get that. However, as part of this presentation, you can get a 3-month offer for the price of 1. Just chat into our chat room, metastock.com/sales chat, or you can also just order it at metastock.com/APAC-deal. Or even better, you can take advantage of the bonus offer that we put together that has all of the trading systems that we've showcased so far today that are available in MetaStock. You would get the Superior Profits Q Global for 3 months, Stuart McPhee's Trade Launch system, who did so well just before Sagar, and also his 5-part training class, a 3-month premium subscription to the Learn MetaStock website, where Kevin Nelson has hundreds of hours teaching you how to trade and how to utilize the MetaStock platform, as well as our Unleash the Power of MetaStock bonus book and videos too. Normally, the price point on that, $16.91, but as part of the offer, $8.96. I mean, you're saving hundreds and hundreds of dollars there if you're an active trader at all whatsoever that's, you know, maybe struggling or just looking to improve your trades. Even if this just improves them a little bit, you know, it should help you to get your money. And we do have a 30-day money-back guarantee on all of our one-time purchase products as well. So that's something to keep in mind of. And if you have more questions or want more details on that, again, chat in metastock.com/sales chat. I know we're already past a little bit. So for our next presenter, Robin, If you need to go over a little bit, that's totally fine. Sorry we cut into your time a little here, but I want to welcome you and say thank you for agreeing to participate in today's presentation. I did go back and watch some of your previous ones you've done with us. You've done a really great job before, so happy to have you on today.
Hi, Bobby. Hi, everybody. Can you guys hear me?
Yeah, I hear you here loud and clear. And it looks like
yeah.
coming in.
All right.
Yeah, there you are.
Hey, great.
Perfect. Yeah, let me make you the presenter here. Just one moment. Here we go. And yes, there you should have a pop-up to take over. Okay, yeah, so I see the go to webinar screen. Oh, now I see a PowerPoint. Yeah, that looks good. I think I'll just let you go ahead and take it from here.
Yeah, thank you, Bobby. All right. Hi, everyone. Let me just adjust my screen. Thank you, everyone, for joining me in this session. I'm going to take the next 1 hour as the title of this presentation suggests, how I predicted the 2022 market meltdown and when will it bottom. All right, so what I hope to do is in this session, right, not only I basically want to tell you about my trading strategy, the RHO proprietary trading strategy, how it works, and how it benefited a big community of mine. So I have about 10,000 people following my trades a day. All right, some paid to get my trade alerts. Some are just following my Facebooks and my Telegram chat. All right. So what I hope to do today is to tell you my strategy and how we apply this very simple strategy to short-term trade, medium-term trade, long-term trade, and also to make things even more interesting, how do we apply this strategy to our current trading scenario? All right. So the current scenario really, or trading environment, the big buzzword people talk about is the 3 R's, recession, rates, Russia, all right? So how do we apply this trading strategy to our current trading environment? All right, so let me just kick off by saying the usual disclaimer in this presentation. Everything that the content of this presentation is really for educational purposes only. There is no inducement to trade. So a very short introduction to myself. I am in the Singapore market a veteran, and a lot of people know me as a veteran trader, a veteran educator, and a veteran stockbroker. So I've been in this industry for the past 20 years. And for many years, I've been the top trader and the top stockbroker in Phillips Capital. So I've been on the social media, all about trading matters. I'm a trainer for stock exchange. I speak for the Singapore Stock Exchange on various trading topics. Many occasions here, I do live trading. All right, and some of those things that for me, I'm very passionate about, and I really hope one day a lot of people can benefit, all right, from my trading strategy. And something that a lot of people don't do, I do it, and a lot of people think I'm crazy. It's like a session like this where I do live trading, all right? So I do live trading in front of like a capacity crowd, 200 over people, 300 people. All right, and I try to show them that how to make quick profits, all right, or intraday profits, all right, within the lunchtime. So this is the lunch crowd that you see here, and you know, before even the session starts, I tell them about my trade plans, how I will trade the market today, and as the market moves minute by minute live, I trade the market, and you know, I remember doing about 10 sessions of this. And not remembering, you know, I never lost a session, all right? So so that's how, and I have been like, you know, doing a lot of talks for SocGen, for Macquarie, Singapore, and this is the guy that inspired me to be a full-time trader today is and I think a lot of you know him, Jesse Livermore. You know, we always, you know, a lot of people call him the mother of traders. And let me just quote from Jesse Livermore, right? And Jesse Livermore said that I know from experience that nobody gives me a tip or a series of tips that will make me more money for me than my own judgment. So what Jesse Livermore, right, is saying is this. He's saying that if you want to come into the market, right, to trade or to invest or to make money for yourself, you know, it's very important not, all right, to depend on somebody else. You have to depend on your own judgment. So this is what I did over the last, you know, I've been trading 30 years, and really, you know, I've learned from paying heavy tuition fees, all right? And that heavy tuition fees is learning from the market. And this is what I want to share to you, all right, what I have learned from the markets. All right, so this is, you know, in the 1986, I think, or 1990s, there's an article posted about me, my life story, all right, how I made $300,000 in 12 months and lost $500,000, all right, in 2 weeks. Okay, and you know, in the 1990s, $500,000 is a lot of money to lose. Okay, yeah. So I was riddled with you know, a lot of debts. Nearly went bankrupt, and I managed to climb out of it. And in this article, it talks about how I climbed out of this debt from and literally from zero to become a hero in the trading community. All right, so my first big break, right? So this the title of this this seminar is all about how I detect or how I found, all right, the top of the market, the 202 meltdown. But you know, before I even tell you about 202 meltdown, right, let me tell you that in a recent memory, okay, in a recent memory, we had a long bull run, right, starting from after the great financial crisis in 2007, 2008. We had a 14-year bull run, right, from 2007 to all the way to 2022 today. All right, we seldom have a huge correction or a bear market. All right, but we had three of them in between. We have three of them. All right. So after the 2008 bear market, all right, that lasted for about 2 years. The next one we had was the big four was the pandemic. All right, I mean the COVID pandemic correction where the market dropped 30%, and this is the one we are experiencing now, a bear market. A lot of people believes, all right, it's a bear market, and also there are a lot of people that believes that this is will only be a very short correction in the bull market. All right, so we have very differing views on this current meltdown, right? But today I'll talk to you about my view. Okay, so I want to talk about how I spotted these three crashes, all right, and how this 2008 crash, all right, made me my first big break, or my first $2 million. Okay, so this is a very simple trade plan, right? Very simple trade plan that I had, and it so we had a market that was going on an uptrend since the 1990s, and it peaked, all right? It peaked on 2008, and we had the great financial crisis where the market crashed down about 50%. Okay, so when the market was going up, all right, from year 2002, and it was climbing all the way, and I had this trade plan, had this line drawn, and the minute it hits, right, the upper end of this channel trend, I begin to short. All right, I begin to short the market. What I did was that I put $100,000, all right, into the shorting account, which is the Phillips CFD account. Okay, so I put $100,000 into it, and in 15 months, all right. So this is the day-to-day trading records that I still keep. Okay, and in 15 months, it turned into $2 million. Okay, so from a let me just go back again, all right, from a very simple trade plan, all right, and then you will ask, Robin, how do you get this trade plan? How do you draw this trade plan? All right, the secret to drawing this trade plan is here. I see my cursor here, all right, and it is during the uptrend, all right. So you can see this uptrend line from 1988 stretching all the way to 1996. All right, so what I did really, all right, is to project this uptrend line, all right, here, and also at the bottom of this uptrend, you can see a channel trend, all right, and the channel trend picks the top here, and not only does it pick the top, right, it also picks the bottom. It also tells you when the market will bottom in the 2007-2008 meltdown. All right, so well, very simple, you know, trade plan, but it could make you a lot of money. And you know, this is why, you know, simple things or simple strategy in the market is very useful and makes a lot of money. So I don't believe in a lot of complicated indicators. All right, I believe in very simple price action strategy, which I will be telling you as we go by. So another correction, all right, that I detected, all right, before even it came was the COVID pandemic crash. So the COVID pandemic crash, right, we all know came about around about in the between the February to March of 2020. But you could even before the pandemic crash, 3rd of December 2019, you could see that I sent out a flash red warning alert to all my followers, all my students, all my clients, and I said, hey, we could be experiencing a huge correction coming. All right, and how do I do it? Another very simple trade plan. All right, and you can see in this trade plan, right, this uptrend, all right, channel, all right, it hits 4 times, and on the 3rd time, I said, all right, we are going to get a very big correction coming, and what we got, right, was a 38% correction, all right, on the Dow Jones. All right. So similarly, right. So after that red alert on S&P in December, 4th of February, all right, 2020, all right, I detected a market topping pattern again, and what I did was as usual, a big trading community that follows me, I sent out a warning. I said that we could see a topping out pattern, all right, and with this double top, and if it breaks 28700, we could see a market crash coming. Okay, and did it happen? Well, that was what happened, right? So this is the double top that we saw here, and we saw a big crash that came. All right, so, and then a lot of people will be asking me, you know, after that, you know, Robin, what was your secret, right, to knowing this big crash is about to come? And is it just because of the double top formation chart pattern? All right, so there is a lot of double top, you know, chart patterns that we see very frequently, and a lot of them, right, don't turn out to be a crash, but this one turned out to be a crash. So it's just not about a double top chart pattern. It is really about this macro, all right, trade plan that I have. You see this macro trade plan, this trend line, all right, it actually continues from the 2007, 2008 trend. You saw that? So this was an uptrend channel that we had, all right, and that was the 2008 top that made me $2 million. And after that, you see the bucket, after the market bottom in 2009, that was also caught by this channel, all right, it started its bull run, a rally that lasted 12 years. All right, so this 2008, all right, bottom was where it started, all right, the uptrend started, and I was just, you know, using this trend line here, and you know, just waiting, all right, for the Dow Jones to hit the top end of this trend line. You see my cursor here? All right, so this is the top end of the channel line, and when it hits, all right, and then also confirm with a double top pattern, that was where I sent an alert and I said we're going to have a huge correction coming, and we got a crash. And what was my reward for this crash? All right, on the CFD, all right, you know, I made $175,000 from the 1 month crash. All right, but that was only on a CFD account, right? So I got a couple of accounts, and they total up to be about $700,000 profit. All right, just detecting that top. All right, so let's come to the more interesting part, all right, and that is the current meltdown. All right, so this, you know, whatever I tell you today, whatever chart I showed you today, all right, is something that, you know, I showed to tens of thousands of people, okay? So this is what I showed on my Facebook page, on my blog, and to all the clients and students of mine on 10 November. See, 10 November, right, even before the Ukraine war, the chart was flashing red again. All right, and what I said here was 20 years of uptrend could be coming to an end soon. Can you imagine, all right, that you know, a lot of people, when I posted this, all right, a lot of people wrote to me and say, hey, Robin, you're crazy, all right? You know, we are in the midst of lots of liquidity, money printing, low interest rates, you know, and we're in the midst of a big bull run. How can you ever say that the market is going to crash? All right, you know, I always try to report what I see on the chart and what I feel that is coming. So I just, you know, stuck to that view, and then that's where we see happen. I mean, you could see here, all right, what interesting me, right? What you could see here is that I not only detected a market top, right, on S&P 500, but at the same time, right, Dow Jones was showing the same kind of flashing red technical signals of a market top, right? So that was S&P and Dow Jones. What about NASDAQ? All right, so NASDAQ on 21st November was also showing a market top, and that was the you know, the warning that I sent out on 21st November, and I said NASDAQ 100, all right, could have topped out at 16,764. All right, could have topped out. That means, you know, you won't see that for a long time. I mean, that's the meaning of topped out. You know, when I use the word topped out, that's what it means. It means that you know, we won't see this for a long, long time. All right. So a lot of people, right, today, a lot of market analyst guru, they will predict market tops, all right, and they will say, wow, you know, the market could have topped, the market is coming down. But the question is, you know, if you say the market is coming down, then where is it going down to? All right. So where is it going down? Do you have a plan? Do you know where it's going down to? Okay, so every time when I said market top, I will come out with a plan. I will say where it is going. So what I want to do, all right, and you are going to see with your own eyes today how I guided, all right, the NASDAQ from the top to where the market is now. How I guided every rebound, every reversal, every tops, every short, every long. All right. So how I guided everyone, and I want you to see that it is possible, all right, to be calling, all right, you know, to be predicting prices at whether it's short-term trade, long-term trades. All right, it's possible to know where prices are heading. Okay, so I said that Nasdaq will after hitting the top, all right, will at 16,764, it will go to my next target at 15,250. All right, so from 16,764 to 15,250. All right, so here we are talking about a near 1,300.4. Right, so we're talking about 1,300, and a lot of people will think that, hey, you know, Nasdaq has been so strong for so long. How can it fall so badly? All right, a lot of people think I'm crazy again. All right, but I wanted to show more evidence. All right, so from I mean, you have technical signals, but there should be more technical evidence of the market falling. And I showed this chart on the market breadth. All right, so Nasdaq was going up, but the breadth was going down, and that was another signal that tells you the market could be topping. All right, so let me just run through the process with you. So the market top here, right? And after the market top, it didn't crash immediately. It went down, yes. All right. So remember, my target was 15,250. All right. So I revised this trade plan. All right, here. All right, to 15,345 instead of 250. All right, and so this is where we are heading. Okay, so I said this is where we are heading. Watch out. And when the time was about right, on the day of 18 January, I said, hey, tonight is the inflection point. Tonight we are going to see the market crash. All right, we are going to breach. We are going to hit 15,250, and if we ever breach it, all right, the market will go down at least another 10 to 20%. Did it happen? Yes. All right, it breached. All right, so see. Nasdaq, all right, broke this trend channel, all right, and then when it broke the trend channel, all right, technically this trade plan is over. There's no more, all right, this trade plan, because the prices have already broke below the trend channel line, and therefore we are having another new trade plan. So I came out and I said, all right, so now that we have broken the 15,250 mark, we are going to 1,400. All right. So you should short here and cover your shorts at 1,400. Okay. So that's what I said. And did it happen again? All right. Look at that. All right. So this is what happened. All right. It broke when it broke the 15,250 mark. This was the breakdown. All right. This was a breakdown. You see that it went as low as 13828. All right. So that's very close to my 1,400 mark. All right, breach it a little bit, and if you have not covered it, you see that it rebounded all the way very, very close to where it started from. It rebounded to 15,000 again. All right, so see how important, all right, is it for you to be able to identify where the support and resistance is. And after that, I said, okay, after it hits this, we are downtrend is going to resume again. You see that? I said the downtrend is going to resume again. And if resume, where is it going? All right, it is going, all right, from 14,500 all the way to 12980. Okay, so that's what I said. It is heading, and we are talking about 1,600.4. I'm predicting 1,600.4. Did it happen? Look here, all right. That's where it went. Look at that, all right. So the market went to bottom, all right, to the level that I predicted about, okay. And then look at that, all right. Look at that, all right. It went to 12,900. It rebounded all the way, and we covered the shorts here. And I said, hey, it's time to short again. All right, 15,300 or near to it. All right, it's time to short again. So we started shorting again, and that's where we are today. All right, so this is the last update. I don't have the latest chart, but all right, so this is the last update of 6th of May. The market came down last night. All right, last night the market, all right, tried to is heading for this bottom again. So when the market hit this bottom, this trade plan will still be enforced, all right, will still be enforced. And all right, if you want to know where NASDAQ is further going, all right, please, just keep in touch with me on my social media, on my stock chat. All right, so what's my strategy? So a lot of people will ask, Robin, is your strategy just about price action, just about drawing trade plan, about trend lines? No. All right, so to be a successful trader, you need to understand fundamental analysis and technical analysis. Okay, so these two together, all right, in acronym here is FATA, right? If you understand Chinese, what FATA means, all right? FATA, FATA, right? It's in Cantonese, it's called FATA, which means become prosperous. Okay, so this strategy, I think a lot of you might have heard of that already before. All right, so let me give you an illustration of how you synergize fundamental and technical analysis. All right, so a good example is way back in May 2021. All right, there was a time when President Donald Trump wanted to delist Chinese company from the American stock market. So when I heard of this news, all right, the first thought, all right, that came to my mind was the main beneficiary of this all will be the Hong Kong Stock Exchange. All right, Hong Kong Stock Exchange. If all the ADR, US Hong Kong listed, China listed ADR is going to go back to China, they are going to be listed on Hong Kong. All right, and so that is why I came up with a trade plan on Hang Seng. All right, and also, I know a lot of people made money from this trade plan. All right, and I saw the idea of how Hong Kong Stock Exchange will benefit, right, from this delisting of US stock, China listed US stocks. All right, so this trade plan, all right, call for buy around about 265. All right, with three target, all right, 360. And the upper end, which I didn't write it, but it went right through to 450, and that was the upper end of the trend line before retracing all the way back to where it is today at 200. All right, so it's so important, all right, to be drawing the trade plans, being able to know how to draw the macro trade plans, all right, and understanding price action. Okay, and what was my reward? All right, my reward, I can only show you my contra trades here, though I made a lot more than this from my investment in that short. That means I set the short throughout, but this is my day-to-day trading. Right, I didn't pay a cent to pick up any position, but this is my day-to-day trade record on Hong Kong Stock Exchange. And if you are a Singapore trader, you know what the contra means. All right, so I buy and I sell them within a week without having to pick up the stock. I made $98,000. All right, so let's come to the more interesting part, all right? And that is what I promised today. Where are we today, right, on the charts, all right? And where is the market going? Okay, so this again, right, is the NASDAQ chart, all right, updated up to 6th of June, all right? The most important thing, all right, to understand about the market is really where the trend ends and when the new trend starts. All right, so this is where we had uptrend, many years uptrend of a NASDAQ. All right, and here was where the market NASDAQ topped out. All right, and I want to show you the price action before the top out. Right, so you see that NASDAQ was ranging here after it hits the top. All right, it was ranging, but the volume was picking up. And to me, that is a very bearish signal. All right, you have price ranging, volume pushing, unable to push the price any higher, and then we had a breakdown. So remember, this is the breakdown. And until we see the market turn around and breaking above this breakdown zone, the market is not bullish. The market will continue to go down as long as it stays below this breakdown zone. All right, so that is my rule of thumb, all right, for determining when to get bullish and bearish. All right, so this is where it is heading. So this is the new trend. All right, and I've mapped out. All right, so a lot of people are asking me, Robin, where will you see NASDAQ going? All right, is this going to be a crash? or is it going to be, you know, one of those very healthy corrections that we see in so many bull runs, all right, that you know, we saw in the last 12 years. All right. So what I really explained here in here is that we have the recent 3 market crashes, the .com market, bear market that dropped 85% last 2.5 years. The global great financial crisis dropped 50%, lasted 1 year. The COVID pandemic bear market, all right, was the shortest bear market. It dropped 30%, lasted only 1 month. All right. So there are all right. So you were asked a question, you know, so what type of bear market are we in now? All right, my feeling is that I'm just looking at the charts, all right, that for NASDAQ, there's only 2 possible bottom, all right. The first one is 9,500, and the second one is 7,000. And that is why, so, you know, that is why I have a lot of shorts, all right, on NASDAQ today, all right. So I'm sitting on lots of shorts on NASDAQ since the day one when I call the shorts, all right. I'm sitting on it, all right. You know, this is my trade plan, right? Is to see NASDAQ falling, all right, to 9,005 or even 7,000 before I even call it quits, all right? So here again, the S&P chart or how it topped out, all right? And see, so this is how S&P topped out. So this is my trade plan on S&P. And I just started this trade plan and is working fabulously. Right, look at this trade plan, all right? So this was where I called S&P top short, all right? It broke the uptrend line, and after it broke the uptrend line, you see it hits this line here, all right? So this was my first support. It hits, it rebounded, all right? It went down, it hits here again. See that? See my cursor? And rebounded right there, and it fizzles out again. Okay, so if all this trend, all these lines that I draw mean something, it means there is a very strong support and resistance. So even in a bear market, all right, you know, the market is not going to go to one, it's going to go one way down, all right. So this is my trade plan, right, for many years to come, all right. And every time when it hits the line, I will be covering my shorts, and every time it bounces off and hits the top end of the line, I will be shorting again, and that's what I have been doing all the time. All right, so that was my technical picture of Dow Jones, S&P, and NASDAQ. All right, so remember, my strategy is about FATA, then that is about fundamental analysis. So you need, if you believe that technically the market is coming down, then what is the fundamental reason that it will come down? All right. So the fundamental reason really, it's about inflation. All right. We have inflation all the time, but this time is different. All right. And that is why, you know, since middle of last year, I was talking about commodity, the start of a commodity super cycle, even before the Ukraine war. So today, a lot of people are talking about, you know, inflation and you know, commodity prices going up for a long time. All right, but there I was last year, middle of last year, I was beginning to talk about commodity and inflation, commodity super cycle and inflation, and back there I was starting to shift all my students and clients out of stocks into commodities. All right, so primarily we are into commodity ETFs, all right, commodity unit trusts, and also a lot into oil. All right, so what causes all this? All right, so I mean, I attribute a lot of this, the reason for the current crash, all right, to President Donald Trump's time, all right, when during his term, right, he printed more money, all right, in his 2 years tenure than U.S. last 50 years of money printing. All right, so you can see from here, all right, how much money he printed. All right, to me, it's exorbitant. You can see for yourself. All right. So, and during the last 12 years, okay, since the market started QE in 2008, and that was the start of when the central bankers were not only printing money, they were printing money to support the stock market and every asset class around the world, hoping to bring inflation up. All right, so the focus was that in 2008, all right, to 2022. All right, not only there was a lot of money printing, the focus there was on technology. So a lot of money went to technology, a lot of money went into the stock market. All right, and guess what? All this money that was channeled to the wrong places is causing what we are seeing today. In the last 12 years, we were underinvested in commodities. All right, and you could see here that, you know, commodity producers are giving more capital to shareholder rather than spending money into commodity capex. So you could see the capex coming down, all right, and the share buyback and dividend is going up, all right, on this chart. And you could see that the commodity producers, all right, their capex cycles is right at 19-year low here. So how are you going to, you know, turn around this whole situation that was caused, all right, by 19 years of underinvestment? You know, things are just not going to turn around like this so quickly, all right. And here, you know, today we have oil and gas pump prices shooting to the roof, all right. And look at how much money we put into capex, all right, for this. All right, look at the oil today, oil prices today, and the capex, all right, is so much lower, all right, as compared to what we had in the peak of 2014. All right, so the question here is: the commodity is at 40 years high. Is it overvalued? And the answer is no. It is, although it's a 40-year high, it is still undervalued as compared to the Dow Jones Industrial average. Is still way undervalued. All right, and all right, so today, right, when we talk about inflation, the first thing that comes to our mind, a lot of people, all right, bring back the memory of 1970. All right, so you know, a lot of us here listening to this seminar don't even live or invest or old enough to understand what you know, stock market and inflation is all about. All right. But in 1970, all right, look at that, all right, it was the same scenario, all right, we had today, underinvestment in commodity, and then what we had was a rally, all right, on the commodity prices, and this is a commodity, Bloomberg Commodity Index, all right, saw how it rallied 250%. And you could see that as long as commodity is going up, right, stock S&P is going down. S&P will not outperform the market, all right, as long as commodity is going up, right? So what we had here was that commodity went from in 1970 all the way to 1974, all right, before it took a break. And then what you could see here is that in 1976, all right, after a short break, it continued. So a lot of people thought, you know, 1974, there was the end of commodity bull run, but it continued to go up another 100%. All right. So this is, or this could be a possible scenario. I'm not saying it's going to happen, but I'm saying, all right, it is a possible scenario, and if it happens, it's what my son always tell me, GG, it's gone, all right? It's gone, GG, all right? All right, it's GG to a lot of asset class, especially the stock market that we see today. All right, so that was in the 1970, all right? So the latest commodity bull run we had was from 2002 to 2008, all right? And that lasted for, you could see, about 6 years. Okay, so the commodity bull runs, right, normally last between 6 to 10 years, right? So in this case, it was 6 years. And what is the what is the the current commodity bull run? All right, it's hardly into the second year. All right, it's hardly into the second year. So it's still very, very, very young. All right, commodity market, and we are still at the very early stage of commodity super cycle. All right, and that is why anybody ask me about the market, I said just invest in the stock market, invest in the commodity markets. All right, so this is my illustration on my big picture of the commodity markets using the Bloomberg Commodity Index as illustration. So we could see, right, from the 1990s, after we passed the 1970s commodity inflation, we went into accumulation, a hibernation phase, all right, 1990 all the way to 2002, and from 2002, see that from to 2008, we had a super bull run, all right, on the commodity index, and then we had from 2008 until, all right, beginning of the year, we had a crash. All right, we had a crash and it bottomed out. All right, so we are just beginning, all right, to step out of this accumulation zone again for commodity, just about, all right, to get out of it, and it has still got a long way to run. All right, so this is where I call, all right, a commodity bull run. All right, here super cycle. This is where I started middle of last year, and yeah, and I said, all right, hang in there, all right, get into this commodity market, and it could last 7 to 10 years. All right, so we are into only our second year, long way to run. And like what I do for stock market, when I spotted, a good trend, I started drawing now the trade plans. All right, so the trade plan is saying here, all right, it could top out about 135. All right, today we are close to there. We are about there already, 135 for the first run. All right, and then if we get out of 135, which I believe, all right, we are going into another trade plan which I already drew. All right, so you can see how I draw my trade plans. All right, and how I prepare for at the end of every trend, I'll prepare for the next one. All right, so why is commodity market going to last a lot longer than we expect? All right, underinvestment. All right, inflation is going to last a long time. Economy section on Russia, the Ukraine war, okay, and commodity is going to be the ultimate hedge against inflation. All right, and a big part of commodity is on crude oil. I want you to be watching crude oil, and that was my last trade plan on crude oil on 31st May. All right, and it's heading to my next target at 130. Today is doing at like 118. All right, the WTI. Okay, so another fundamental reason why I think this bear market is going to last a lot longer is because I believe the Fed is caught behind the curve. They are firefighting today, and the market is all the Fed is all about two things. All right, the mandate for the Fed is about keeping inflation low and unemployment low. All right, so one of those things that have kept the Fed, right, from drastic action, all right, in bringing down inflation is the labor market. So the labor market, right, the unemployment has been trending down since 2020. All right, it's trending down, and it has hit one of the lowest point at 3.6% unemployment. So can you believe, all right, that how can you believe that we are going to recession when we have massive unemployment, all right, sorry, not massive, very, very low unemployment in the market, all right? So the unemployment is so low, it tells you the economy is doing well, and that's why, the Fed is very, very slow, to combat inflation. But so this is one chart that I wanted to tell you, and I think we are heading that way. All right. So the Fed always starts with firefighting. All right, trying to dose the inflation flame. All right, but you know, they will find that it is not effective, all right? If they just want to keep up with inflation, all right, raise interest rate, all right, in tandem with inflation, then they are not going to fail, because history has tell us that it's not going to work. All right, so in the 1976, all right, look at that, all right, you know, inflation was going up, and the Fed raised inflation in tandem, all right, with in the interest rate. And when they found that it doesn't work, right, what do they do? All right, they raise inflation. They raise interest rate way above inflation. All right, and they just want to kill inflation once and for all. All right, so in the 1976, interest rate went up to 20%. Can you imagine interest rate going up to 20%? All right, inflation in US today is 8.5%. Can you imagine? All right, the Fed, all right, were to raise interest rate above 8.5% to kill the inflation fire. All right, you know, like I say again, is GG again. All right, so I want to tell you again my recent prediction. Alibaba. All right, my time is running out. Okay, so Alibaba 1 day prediction from price action 101 to 110. It hit. All right, so that was just last week. All right, a lot of people follow this trade. All right, one of my best call this year was Dynamite. All right, Dynamite. All right, 120% in 2 months. How did I do it? So this was a stock, all right, that was hovering at 10 cents for a long time, and I was watching it like a hawk. All right, I was watching it like a hawk. Why? Because it is in the oil and gas sector. Fundamental analysis. It is in the oil and gas sector. All right, and it's doing well. All right, and look here. All right, so I was watching for what? For my favorite indicator. There is one good volume. You see that? There was no volume at all, and look that there's a volume spike here. And you know, when the volume spike came, I started entering, all right, or buying Dynamite here, you know, and I, you know, broadcast this whole thing to my whole trading community. All right, and the rest is history for 10 cents. The last trade yesterday. So this chart I updated until yesterday. It closed at 27 cents. So that is, all right, 170% return. All right, in like 2 months. Okay, so what is the fundamental analysis that caught my attention? Look at this. All right, the last, you know, earnings report they had, cash position 114. All right. And you know, when I look at the market capitalization, it's about there. The whole market capitalization is equal to cash value. All right, to me, wow, it is, you know, its valuation is a screaming buy. All right, and then look at the order book. All right, it has got 582 million on the order book as compared to previous year 370. All right, which means, all right, you know, the business going forward is going to be good. Okay. So this is iFast. I call a short. Yeah, iFast was the darling of Singapore stock market. All right, rising from like $1 to $8, and then saw at 7.85. I call a short to $6. All right, did it hit $6? Yes. All right, it went to $6. All right. So now that it hit $6, what's my new trade plan? This is my new trade plan. It's going to $4. All right. So this is a new trade plan, and it's going to $4. DBS. Look at the trade plan. Right. So the trade plan for DBS was to short it, all right, at 36. After it breaks 36.5, short it, all right, and to cover your shorts, around about $30. All right, did it hit there? It hit exactly there. I saw that hits there, and then it rebounded back. All right, today we're testing that level again. All right, this is the quickest, one of the fast trade that I recommend to everyone. All right, Venture. All right, look at Venture. All right, Venture, I call a short last week, 3rd of June at 17.48. Friday, it hits the target. All right, hits the target. All right, hits the target, and we close the position when it hits the target. All right, so what's the secret behind this price action this year? Look at that. All right, the secret behind this price action is this bar here. All right, and the huge volume that we haven't seen for months. All right, so that is a secret. All right, to calling that short. All right, STI, I can see I call the STI bear market call a short at STI on 18 April. All right, today STI is right here, all right, coming down. All right, and this is my STI trade plan for those Singaporeans that is watching. All right, this seminar today. Watch this trend line. All right, last Friday it touches this trend line. All right, is it going to break? I think so. Sooner or later it's going to break. All right, below this trend line, and when it breaks this trend line, we are into, all right, a downtrend market. The macro trend would have been broken. All right, is this going to, when is the bear market going to end? All right, 3 things to keep in mind. Energy prices has to come down. Fed got to start easing. All right, US dollar has to start coming down. Valuation of stocks got to become cheaper. How to be successful? My time is running out, so I'm rushing. All right, so how to be a successful trader? All right, so a lot of people today follow an indicator, follow a guru call, but you have to follow yourself. You got to depend yourself. All right, and how to do that? Understand fundamental analysis. What is a catalyst? What is a long-term technicals? What short-term technicals? How do you observe day-to-day price action? All right, so these are the skills I teach people. Long-term trade, short-term trades, all right, minute-to-minute trades, all right, day-to-day trade, week-to-week trade, all right, years, all right, macro views, all right, how to do all that. Right, we have to understand all this to put together before we become a successful trader. All right, fundamental analysis tells you what to sell, all right, which sector to sell. Technical analysis tell you when to do it, and the psychology part, all right, depends really on you. Price actions, all right, there are many types of price action, but you know, that you can use. But I have a proprietary price action that I share in my courses. All right, and between indicators and price action, I never use any indicators. All right, there are 3 big ones that, you know, a lot of us, you know, want only these 3 things. All right, dream of having money. All right, dream of having time with our loved ones, and the only way to do it, all right, is to dream of a skill that can help you make money so that you can spend time with your loved ones, and that skill today can come from trading. All right, so let me just very quickly, all right, go through price action. All right, so what determines price? Price is determined by the law of demand and supply. All right, when demand and supply is the same, price goes sideways. When demand's overweight supply, price go upward. When demand's, when supply outweighs demand, price goes down. So what about volumes? All right, volumes gives you the energy, all right, to the stock. It gives the energy to the stock. It gives you a conviction, all right, of whether the market is going up. It gives you conviction that it's going to go up even further. So when volume goes up, price goes up. Strong conviction to buy. When volume goes down and price, when volume goes up and price goes down, strong conviction to sell. All right, I just only want to give you. I want to give you one example here. Tesla, right? So Tesla, even before, you know, the stock split, and you cannot recognize the price here anymore, but that was way back in 2019, right? Tesla, right? So Tesla, you saw the Tesla price here. You know, at that time, Tesla was not doing well because a lot of people think that, you know, it could even go bust, right? But, you know, when I saw Tesla, I shorted Tesla actually. So when I saw Tesla, right, in October, you know, see this volume coming up, all right? A spike in volume, I started covering my shorts and see what happened after that, right? After the huge volume here, all right, it went sideways and boom, it went up. All right, so when it went up, look at that. All right, you see the spike in volume here? Spike in volume, that was where I thought Tesla is going to top out, and I called a short on Tesla. And see what happened to Tesla after this? After I called a short on Tesla, Tesla went very near to where it came from, right? So important to be watching price action, volumes, all right? So important to be watching volumes and price and having a trade plan. All right, look at that. All right, same thing. All right, this MetaStock, right? You know, it never had volume. See, the volume came, right? Went to 31 cents. A lot of people thought that was the end of it. From 4 cents to 31 cents, no, it went to 195. All right. So, all right. So let me sum it up all in this price action. All right, price and volume action. Why is it so important? For example, look at this. Look at these two. All right. Look at these two charts. They are the same. All right. They are the same. The only difference here is that in this one, when the market took off, there is no conviction in volume increase. Here, there is a conviction. There is a volume increase. and therefore there is more conviction in trading this stock on long. All right, so that is the high volume. All right, GameStop, boy, you know, if you have stocks spotted this high volume here for GameStop at $39, all right, within a week it went to 490. All right, 490, almost a 10-bagger within a week. If you have spotted this on GameStop. So what is common? All right, a lot of people today apply support resistance, but they don't know how to apply it. They apply the wrong support resistance. Many people use Fibonacci as support resistance, Bollinger Bands as support resistance. All right, a trend channel as support resistance. Moving average as support resistance. All right, a lot of them are not correct. All right, so you have to understand the trend. All right, whether the trend is going up, sideways, or down. All right, so the best way to understand the trend is to have a trade plan. All right, so don't go against the trend. Let the trend be your friend. You must have a trade plan. And let me illustrate to you. All right, this amazing trade plan. All right, watched by 400 people. All right, in a seminar of mine. All right, so in a seminar that I conducted on 2nd February in a huge auditorium attended by 400 people. All right, I showed this Dow Jones trade plan, and I said if the Dow Jones were to break this trend line, all right, it will go, all right, from 25,800 to 24,300, and when it breaks 24,300, it will go into this trend, this channel trend. All right, so did it happen? It happened exactly. All right, so that it broke 2580, it went to 24,300, and it bounces up for 24,300. When it broke into this trend channel, you see that it just went like a clockwork. All right, so trade plans can tell you the future. Trade plan can tell you where future prices is heading. All right, so this is how I will animate. I don't have time to do it. So this. All right, so more about me. I don't only train people of beginners status, which most trainers are qualified to only train beginners. But I train traders, full-time traders, professional traders. All right, in Singapore. All right, and these are some of the testimonials. All right, I wouldn't go through them. And this was a lady that came from all the way from Abu Dhabi to learn price and volume from me. And what she told me really was that she had an option to fly to New York, all right, to learn about price volume. But when she saw my profile, she chose to come here to learn. All right. So if you like what I shared today, and if you want to follow me, all right, in my stock calls, I share stock calls every day. All right, buy actionable trading ideas. All right, fundamental analysis of stocks, of sectors, of commodities. All right, so if you want to join my community, all right, just go to robinhosmarttrade.com or on my blog, click join Robin's trading community, and it will lead you to join my live Telegram stock chat. All right. If you don't want to do that, just for free, join RHO trading community on my Facebook. All right. It is one of the most vibrant trading community in Singapore today. All right, we grew about 500 folds already since we started. All right, in 3 years ago. All right, so this is how to join. Shortcut to join DLC Telegram group. So I just started this chat group on DLC. All right, if you understand what DLC is, it's a derivatives. All right, for people who like short-term trading. I like to take risks. All right, so you can just scan this QR code and it will lead you to join my Telegram chat group. All right, so we have a team right here looking at this chat group, and I'm on it every day. All right, to be updating with you on the stock trading idea. All right, quick profits, not having to wait 1 to 2 years to make 10%. Quick profits, all right? So this is the check. You want to make quick profits, this is the Telegram chat group to learn. All right, so I'm running a course. I mean, because of the COVID, we have not been conducting course for like the last 1 year. So for the first time, it's an opportunity again, all right? And if you're interested to attend my course, all right, please scan on the QR code This course lasts for about 3 weeks, all right? And the reason why it is so long is because, you know, I share my portfolio with you on the first day, and I want to run together with you my portfolio to see how it grows in the 3 weeks, and we need time for the stock to move, right? Whether it's up or down, we need time to stock to move, and I will always end my classes with a live trading, all right? With a live trading, I always end my classes with a live trading, right? So if you want to be contacting me, all right, please, this is my contact number, all right? Robin Ho, Smart Trade. Okay, and here I want to talk about what is my relationship with MetaStock. All right, my relationship with MetaStock is that I promote the MetaStock icon. All right, so the MetaStock icon is, all right, a platform, all right, that gives you fundamental news of every stocks. All right, something very similar to Reuters. All right, the icon. And it gives you beautiful charts, all right? Beautiful charts, gives you information, timely information and charts, all right? You can, and that icon is something that I have been using for the past 20 years, okay? So, so that's my relationship with Bobby and MetaStocks. It's about MetaStock icon. In every class, right, I will subscribe MetaStock icon for every student, all right, every class, all right, and we have done it for the last 5 to 6 years. Okay, so that is the end of my presentation. Bobby, back to you.
Hey, great. Thank you so much, Robin. Yeah, very good presentation. Yeah, very well put together. I've got to give you props for that. Thanks again so much for agreeing to be on today and going through all of that with us. We appreciate it.
Thank you. My pleasure.
All right, I'll go ahead and make myself the presenter again here. Myself on camera. All right. There we go. Okay, well, everyone that's still sticking with us, that stuck through this with us, thanks so much. We're glad we could put on all these presentations for you. Again, I wanted to thank the CMT Association for sponsoring today's event. I've gone ahead and flashed some of their information on the screen. You can find their website down at the bottom there. And then also, I wanted to tap in with you all to let you know about the APAC Summit Traders Pack that we have put together today. We have the Superior Profit you saw with Sagar Nandi and Stuart McPhee's trade launch system. I mean, these are two very popular, very well put together trading systems and add-ons that are available inside of MetaStock. And you can get those along with a 3-month premium subscription to learn MetaStock, as well as our Unleash the Power of MetaStock book and videos for several $100s off. Normally $16.91. It comes in at just $896. If you need to get MetaStock with that, we can also set you up with a trial of MetaStock, as well as our Zenith, the retail version of Reuters, icon platform that Robin was also just discussing. You can get a trial of that too. You can chat in. We have someone available in chat right now for us here at the MetaStock headquarters. It's 1:12 a.m. So we're up a little late, but we're still happy to answer your questions for you. That's metastock.com/sales chat, where you can learn even more. If you're watching today on YouTube, this same link that you're on now, it's going to be available afterwards. So you'll still have all the recordings. If you're watching on GoToWebinar, you should get an email about an hour after today's presentation. So don't worry, you'll still have access to all the recordings there. And if you want to learn more about today's offers and get that trial of MetaStock or sign up for the offer, metastock.com/APAC-deal, APAC-DEAL, or just jump into our sales chat. We should have someone available there for the next little while to answer any of your questions, as long as you jump in here quick. That's metastock.com/sales chat, or you could even call in too if you're in the US at 800-882-3040. If you want just a trial of MetaStock, you don't want the whole package, you can get that too. Just go into the chat room, or we have a webpage set up, metastock.com/APAC-summit 3-for-1. That'll give you 3 months access for the price of one. Again, all the presenters you saw today, they utilize MetaStock in one form or another. MetaStock's been rated the #1 analysis platform for over 29 straight years. So if you haven't tried it out, at least give the trial a shot. If you really want to take advantage of today's offers and get the most for your money, get the APAC Summit deal, either on the website or in the chat room. I think you guys could not go wrong with that. You'd be very happy with it. And again, if you have questions, we're happy to answer them for you. You can ask for sales chat. You can email me personally, bobby.hiller@metastock.com. And then feel free to go back through the recording to get the information from our different presenters. They all shared their contact details at the end of each of their presentations to learn more about them individually. So again, I want to thank you all for sitting through the presentation. I know we have a lot of you in GoToWebinar and some of you in YouTube as well. So it's been great to have you all on for this event. We hope to do another one again sometime in the near future. Just keep an eye on your emails and keep an eye on our website, metastock.com, and you'll know when the next one's coming up. And I think that's everything. So yeah, thanks again, everyone. And I'm going to go ahead and sign off, and we'll maybe just play a short exit for you here. Thanks.